I'm Sumita Karir. Ladies and gentlemen, we'll be your hosts for day 2 of the Global Business Summit as well. In fact, if yesterday examined how global power, trade alignments, and strategic sovereignty are being recalibrated, today focuses on the mechanics of growth, capital, credit, and credibility, infrastructure, and institutional resilience. In fact, India's economic momentum continues to stand out in a world, Amita, that's marked by policy uncertainty and supply chain disruptions.
Absolutely, because that is why cautious capital flows is needed, and yet the real test is not growth in isolation, but also growth that happens sustained through discipline. Investors today that are not simply seeking expansion, but they are also evaluating governance, the frameworks, the fiscal stability, and execution credibility. Now, in this environment, long horizon capital requires clarity, trust, and structural reform, and to set the tone for a day that is going to be centered on disciplined capital and structural competitiveness, please welcome on stage Mr. Y. Rama Rao, who is the Senior Managing Director and CEO of Spark Capital.
Thank you, Mr. Rao, and the stage is all yours.
Good morning, Mr. Rao. The stage is yours.
Good morning. On behalf of Spark Capital, let me first thank the Times Group for giving us the opportunity to participate, to kind of co-own this event in some form, and give us the opportunity to present our perspectives on this stage today. I was asked to speak about, the topic I was given to speak about is patient capital. Capital which is patient, long-term, and in some form vital and necessary for us to build a Viksit Bharat 2047. A few weeks back, I'm sure all of you have read the same news item. A news item caught my attention. It was about the Norwegian sovereign wealth fund becoming over $2 trillion in assets under management. Two things in that news item in the Economic Times which kind of are relevant for the topic of discussion today. They built this over 3 decades of disciplined investing. More important, their compounded annual return rate is 6.1%. It's not the fancy 20, 25, 30% that we hear from venture capital and private equity. It's not the fancy 100% Daskabis Indian mentality, right? It is about 6.1% grown over 30 years. It becomes more than $2 trillion. So patient capital of that variety gives us both an ability to access capital which is available for long periods of time. It also comes with a reasonable rate of return expectation, something which is very important for us to build vital infrastructure, both digital and physical, in this country. This is not the first time. The theme of this year's Global Business Summit is a decade of disruption and a century of change. We are not the first country which is going about doing this. If you look at 1960, South Korea did this. They took universal education for all of their citizens of a uniform standard and variety, as their decade of disruption in the 1960s. The result, they created their century of change. $158 of per capita in 1960 is over $36,000 of per capita today. Singapore did this in the 1970s, and later today we'll be hearing about the Changi Airport and its story, and creating the next $1 trillion opportunity. Singapore did this in the 1970s. They went about investing in infrastructure, primarily ports, and some investment into a world-class airport. The result, $900 of per capita in 1970 is $90,000 today. They created their decade of disruption through physical infrastructure, and it brought about a century of change for the population to become a developed nation today. Japan did this in the post-World War II phase. They created a goal to have universal health care for all their citizens. And it's not always about money, right? They created access to health care for all of their citizens as their motto in that decade. They created a century of change. Today, Japan has among the world's longest living population. Our time is now. We can create the next decade of disruption, and it will in all confidence, we can say this, create our century of change. The Viksit Bharat 2047 being a significant milestone in that process of century of change. But to create this process of century of change, and I think we have heard our Honorable Prime Minister speak last evening very eloquently And I suppose he touched a lot of our hearts significantly. There were shouts of Modi, Modi, which you could hear and reverberate in this room of so-called somewhat cynical and learned colleagues of mine here. So I think he touched a chord as far as the vision for 2047 Viksit Bharat is concerned. And he did articulate a few things that we need to do to get there. Apart from the fact that we have to believe in ourselves, belief, he emphasized on it, and the fact that there should be a disciplined process of doing things. He spoke about three significant pillars in my view, all of which require patient capital. Significant annual recurring investments into infrastructure, both digital and physical. He spoke about upgrading our manufacturing capabilities to global scale and global quality levels so that we benefit from the trade deals which have been signed with 38 countries now and more are going to be signed in the future. The only way we can benefit is by being able to compete with those companies in those countries and other nations by significantly upgrading our manufacturing capabilities. He spoke about that. He spoke about the need to pull people continuously out of poverty. He spoke about the neo-middle class and our need to sustain supporting them for some period of time. All of these three pillars will require patient capital and loads of patient capital. We have 21 years to get to 2047. It is 3 cycles of infrastructure investments that we can make in this 21 years. It's long enough for that. It's long enough for us to transform our education and energy systems. It's long enough for us to actually dream and make a reality of a fab to finished product semiconductor ecosystem in this country. But unfortunately, it's just not long enough. It's also short enough for us to fall for and find excuses not to make it. Patient capital and availability of patient capital and access to patient capital should not be an excuse for delay. It should actually be the call for urgency with discipline. We are here to understand where does this capital come from. And over the course of the day today, several sessions have been arranged. Some will speak about access to such capital. Some will speak about where to invest such capital. Some will speak about how to go about creating an ecosystem to encourage such capital coming in the first place. But where will this capital come from? And if you actually go down looking at the data points, and for those of you who have been fortunate to work during the first phase of reforms in India in the 1990s, you will understand that we were roughly $300 billion of GDP that decade, give or take, $60 billion of annual savings, hardly enough for a nation of our size then, despite the cost adjustments that are there between now and then, for us to be able to use any of our domestic savings to invest into critical infrastructure required for us to grow the next 30, 50, 100 years. We did not just have it. We were heavily dependent on foreign capital flows, both portfolio as well as direct. We were short of trust for the long-term capital from outside to flow in so easily. And I struggled in my starting phase of the career trying to sell infrastructure assets in this country to patient capital sources outside this country, whether it is the infrastructure funds outside of India, the sovereign wealth funds outside of India. We hardly found a buyer those days. Fortunately for us, it is not the case today. We not only have and the need for, and we will continue to get good sources of long-term stable overseas capital from either the sovereign wealth funds or from the infrastructure variety. We have significant domestic capital to harness. And if we channel it properly into creating the right investments to disrupt our next decade, as this theme suggests here today, we will go about creating a Viksit Bharat 2047. We will also go about creating a century of change for ourselves. We have $300 to $400 billion of annual savings from the households in this country. We have over $1.2 trillion of assets in EPFO, insurance, and mutual fund AUMs in this country today. To begin with, we have $1.6 trillion of domestic household savings in one form or the other available for us to start making this disruption today. What does it require is the next question. But we have enough sources of capital even domestically, even while attracting the right kind of foreign capital that we need in the first place. The sessions today, I think, will also speak about not only having the capital, but also kind of building redundancies in some form, building supply chains which are dual in nature, building buffers for situations which will come in the future, given the geopolitical formations today, given the experience of the pandemic of 2020, we are likely to have another crisis, if not now, sometime in the near future. We have to prepare and invest some of this patient capital into what we are calling anti-fragility infrastructure to be creating for ourselves. A panel of speakers with Arvinder Singh Sani from the CMD of Indian Oil, Mr. Manish Tiwari, CMD of Nestle, and Mr. Vinay Dubey, the CEO of Akasa Air, they will delve deeper into the topic about creating and moving away from excessive focus on efficiency into creating what we call anti-fragility. For too long, and this is my favorite topic anywhere I go, but for too long, we are an ROE and ROI obsessed nation. We look for the highest ROE next quarter. We are valued on the basis of the highest ROE that we generate next quarter. In the process, while it is important to generate ROE and important to generate profits, and I am not the supporter of long-term loss-making, scale-building business per se, while it's important to focus on ROE and it's a healthy factor to consider, it's important that there are certain times in nation building, one has to move just from an excessive focus on ROE to actually building capital, building assets, infrastructure, and buffer zones for ourselves to deal with moments of crisis. When we do such investments, that moment it looks like inefficient use of capital. But believe me, when a crisis hits us, and it will hit us at some point in time in the future, that will be the difference between survival and bankruptcy, as have several nations seen during the 2020 pandemic. Patient capital understands that need. Patient capital deals with that inefficiency as a necessity, unlike impatient capital, which will run away at the first instance of inefficiency being perceived, not even seen in the first place. In our goal for a Viksit Bharat 2047, the first and the most important milestone, another topic of discussion today, is our goal to achieve a $10 trillion economy by 2035, a decade of disruption to create $10 trillion economy. We have heard some speakers, including the Honorable Chief Minister of Maharashtra, speak about their individual state aspirations and ambitions. The sum total of it will be more than $10 trillion if you count and call all the chief ministers today and count the number. That's a good part. But we have the ambition and the belief that we will go to $10 trillion by 2035. But for us to really go there, we need to focus on creating a lot more gross fixed assets in this country. It is estimated, and these are estimates, they could vary, anywhere between $300 to $400 billion of incremental annual investments are required for us to put in the form of gross fixed capital formation if we have to go to achieve the goal of $10 trillion. Not an easy one, but patient capital is the answer. It has the resources, and we can get there with that capital coming into us in the first place. But what does patient capital need? We are talking about this. It needs a few things. It needs trust in governance, right? Something which we have been lacking for a long time in this country. Much better now, but there's still lots of progress to be made on that count. It needs stable and predictable regulatory regime. It cannot have retrospective taxes, retrospective changes in regulatory, and we have seen how much we suffer when we go into that mode of thinking. We need stable and regulatory regime, stable and predictable regulatory regime. I was encouraged by the conversation of our SEBI chairman yesterday, where he spoke about optimal regulation and not excessive regulation. I think it's a step in the right direction, and we should take heart from the fact that we have regulators out there, policymakers out there, governing people out there who are thinking the right way to bring in that framework of trust, the framework of regulatory, of practical, pragmatic regulatory regime, and most important, the framework that a contract in this country has to be enforceable. A lot of patient capital suffers in lots of countries in the world, and one of the reasons why India is often chosen as as the preferred destination for such capital should we meet the promise that we have at this point in time, is the fact that we have an English legal system and we are by and large an enforceable contract country. We need to kind of build further on it. We have made a lot of progress in the last decade, but we need to build further on that if we have to get to the vision of attracting a large amount of this patient capital necessary for us to get to 2047 and beyond. I will conclude my talk. I don't know how much time I took, but I'll conclude my talk by saying that it's obvious that we need capital, right? There are two kinds of capital which are available out in this world, pretty much like anything in the page 3 variety today, right? There is glamorous capital. There is capital which is spectacular. There is capital which is short-term in nature, which kind of chases momentum. There is capital which grabs headlines. Will that capital take us anywhere as far as building this Viksit Bharat and the century of change today? No. The answer is no. We need boring, disciplined, stable, long-term compounding seeking source of capital for us to get to that stage. And it is out there available to us today. It is out there available to us. It is out there for us to kind of grab. We have the opportunity. We have the markets. We have the ecosystem today. We have an encouraging regulatory and governing framework that's also backing us today. So once we have this access to patient capital, each one of us in this room, we may be an entrepreneur, we may be an investor, a policymaker, we may be just a kind of an influencer of some sort in this economy today. We have to ask ourselves a few questions. Are we building for the next quarter or the next few quarters? Are we building for the next few decades? Right? It's something which I always tell in my own company. We should, one factor which kills institutional building is a constraint of time, right? We have to give it time. So are we building for next few quarters? Are we building for next few decades? Are we optimizing for efficiency or are we building for anti-fragility? Are we chasing momentum? Are we chasing long-term compounding? Or are we seeking long-term compounding? Are we planting trees or are we harvesting fruits today? We need to ask these questions to ourselves because they become an important part of how we go about disrupting the next decade and eventually going to kind of create our century of change, which is long overdue to us and right in front of us, available to us. I'll kind of talk about one, for the sake of being an Indian, I will talk about a Sanskrit verse, which I borrowed from the Arthashastra, but I think it's kind of predates that. It goes on to say this: Alpam api uparjitam, short-term gains of spectacular nature. Bahu bhavati chirakala sanchayat. They get trumped any day by long-term patient accumulation of gains. This was said in the Arthashastra. It is predating Arthashastra as far as the verse is concerned. It is in our culture. It is in our system. It is in our DNA. It is in our ethos to seek long-term benefits for ourselves. Let us script a tomorrow built on such patient capital. Let us build both a Viksit Bharat 2047 and let us build for a century of change by disrupting the next decade. Thank you.
Thank you very much, Mr. Rama Rao, for setting the context for day 2. And in fact, ladies and gentlemen, let's move on to our next session. And it is now my distinct honor to introduce a leader who stands at the intersection of policy, technology, and national transformation. He's a technocrat with a distinguished background in engineering and public service. Shri Ashwini Vaishnav has been instrumental in shaping India's digital and infrastructural narrative.
So even as India accelerates towards becoming Viksit by 2047, his leadership has now become a pivotal role when it comes to strengthening railways, advancing electronics manufacturing, driving telecom reforms, and also fast-tracking India's semiconductor and digital ambitions. So this is our honor in welcoming Ashwini Vaishnav, the Minister of Railways, Information and Broadcasting, Electronics and Information Technology, Government of India, right here on stage, as today we will be discussing the next chapter of India's growth story, and it is only fitting that we hear directly from the leader himself, who has been actively architecting that very future. So ladies and gentlemen, please put your hands together in welcoming the Union Minister, Ashwani Vaishnav. Ladies and gentlemen, the Minister, Ashwani Vaishnav, will be here any moment. Thank you very much for your cooperation. We're just waiting for the arrival for the Minister. He's going to be on stage shortly. Ladies and gentlemen, please put your hands together in welcoming the Minister himself, Mr. Ashwani Vaishnav, Minister of Railways, Information and Broadcasting, Electronics and Information Technology, Government of India. He's joining us on stage on day 2 of the Global Business Summit. Good morning to you, Mr. Vaishnav.
Thank you, sir. We now request you to kindly address the gathering, sir.
And before that, I'm requesting Mr. Rohit Gopakumar to also come up on stage to felicitate the Minister. Big round of applause, ladies and gentlemen.
Thank you very much, sir. Kindly address the gathering now.
There are 2 sessions which are very difficult. One is the lunch session, post-lunch, and second is the first session in the morning. You guys had some coffee? All righty. Friends, I want to cover 4 items today. First is about the AI Summit. Second is about semiconductors. Third is about electronics manufacturing. And fourth is about railways. I'll begin with the AI Summit. As you all know, after UK, South Korea, France, India is now holding the AI Summit, hosting the AI Summit. And this is going to be the biggest AI summit ever held in the world. Already, all the industry leaders and heads of states, more than 20 heads of states and heads of government have already confirmed. More than 100 plus global leaders are visiting us, joining this summit. And the summit's focus will be on impact of AI. As we all know, AI is basically bringing the 5th industrial revolution. And this industrial revolution is going to be much bigger than the past industrial revolutions, past changes in technology, past major transformations which have happened in the past. And the pace of transformation is also going to be very fast. So we must get prepared for this change. We must prepare our industries for this change. We must prepare our students for this. We must prepare our society for this. And that is why we are working on all the 5 layers of the AI stack. Our focus, our strength has conventionally been in providing the IT services. Now, we have to now convert this strength into providing AI-based services. Our IT industry, over the last 1.5 to 2 years, has meticulously worked on this changing business model. They have created, they have invested in their reskilling their workforce and creating new tools by which they can now provide AI services. So the way it will work, as I understand from the IT industry, is basically the organizations who are looking for AI-based services, they need people who understand AI, who understand the organization. So that gap between understanding technology and understanding the organization is going to be filled by our IT industry. So I just wanted to share with you how the industry is preparing itself for this huge new wave of innovation, that huge new transformative wave which is coming. The second layer is the model layer, and in the AI Summit we'll be launching our bouquet of sovereign models. If you would have followed some of these models which have been tested and the test results, on so many parameters, the models are better than OpenAI and Gemini Pro and DeepSeek on so many different parameters. And that's giving us the confidence that we can develop models on very frugal, innovative setups, resources with very few resources. And those models, because of the innovation which has been there in those models, they can actually beat, they can be world-beating models. Mostly during the AI summit, our Honorable Prime Minister Shri Narendra Modi ji will be launching some of those models. The chip layer is where we have made very good progress, and as we know, there is no AI without semiconductors. Our teams today have done phenomenally well on semiconductor journey. We have had very good results. Our design efforts have today brought us to a totally new level, and many of the startups and many teams which are working on creating new solutions will bear fruits in the coming couple of years. We should be in a very different situation from what we are today. On the infra layer, already we have $90 billion worth investment committed, and mostly in the coming months, this investment level is likely to go above $200 billion. From everything that we know from the industry, this investment will practically go beyond $200 billion. I invite all of you to join the AI Summit, be a part of this journey, contribute to it, and we believe that there will be three major takeaways from this AI Summit. First is, how do we make sure that our people, our society, our students, our industries, they get the benefit of this new technology. AI diffusion will bring the return on investment which is needed for long-term growth of the industry, for bringing the productivity. Those productivity gains, those ROI gains will come from diffusion. And that's why, as we all know, AI models are open source models are today available in hundreds of thousands. How do we use the models? How do we create those solutions which are real life solutions which bring a change in the society, bring a change in the economy, bring a change in the industry? So impact is going to be the big focus, and as we all know, impact is the theme of the summit. Second is about sovereign models, and how do we make sure that our data is protected? How do we make sure that our biggest wealth is clearly protected? And how do we make sure that our sovereign models are getting the right platform which they deserve? Third is about AI governance. We all know the harms which may come from, especially from the generative part of AI. Industrial part is very different from the generative part. So how do we make sure that AI governance is taken forward more in a consensual manner rather than a mandating kind of manner? So we are going to have dialogue with most of the countries who are all facing common challenges. So this will be majorly the part of AI Summit. I'll switch over to semiconductors. In the last few years, our progress in semiconductors is noteworthy. I recall going to Davos way back in 22. When we used to talk about semiconductors, people used to really put those question marks at us. Things changed by 24, things really changed. Our mission was announced on 1st Jan 22, semiconductor mission. 23 was more of learning, trying to get onto the learning curve. And 24 is when things started changing. And I want to share with you, in this year's Davos, when we did the semiconductor roundtable with industry leaders, absolutely there was no question mark. People said that whatever Mr. Minister, India wants to do, we are there to support India's journey. And each and every participant of the semiconductor industry now wants to be part of the India's semiconductor journey. That's a huge change in the way the world perceives us, And that's that big change which our Prime Minister Shri Narendra Modi ji has brought in our economy, in our country, in our industry. On the global stage, today India is respected as a country which has huge potential, which is contributing to the world and not just following but creating those new benchmarks. Today, practically every large company of the world in the semiconductor industry, whether it is NVIDIA or AMD, whether it is Qualcomm or Broadcom, whether it is ARM or Marvell, they are all designing their most modern, most advanced chips here in India. And there are so many startups coming up. Last week I was with Qualcomm. I was surprised at the change which has happened, and they are also surprised because just a few years ago, when I requested Cristiano, the CEO of Qualcomm, that why don't you start looking at designing complete systems here in India? He took that challenge, he challenged the Indian team, and today those teams are designing complete solutions, not just doing the back office work, but designing complete solutions. And friends, the talent pipeline which we have created in 315 universities, it's such a major talent pipeline that I can tell you with very high level of certainty that in the coming years, at least majority of the semiconductor design in the entire world is going to be done out of India. We have trained more than, by now we have trained more than about 70,000 engineers in designing chips. I asked this question in the roundtable in Davos, how many universities are there where students can use the latest semiconductor design EDA tools from Cadence, Synopsys, Siemens, and they are able to design the chips, actually manufacture the chips, and validate whether the product has come out as they had envisaged. People could not count more than 20 universities in the entire world. We have 315 universities, way from faraway places, from Assam, from Jharkhand, from Odisha, from Kerala, from Tamil Nadu, from Jammu, where students are actually designing chips, and those chips are now manufactured in SCL Mohali and tested and validated. This is going to give a phenomenal advantage to our youth, to our students, to our young people. And that's going to create that huge wave of innovation which will keep on happening for the next multi-decade journey in semiconductors which we have taken up. Our next version of Semicon mission, Semicon 2.0, will have huge focus on design. We will be focusing on at least 50 deep techs to come from India. Whether they are large companies, whether they are startups, whether they are people who are working in the semiconductor industry globally, but they want to come back to India and create that new, the next Qualcomm, the next Broadcom, the next NVIDIA. I can say with confidence today that the next NVIDIA, the next Qualcomm will come out of India. That base is now set for us. Now that learning curve is already behind us, that entire ecosystem has got built, and that ecosystem will propel the next wave of growth in semiconductors. We are also now very clear on our path from 28 nanometers to 2 nanometers. And it's going to be a very measured journey. We are not doing anything in haste. We want to take every step after careful thought, after looking at all the pluses and minuses, after considering the preparedness of the entire industry. So we began with 28 nanometers because we wanted to make sure that the entire ecosystem first comes to India, And it's a very complex ecosystem. More than 250 gases and chemicals. Very complex. Even 1 meter change in the pipeline which supplies the chemical or the gas to the final machine which does the fabrication. That can change the entire specs. Nanometer is so difficult to fathom. I was giving this example to somebody. If you look at the nail, imagine writing your own name on this nail. You can do that with a little bit of practice, right? Imagine writing the entire Ramayana on this nail, right? Imagine writing the entire Ramayana, the entire Mahabharata, the entire Srimad Bhagavad Gita, and all the Purans on this small little nail. That is what a nanometer level fabrication is. So it's really, really complex. It's very, very, very complex. It's at atomic level. It's that the entire plasma, it's basically plasma which does the etching. It's very, very complex. To get that complexity to work in India, we must take every step with a lot of careful thought. So that initial grunt work, that initial hard work, that initial work which is required to get the industry in India is now done. Very happy to share with you within next few weeks. Out of the 10 plants that we have approved, 10 semiconductor manufacturing units that we have approved as a part of the Semiconductor 1.0 mission, first one is going to start the commercial production in the coming few days. Our Honorable Prime Minister will be flagging off that first commercially produced semiconductor chip from the first plant very soon. Stay tuned for that. And that's going to be a big jump because since 1962, our country has been dreaming of this industry, and I don't want to get into a blame game, but recently the leader of opposition was questioning India's data strategy. I would like to ask him a few questions. Does he know that our entire IT industry is built on free flow of data? The entire world's data is brought to India to do the processing here and do the operations of the companies, global banks, global insurance giants, global retail, global logistics. That entire data comes to India, gets processed here, and does he know that that is the foundation of our IT industry? He is wanting to shut down every movement of data. Does he even understand that that will be kind of so detrimental for our IT industry, which is based on getting the data from the entire world? Does he understand that the data center scheme, which has been announced in our budget, is for getting the world's data to India and making sure that our industry provides those AI-based services to the entire world? Does he understand that the semiconductor program is the foundation of data-based economy and sovereign models is the foundation of having those AI-based services? I seriously think that he must change his view and must understand this in deep detail before making those comments which are not based on facts. Friends, I'll also come to the third point, which is electronics manufacturing. I'm sure you are aware that in the last 10 years, our electronics manufacturing has grown 6 times. It's growing at double-digit CAGR, and our electronics exports have grown 8 times in the last decade. 8 times growth in the last decade. The ecosystem of electronics manufacturing is now well established in our country. And this is where also the opposition, and especially the leader of opposition, was questioning whether we are a producer economy or we are only a service economy. I would like to emphasize that we are both a producer's economy and a services economy. Our electronics manufacturing is today, it has reached a level where now we are manufacturing not only the final product, but also the modules and the sub-modules, and now we have started manufacturing the components. Now there are a series of components where more than 50% of our demand is going to be met out of India within the coming 2 years. And there are so many components where we will become the global suppliers to the world, including our neighbors. That's the journey which has happened. I will request the opposition to take a look at that, understand that, see that journey which has happened, which could never happen in the first 6 decades of our independence. Among the exported goods, now electronics is among the top 3 exported goods already. And very soon, electronics will be among the top 2 exported goods out of India. This was unthinkable 10 years ago. This was unthinkable in the previous governments. But that change has actually happened, and the world is taking note of it. When the EU FTA was getting negotiated, one of the key things that the European Union wants from India is electronics products. They want electronics boards, they want electronics components, they want electronics modules, they want electronics exports to be done out of India for their defense industry, for their industrial activities, for their consumer electronics, for their practically every aspect of their life. They want the electronics industry to be exported out of India, electronics goods to be exported out of India. Because we are a trusted country, the world trusts us, and that trust has happened through a very meticulous foreign policy which our Prime Minister has implemented over the last 11 and a half, 12 years. In these years, India has now emerged as a trusted partner which believes in IP, which respects IP, which believes in solving problems through negotiations, solving problems through discussions, solving problems through multilateral institutions, and that is what is most important. Even in the case of India-US agreement, a large part of semiconductor manufacturing, where the world is today worried about the concentration which is happening, India will become the trusted partner for the entire world in the semiconductor and electronics value chain. Friends, with that, I'll come to railways, and very happy to share with you that our journey in designing and constructing the first bullet train project from Mumbai to Ahmedabad has made very good progress, and next year, 2027 itself, we'll be launching the first section, we'll be inaugurating the first section on this entire corridor between Mumbai and Ahmedabad. The most important part of this journey is that again in this very complex industry, our people, our engineers, our designers, they have really lived up to the challenge. Our industry has today come up that learning curve, and today we are practically fully self-sufficient in the entire high-speed train technology. It's a matter of pride for us because getting those complex technologies, understanding them, preparing our people to design those systems. Imagine the complexity of a vehicle which runs at 350 kilometers per hour. We know when we drive a car, when we move beyond 70, 80 and move into 100 kilometers per hour, everything changes, right? When it is beyond 120 kmph, the vibrations, the entire atmospheric pressure, the control of the wheel, everything changes. In case of railways, when a vehicle is driving, when a train is running at 350 kilometers per hour, the interaction between the wheel and the rail, the interaction between the overhead wire and the pantograph which collects the electricity, and the interaction between the train and the atmosphere. These are very, very, very complex. But that is now what our engineers have been able to understand, and they are now able to design those complex systems. So that's the journey which I've taken. Apart from constructing the first corridor, the journey in learning, moving up that learning curve, that has been very, very significant journey. And that's why our Honorable Prime Minister, Shri Narendra Modi ji, announced the 7 new bullet train corridors, which will connect large part of our country and totally transform the entire transportation industry. Imagine going from Chennai to Bengaluru in 73 minutes only. 73 minutes. Practically, the two cities will become one city, right? It will be like you start do your morning office work, go to Bengaluru, do your work and come back, have dinner with your family. Imagine between Mumbai and Ahmedabad, it will be just 1 hour and 57 minutes. 1 hour and 57 minutes, less than 2 hours, right? That 2 hours has become quite popular in the social media these days. So kids take so much fun at whatever we do. It's good. Our youth is very creative. Imagine between Bengaluru and Hyderabad, just 2 hours. Same is the case between Mumbai to Varanasi and Varanasi to Patna and all the way to Siliguri. In Bengal, Siliguri is northern part of Bengal. And of course, these networks will further develop as we grow towards Viksit Bharat. Our goal for Viksit Bharat is about 7,000 kilometers of these high-speed trains. And as the projects have been announced, these projects comprise about 4,000 kilometers of high-speed trains. We have already moved immediately after the budget announcement was done. We have already moved, and we are going to standardize the entire system. We'll have common specifications for all the corridors. We will have Indian designs, Indian specs, where anybody in the world can come and participate in these. And we'll have large role for the industry to contribute to this journey, because this is where our industry has the potential to become exporters. And we have become exporters in our own right. Today, some of the most complex part of the train, which is the propulsion system, is today exported to Switzerland, to Germany, to Poland, to Italy, and to US. Those benchmarks are the new benchmarks that we are setting. So this is the journey, friends. In railways, we are also taking up about 52 reforms in the 52 weeks of 2026. We'll be announcing the first 2 reforms today afternoon, and we have already worked on 7 more reforms, and other reforms are now in the pipeline. These will bring a big change in every common citizen who travels in railways. And as we have always maintained, for us, the low-income families, the middle-income families, they are the most important customers in railways, and everything we do is for safety. We have been able to reduce incidents, safety accidents by about 90%. But that is not where we want to stay. We want to further reduce it, and our challenge given to the team, all of us are working on it, is to make sure that we achieve the global benchmarks in the 2 to 3 years time frame on so many different parameters, so many different factors. Like last year, we became the second largest cargo carrying railway in the entire world, surpassing North America. So today, India and China are the biggest cargo carrying railways in the entire world at 1.6 billion tons cargo carried last year and also this year. So those are the benchmarks, friends. That is the journey. Thank you so much for inviting me to GBS. This is one of the most coveted sessions, and this is one of those summits which really set the benchmark for policy dialogue, for industry dialogue, for the way forward for the entire country. Thank you so much, ET. Thank you so much, GBS. Thank you. Thank you.
Thank you so much, Mr. Vaishnava, for joining us here on stage on day 2 of the Global Business Summit 2026. Ladies and gentlemen, we are about to move on and talk about the next topic. So let's stay on schedule and talk about the price of trust and how credit shapes the global economy. Well, in global finance, trust is not abstract, it is institutionalized. Credit ratings that shape borrowing costs, influence sovereign credibility, and guide institutional capital across borders. Now, at a time when global markets are now recalibrating, risk and government is now navigating when it comes to the fiscal pressures, and also credit assessment that becomes a strategic lever. Now, especially when we talk about for emerging economies, the stability of macro fundamentals and the continuity of reform and the predictability of policy influence works on how market price long-term commitments. Rating agencies today evaluate not only economic growth, but also institutional resilience, governance strength, and also policy durability. So let's take this moment and invite our next guest on stage. Welcome Mr. Jan Lepluck, who is the president of the S&P Global Ratings and the chair of the CRISIL board. Thank you very much, Mr. Palek, for taking out your time and speaking to us on this very stage of Global Business Summit. Ladies and gentlemen, please give him a loud round of applause.
Thank you very much. Thank you very much. Good morning, everyone. What a tough act to follow, speaking after the minister, but I'll do my best. So, ladies and gentlemen, esteemed guests, thank you for having me at this year's Global Business Summit. So my name is Jan Palek. I'm the president of S&P Global Ratings and the chair of the board of CRISIL. It's both a privilege and an honor to address this distinguished audience of industry leaders, policymakers, and global innovators today. I would also like to extend my sincere appreciation to the Times Group for hosting this incredibly important forum. The topic I will discuss with you, as indicated, is the price of trust, how credit shapes the global economy. Perhaps a good starting point is to focus on the word trust. How do we value trust? And for that, I'd like to take everyone through a brief history session. Last November, S&P Global unveiled its new medium-term strategy grounded in our new mission, advancing essential intelligence. Essential intelligence is rooted in S&P Global's 160-year history. Through our leading benchmarks, data, and workflow tools, we've built a legacy of trust through quality, transparency, and innovation. In 1860, our founder, Henry Varnum Poor, wrote the book to help investors understand the emerging railroad industry in the United States. In 1915, Poor's Publishing issued its first credit rating and later merged with Standard Statistics, establishing Standard & Poor's. At the time, the goal of credit ratings was to provide investors with independent and reliable assessments of credit risk, a basic concept that still stands today. And by standardizing the rating system, investors were given a common baseline for evaluating credit risk and making informed investment decisions. Fast forward to the 1930s, the US entered the Great Depression, and the need for credit rating agencies to gauge the creditworthiness of issuers increased significantly. And the expansion of credit rating services to multiple sectors during this time helped build transparency during a crucial period of economic upheaval. Simply put, investors found trust in the transparency provided by credit ratings. As global markets evolved over the last century, so did the need for trusted and relevant insights. More recently, and a bit closer to home, in 1987, the Credit Rating Information Services of India Limited, or CRISIL, was established with the objective of analyzing, rating, and evaluating securities and instruments such as loans and debt in the local India market. What began as a business alliance in 1996 with S&P flourished into a strategic partnership now 2 decades in the making. Through S&P Global's storied history, we believe transparency, analytical rigor, and integrity have been and will continue to be the foundation of global capital markets and commerce, foundational to building trust. Trust is at the core of credit markets. As a rating agency, S&P performs its role in the financial markets by rating promises to pay back debt in time and in full. When we consider the price of trust and how credit shapes the global economy, I will share 3 driving thoughts with you all. First, the breakdown of trust in the previous global order. Second, credit markets as a safeguard against uneconomical policy actions. And third, the role of trust in an emerging asset class like private credit. Starting with the breakdown of trust in the previous global order, and in the global rules that sustained it, all of those will carry longer-term credit implications with risks and opportunities alike, even if markets can sometimes brush off near-term event risk. When we refer to trust and geopolitics, we're not talking about blind trust. We mean trust in the geopolitical status quo, trust in policy predictability, and in the tacit and explicit rules that govern trade, capital, and cross-border cooperation. It is easy to become complacent about the credit impact of geopolitical uncertainty. After all, markets have often appeared to look through recent conflicts with no immediate or durable economic implications. But circumstances may differ next time, and in any case, the shift toward a more multipolar world creates inevitable longer-term credit consequences. When trust weakens, policymakers face sharper trade-offs between strategic autonomy, financial soundness, and economic development. If trust is scarce, strategic autonomy often dominates, sometimes at an economic or credit cost, even when such policies are justified. Corporate investors or governments usually respond in 2 broad ways, either by reducing gross exposures, diversifying away from or exiting certain relationships, each with real cost, or reducing net exposures, hedging, insuring, or demanding more collateral, often increasing the cost of capital and friction in the system. This is not inherently negative. As a credit analyst at heart, I learned early the risks of concentration and the benefits of diversification. Crucially, trust is not merely declining, it is evolving. Declining trust in some relationships increases the incentive to build trust elsewhere. And we can already see that dynamic in global trade. Trade continues to prosper, but it constantly evolves. And it was evolving well before the events of the past 12 months. Over time, we may see global capital markets and capital flows move in a similar direction, though likely more gradually. When trust is fragile, diversification becomes vital. Diversity in thought, diversity in society, and diversification in capital exposure. According to the latest Edelman Trust Barometer, people are narrowing their world to smaller, familiar circles that reflect their views, and this hinders economic and societal progress. In prior years, people put their trust in media, governments, or businesses. Now, this trust has shifted to insularity, lacking the critical element of fact-checking and a broadened perspective. Staying with capital markets, the promising rise in local capital markets adds an important layer of resilience and diversification. For India, for example, a useful anchor data point here is its domestic bond market showing gradual deepening through foreign index inclusions and growing private credit. Foreign ownership of Indian government bonds stood at about 0.9% in 2023, rising modestly post-JP Morgan index inclusion in June 2024. That wider index inclusion could increase foreign participation in India's government bond market to 10% from 0.9% in 2024, and that this would enable funds available for corporate debt issuers in India to almost triple relative to nominal GDP by 2030. The global center of gravity continues to shift. This evolving distribution of trust aligns with a broader structural shift in the global economy. The center of gravity of global GDP continues to move east. According to the IMF, India and China's combined share of global GDP is expected to almost double from shy of 12% in 2010 to 22% in 2030. Emerging markets are expected to represent roughly 2/3 of global growth this year, and this trend has been supported by improved domestic policy predictability and transparency in several markets at a time when global uncertainties are rising. These shifts carry two notable long-term credit implications. First, supply chains, tariffs, and resilience. Growth costs now, insurance value later. The reorganization of supply chains and the increased use of tariffs and industrial policy are likely weighing on economic growth and profitability, particularly for established players. In the near term, some of those pressures may be masked by tailwinds such as the AI and data center investment boom. But this shakeup can also create opportunities for emerging players. And while building resilience can have an upfront cost, it can also be understood as a form of long-term insurance paid for calmer periods, valued in more volatile ones. Second, regulatory cooperation may become more fractious. This may not present as an immediate problem. Today, we still benefit from a long period of regulatory tightening and strengthened frameworks. But when market stress hits, timely, decisive, and coordinated policy responses can be essential. And that uncertainty extends to new global regulatory challenges, including emerging areas such as decentralized finance and private markets. So moving on now to closer to home, India. To close, I really want to bring this conversation back to where we are. Last August, S&P Global upgraded India's sovereign credit rating to BBB from BBB-. That upgrade didn't happen by chance. It reflected a sustained commitment to fiscal discipline, targeted public investment, and credible policy frameworks that have enhanced confidence in the country's long-term growth trajectory. India's post-pandemic expansion has been among the most consistent of any major economy, and our expectations remain strong for the medium term, driven by structural reforms, entrepreneurial energy, and a forward-looking approach to debt and development. In our latest report from S&P Global's An India Research chapter, produced in collaboration with CRISIL, we explored how India is navigating a new global reality. What we found was a story of resilience, but also one of ambition, which is at the core of Viksit Bharat 2047. Of a nation shaping the future by building trust at home and on the global stage. And that brings us full circle, because in the end, if trust is the currency of credit, then transparency is the institution that preserves its value. When trust rises, capital flows. And when it breaks down, the cost of capital becomes a tax on progress. In that sense, the price of trust truly is the price of growth, and few economies understand that better than India. Thank you very much for your attention.
Thank you very much, Mr. Palek, for your insightful address. Let's move on, ladies and gentlemen, and talk about building the next $1 trillion, infrastructure, capital, and trust. Well, infrastructure is where economic ambition becomes physical reality, as industrial corridors, ports, airports, and logistics networks determine productivity, trade efficiency, and also investor confidence. In an era of supply chain diversification and strategic manufacturing expansion, infrastructure quality has now become a differentiator among economies. But infrastructure requires patient capital, and patient capital demands institutional trust. Investors examine regulatory clarity, dispute resolution, and also the governance frameworks that as closely as projected returns. Now, the next phase of growth will depend on not only how much it is built, but how predictably and efficiency is executed. So let's talk about and welcome our next guest joining us here on the panel, Mr. Lim Ming-yan, who is the chairman, Changi Airport Group, joining us here on stage. Please give him a bigger round of applause. And we also have Mr. Prasoon Mukherjee, Chairman, SPF India Business Committee, Vice Chairman, International Action Committee, SPF, and Vice Chairman, Southeast Asia Group of SPF. And this session will be moderated by Mr. Vinayak Chatterjee, who is the co-founder and managing trustee of the InfraVision Foundation. A big round of applause, ladies and gentlemen. Let's get this session started.
Good morning, everybody. We are ready to launch off into our discussion. We have, I can see the screen in front of us. We have 14 minutes and right now 48 seconds to cover some important ground on infrastructure. So I'm going to do a deep dive straight away. And I'm going to go to Mr. Lim first to ask you a reasonably provocative macro question, which is, that in the growth and development of Singapore as a hugely applauded nation state, which is widely recognized all over the world for its developmental success and agenda, both ports and airports were critical to the development of Singapore's economy and its positioning on the global stage. You are representing Changi Airport. For India, let me ask you a frank question. Is airports and civil aviation infrastructure critical to our growth agenda, or is it good to have? Because some people could argue that if we had to allocate resources, then a higher proportion of resources in an Indian subcontinental stature with the kind of population and economy you have should really go to railways, waterways, highways, water infrastructure, irrigation. So the question for you is, civil aviation infrastructure for India, critical for our developmental agenda or good to have?
Thank you very much. First of all, happy to be here. For Singapore, the airport and obviously the port has been crucial for the development of Singapore. Over the course of the last 60 years since our independence, Singapore economy was able to grow because we were able to be connected to the rest of the world, and through a period where global trade was growing, and that allows us to in fact attract many foreign direct investments into Singapore, set up the business there, and then be connected to the rest of the world. So that's what happened to Singapore. But if you look at India, it's a big country. So over the course of the last 20 years, I think you can see civil aviation infrastructure has improved significantly. And look, if we take a view over the next 10, 20 years, I believe this will continue to improve. So if you look at it, civil aviation is important for India
Soon I'm going to come to you after about 2-3 minutes till I'm going to make Mr. Lim slightly uncomfortable with another unsettling question. Okay with you, Mr. Lim? Okay. So the question is, India is on a very major journey of infrastructure build-up, and that too, the expectation that not just private capital will come into India's infrastructure development, but foreign direct investment will come in. Now let's take a look at Jewar Airport in Greater Noida. 100% FDI from Switzerland with Zurich Airport, right? Mr. Prem Vatsa from Canada investing in Bangalore Airport, right? 5 new airport clusters, as reported in the Economic Times, is coming up for bidding in the next few weeks or months, I don't know. Amritsar, Kanpur, Kangra, 1 cluster, Varanasi, Kushinagar, another cluster, Raipur, Aurangabad, 1 cluster, Bhubaneswar, Hubli, another cluster, and Trichy, Tirupati, another cluster. So another 11 airports are coming up for bidding in 5 clusters. Foreign direct investment is allowed 100%. Singapore Airlines already has a presence here with Tatas in the airlines business. The question I have for you, sir, can we expect Changi Airport to get more active in the prospects of investing in Indian airports wherever there are PPP bids coming up? Because you have a small investment, 26% if I am right, or maybe it's a little higher now, in Durgapur Airport. That was done some time back. But among the largest swath of airports that are coming up, could we see more enthusiastic participation by Changi Airport? What's your thinking on that?
Thank you very much. Very interesting question. In fact, I just want to let everybody know that Durgapur is doing very well. So we are able to add value to an airport despite the fact that it is a relatively small airport. Having said that, I would just like to come back to this question about the Indian aviation market. I think this is definitely a growth market. From CAG's perspective, we monitor very closely, and we are watching, in fact, how we could perhaps be involved with some of these airport projects. There are many ways in which you can get involved. I think if you talk about direct investments into an airport, it is like very much a real estate investment or a major infrastructure investments where the local context becomes very important. So CAG is good at managing airport. So we are happy to continue to work with investment or investors who are familiar with the local context, where if we can bring the technical and the competency and expertise in the management of airport and to marry up with someone who is familiar with the local context. Because no matter how, many of my colleagues are not born and bred in India, so they may not be familiar enough with the environment here. So to do a major investment like this, it will require time for us to understand the market. So, but to work with partners who are able to take care of some aspect of the business, and we bring in some value that we are good at, I think that will be perhaps a win-win
So that's a very happy answer to this question, that many people who are eyeing the prospects of becoming airport developers, at least for the new round of bids that are coming up, or maybe existing airports divestments, it's a very happy message you're giving that Changi Airport is open to discussions on different kinds of potential partnerships, but you would wish to rely heavily on a lot of heavy lifting being done by the Indian partner. So that's a happy message, and over time, I think we will use Prasun to keep reminding you of this as we go forward. Now, you are now spared, sir. Now I'm going to ask some uncomfortable questions to Prasun. Prasun, I have now known you as an inveterate networker in the South Asia region, connecting the dots from various countries to conceptualize projects and to channelize foreign investments into different parts of the country. Please accept my compliments for that. Now that you've accepted the compliments, the tough question is, with the friendship between, you're wearing your Singapore hat now, or you're wearing your Indonesia hat, or your... Okay, you're wearing your Singapore hat, okay. So wearing your Singapore hat now, the question for you is, with the very well-documented friendship over decades between India and Singapore, there are many, many foreign investors who have invested in India's infrastructure, right? whether it's in ports, Dubai port, DP World, for example, is fairly big in Indian ports. As I just mentioned, in airports, you've got Zurich, you've got Prem Vatsa, you've got others in airports. You've got people who have invested in India's power, whether it is a Hong Kong-based Hutchison Group with CLP, China Light and Power, or including Semba Wang, who have power assets in India, etc. Ascendas, that has built IT parks in South India, etc. These and some technical partnerships with Jurong Township and Sarbana Jurong in the old days with Chandrababu Naidu structuring Amravati Capital City project, etc., etc. These are little interventions where we have seen some smattering of Singaporean investments. But the big question for you is, and our time seems to be over, so the big question for you is, and I'll leave this one question for you. With India and Singapore friendship, has Singapore lived up to India's expectation in the nature, quantum and diversity of investments in India's infrastructure that India would expect across ports, airports, railways, metro, water? Or has Singapore underplayed its hand? That's the only one and single question I have for you.
You know, I have to be very honest about this, and first of all, I must tell that if you really listened on the 12th of February budget of the Singapore Prime Minister, Singapore Prime Minister spent good amount of 15 minutes, I think somewhere between 10 to 15 minutes of time on internationalization. His main focus of the budget was internationalization and AI. So, I mean, as Singapore, we have really no option but to internationalize. Singapore has played some role. I mean, Singtel is, has invested heavily in Airtel. The investment, currently just on the Singtel's portion is around $30 billion valuation, as such. Very recently, the Singapore Airlines has taken a big stake in Air India. So I think that what I'm trying to say is that Singapore has done some, but Singapore has to do a lot. One thing also for the information of the Singaporeans, I'll just take 30 seconds to say this, that there was a time in early 90s and in 2000 when the destination of India was Singapore. Today, India's destination and the world's destination is India. So Singapore also will have to compete. Singapore will also have to compete into getting into those lucrative spaces like Singtel or PSA Port and all this. So with the effort has to be also from the Singapore end.
Thank you, Prasoona. Time's up, but your answer is very clear that with the way India is shaping up, it is natural for Singapore to play a far more proactive and energetic role. With this and the buzzer going twice, I have to only thank you, gentlemen, for your time and for the participation, and thank you to the audience. Thank you very much.
Thank you.
A big round of applause, ladies and gentlemen. Thank you very much, gentlemen, for joining us here on stage. All right, without wasting any second, let's put our hands together once again in welcoming, a very grand welcome to Shri Jyotiraditya Scindia, Honorable Minister of Communication, Government of India. He's going to be joining us here on stage on Global Business Summit Day 2, 2026. Please welcome the Honorable Minister on stage. Ladies and gentlemen, a big round of applause for Honorable Minister Jyotiraditya Scindia. And as Sajid also joins us on stage, let me also quickly invite N. Subramanian, who is the Executive Director and Group Chief Executive Officer of the Times Group, to felicitate the Minister on stage. Mr. N. Subramanian, ladies and gentlemen, a big round of applause. The Minister being felicitated by the Executive Director and Group Chief Executive Officer of the Times Group. Thank you very much, Mr. Subramanian. All right, Sajid, over to you. Sajid Mangat, who is the Senior Executive Editor, ET Now and ET Now Swadesh. Over to you.
Thank you, Mr. Scindia, for joining us today.
Thank you for having me.
we have a target to meet $5 trillion economy, and communication and posts will be central to that. How do you plan to revitalize this entire two key sectors so that we reach that 5 trillion economy?
So, first of all, Sujit, thank you for having me. It's wonderful to be here at GBS again, and it's always wonderful to have an interaction and a chat. I just want to take you back in time, and 100 years ago, we had the Industrial Revolution in India, in the world, that was powered by the development of the railroad system and the highway system in the world. Now, these were visible infrastructure transformations. What India has gone through now in the last decade under the leadership of Prime Minister Narendra Modi is the laying of the digital highway in our country. Hindi में कहावत है कि ये एक अदृश्य अधोसंरचना है. It's an invisible infrastructure that has been laid, but it really is the pipe that is going to power, and it already is, the content in terms of being able to power business, commerce, and the economy of this country. 10 years ago, 11 years ago, you had close to about 60 million broadband subscribers in India. Today, we have 1 billion broadband subscribers in India. 12 years ago, your cost of 1 GB of data would be about 287 rupees. Today, it's 9 rupees. You can't count that in dollars. You just about can count that in cents. It's about 10 cents a GB. We are today 5% of the global cost of data. The average global cost of data is about $2.49, and we are at about 11 cents. So there's been a complete transformation, and that transformation has powered commerce, it has powered the economy, and I'll tell you why. Because where earlier commerce economy was driven by tier 1 cities and beyond that maybe to tier 2 cities, it is now not only being powered by tier 3 cities, but it is being powered by every single citizen across the length and breadth of our country. When my farmer in Tripura or my coffee grower in Nagaland can get onto this invisible highway and connect and be able to transact his production directly to international markets. When you look at gateways like UPI, you look at gateways like ONDC, and by the way, UPI today is doing close to about 20 billion transactions a month, 250 billion transactions a year, $4.3 trillion. 50% of the world's digital transactions today take place in India. So to answer your question, India today is already not only powering herself from an economic and a commerce point of view, but it would be in the right way of things to say that probably India is powering global transactions and global commerce. 50% of digital transactions in India. The G20 ministers meeting, the digital meet on ministers, very clearly identified that when we look at SDGs, digital capability is a pillar of that. And today, across the 180, 90 countries in the world, India is leading that digital pillar in terms of digital connectivity. So we are already there, and the target for us is to be able to increase this capability. And which is why you're seeing probably the world's largest public expenditure on grassroots connectivity happening in India. So our amended BharatNet project, which is going to take our OFC fiber and broadband connectivity to every single gram panchayat in this country, in every village on demand, 2.56 lakh gram panchayats, 3.8 lakh villages, $16.9 billion project, 1,39,000 crores, completely funded by Government of India. It's the largest project of its type in the world. And what that's going to do is going to take that capability of commerce, economic livelihood, contribution to nation building, right to the doorstep of every single of 140 crore Indians across the length and breadth of our country.
You know, we were we saw the fastest rollout of 5G in India. The way it has rolled out, now India is on 5G. From a consumer point of view, from the retail point of view, how do you see the role of 5G with respect to monetization and adoption by enterprises?
Okay, so Sujit, we're already there. And I say this very often, and I say this with a little bit of 20/20 hindsight, because this is a department that I started my public service career with. In 2007, this was the department that I first became a Minister of State in. And the transformation that this has seen over time, we were behind the world on 4G. We were playing catch up. We walked with the world on 5G, but I firmly believe that we will lead the world on 6G. Now, the substance and the meat behind that statement is we played catch up on 4G. Our state-owned telco, BSNL, had two paths before itself. One was to emulate the other telcos and buy equipment from the big four, the big five who produce telecom equipment, whether it's Nokia or Ericsson or Huawei or ZTE or Samsung. The other was the more arduous, difficult, challenging path of actually vertically integrating backwards and producing our own RAN and our own core software and building out our own BTSs. By the way, this has never been done in the world. For the last 40, 50 years, 5 companies from 4 countries, which I named, have ruled the telecom equipment manufacturing sector globally. And the Prime Minister made the decision for BSNL that we're not going to take the easy route. We're going to take the difficult route. Again, surprisingly, we got a consortium together, a very unlikely consortium. CDOT, which is a government-owned company to produce the core software. Tejas, which is a private sector startup to produce the RAN, the radio access network. And TCS as the system integrator. And in 19 months, we built out our own domestic 4G stack. And September of last year, and we kept it quiet, under the radar. And September last year, the Prime Minister inaugurated 1 lakh towers across the length and breadth of India, built on our own domestic 4G stack, built by TCS, CDOT, and Tejas. So what does that mean? That means that a sector that was the arena of a select few, 5 companies from 4 countries, India today has entered that club. India has become the 5th country to produce its own 4G stack. On 5G, we entered a little late, but India had the fastest rollout on 5G in the world. We rolled out close to about 500,000 towers in 22 months, and my hat's off to our domestic telcos. 4.5 lakh crore worth of capex. And today, 99.9% of the districts in India have 5G coverage. There's only one district left in India that doesn't have it because of approachability issues, but 99.9%. And today, when we have 120 crore mobile subscribers, guess how many are already on 5G? 40 crore. That's 35% of the market is already on 5G. And by 2030, this number of 40 crores is going to go to 100 crores, right? Third, we come to 6G. India has never been at the round table. Telecom is about setting standards. Telecom is about being on the cusp of an inflection point of bringing in new technology. And India has never been represented at that table. first time in India's history that on setting of 6G standards with 3GPP, ITU, India is sitting on the table setting the standards for 6G. Bharat 6G Alliance, which has been set up in 2023 by the Prime Minister, started with 18 members, entrepreneurs, tech companies, telcos, government, across the board. Today has grown to 100 stakeholders. And B6GA's mandate is that we need to secure 10% of the patents when 6G standards are set. And we are well on our way. I take a review every quarter, by the way, on B6GA in terms of the 7 verticals that we have and how we are proceeding on that in terms of setting those standards with ITU and 3GPP. And believe you me, we will be the ones that will set the standard which will convert what is pedantically known in India as the digital divide into a digital dividend.
How do you do the monetization? Because you spoke about the fact that domestic companies have invested more than 4.5 lakh crores on capex for 5G. The biggest question is about sustainability from a revenue point of view, from the profitability point of view. If you want to go to 6G, you will need another similar amount of investments going forward. So monetization is something which is now being sought after. How do you see monetization for companies?
What do you mean by monetization of companies? Because all our 4 telcos, I mean, all out of our 4 telcos, our 3 telcos, our 2 telcos are already in the public market. 1 telco is planning to go to the public market. And with regard to BSNL, I'm going to keep that up my sleeve. But I guarantee you, we are on the path of a new paradigm of growth. BSNL, by the way, last June to September quarter and October to December quarter posted its first ever quarterly profits after 18 years. 18 years. We had a revenue run rate in terms of our top line. We grew to from about 18,000, 19,000 crores to about 22,000 crores. My target this year is to grow that in double-digit figures by the end of March. Our EBITDA, which we normally call our operating profit, was 395 crores in 24-25. It grew to 5,100 crores in 23-24. In 24-25, it grew to 5,100 crores. This year, I'm hoping to grow that again by double digits. So if you're looking at, when you talk about monetization, that's really in terms of disinvestment and sale of assets. That's not my purview with regard to the 3 telcos, which are pretty much private sector. As far as BSNL is concerned, we have very healthy cash flows now, as I just mentioned, 5,400 crores last year. We are also on the path of monetization. But for me, what's extremely important is to be able to roll out in an expansive way this 4G network. And on the basis of that, once it is fine-tuned, then very quickly switch it to 5G. And for that, I have a capex plan in place, which will be funded partly through internal accruals, partly through disinvestment, and hopefully with some assistance from Government of India.
You've been heading 2 transformation projects. One is BSNL, where we are seeing the results coming in. The other is India Post. It used to be a cost center, but it has huge potential with respect to logistics, because even if you check with some of the logistics companies, they calculate their reach based on the number of PIN codes that India Post has. What is the kind of transformation project that you're doing for India Post?
So let me talk a little bit about my, if I may call it my first love, because I believe that India Post, in terms of her reach, is unparalleled to any distribution system, public or private, not in India, but in the world. We have 165,000 POPs, points of presences. The capability of this distribution network to be from a fulfillment agency for all e-commerce applications, for all goods and services that need to be sold. In a sentence, I had coined this way back in 2007, but I wanted India Post, my Dakkhana, to be the window to the world for the common man. There should be no service or no good or no commodity that cannot be sold virtually or physically from my Dakkhana. And that's the project that we are working on right now. There's a major BPR exercise going on, a business process reengineering exercise, where actually we're shifting this ship and making it a logistics fulfillment provider. We have back-end agreements with Amazon and ShipRocket and all of these corporates. We're going into sectors that we have never gone before, such as I've spoken with AMFI in Mumbai, Association of Mutual Funds of India. We're now becoming their distributor for mutual funds. We're doing their eKYC. We're doing already stuff on Aadhaar card. We're doing stuff on POP-SK in terms of being a passport service provider. Many of you don't know, but India Post has provided 2.8 crore passports to the citizens of our country across the length and breadth of our country. So there is tremendous potential, there is tremendous amount of passion, and there's a tremendous nation-first emotion in each one of my डाकियास. अगर आप गांव में जाओगे तो मैं ग्रामीण क्षेत्र से आता हूँ. अगर आप गांव में जाते हो तो गांव में दो ही लोग विश्वसनीय होते हैं. एक होता है गांव का चौकीदार, जिसे हम कोटवार कहते हैं, और दूसरा होता है गांव का डाकिया, क्योंकि गांव का डाकिया जानता है आपकी नानी, आपकी दादी कहाँ रहती है, आपके बच्चे कहाँ पढ़ रहे हैं, आपकी शादी कहाँ हुई है. डाकिया आपके घर की हर कुंडली को जानता है. And that is the emotional punji of our department, which we have to turn into a resource to be able to fulfill every single citizen's aspirations. And so we've, for the first time in the history of our country, we've divided India Post into 6 verticals: citizen-centric services, parcels, mails, international business, PLI, post office savings banks. We are setting targets on a circle basis. Each Chief Postmaster General is setting his or her own targets as opposed to HQ setting it. We hold a monthly review against those targets. As I said, we have a huge BPR exercise going. For the first time, we sent our officers to La Poste in France, USPS, Royal Mail, Japan Post, DHL, to study their first mile, middle mile, last mile capabilities. On the basis of that, we've put together a full logistics network that we are transforming with RFID codes, automatic conveyors, completely doubling and increasing our productivity. And I can guarantee you this, that within the next 3 to 4 years, under the leadership of Prime Minister Narendra Modi, you'll see a new India Post with a new branding, a new service capability, both on mails and on parcels, and across the board on all verticals.
Mr. Scindia, we are running out of time. Thank you very much for joining us today.
Always a pleasure. Thank you very much.
Thank you very much, Minister Scindia, for your vision for the telecom sector, developing citizen-centric services, and of course giving us a blueprint of what manufacturing in the sector is going to look like. That's going to be a key component and has been a key component, Amita. But it's now time for us to move on to another interesting session, and this one is related to pivoting from efficiency to anti-fragility.
Well, this is going to be the topic of the next discussion that we're going to hold on stage, ladies and gentlemen. Request you once again to please be seated. Is 2026 the year that we pivot from efficiency to anti-fragility? Now, the past few years that have challenged traditional efficiency and driven corporate models, energy volatility and supply chain disruptions and geopolitical shocks have revealed vulnerabilities. Now, in the meantime, let's quickly introduce our guests and call them on stage. Mr. A.S. Sahni, who is the chairman, Indian Oil Corporation Limited, joining us on stage. Please, ladies and gentlemen, give him a big round of applause. Along with him, Mr. Vinay Dubey, who is the founder and chief executive officer of Akasa Air. And this session will be moderated again by Sajid Mangat. Sajid, over to you.
Thank you, Mr. Sani, Mr. Dubey, for joining us on GBS. Mr. Sani, to begin with, we are in a very volatile geopolitical climate, and you are managing India's energy sourcing. How do you bring in, how is anti-fragility helping you in, ensuring that we are energy secure?
Yeah, good morning and thank you for having us here. Anti-fragility, a very interesting term nowadays. What I understand of it is, given a disturbance, given a churning, and how the system reacts to it, and whether after the churning or during the churning, whether the system comes out much more robust, much more flexible, much more reliable, then it is anti-fragile. The kind of geopolitical turbulences that energy sector is going through in the last year or so, starting from Ukraine, or maybe 2 to 3 years, I'll say, starting from Ukraine, then Iran, then Israel, then everything else, India, Pakistan, like Operation Sindoor, and all these things have gone through. And this sector has witnessed these disturbances, and my job or our job as people who are responsible for maintaining the energy lines of a country as wide, as big as India, is that how I build optionality into the systems. It is not about a synonym between efficiency and anti-fragility. Anti-fragility doesn't mean that I build in a lot of inefficiency into the system and I build in a lot of inventories in the system and I feel that, okay, I have taken care of the fragility of the system. No, it is not there. I have to bring in optionality into system. I have to bring in flexibility in the system. How I change or how I increase the span of sources of energy that I am doing, which I was doing 5 years back, or what I am doing today. So 5 years back, I was sourcing energy in the terms of crude oil when we are in that sector from 27 geographies. Today, I am bringing it from 41 geographies. So that brings in that anti-fragility in the system. LPG is a very big, like clean fuel, clean cooking fuel. That is a big import item that we are doing. We are importing around 50 to 60% of the total LPG that is needed there. So how I diversify the sources of LPG that is coming to India, simply the LNG, that is gas, how I bring out different sources so that it gives me a flexibility in terms of hedging my sources of energy. So that is how I see anti-fragility in this system. And plus, how I secure my supply chains, how I secure my transportation, how I secure the transportation movement of petroleum products and crude from the sources to Indian shores. That all is what I understand from anti-fragility, and we have been working assiduously on these lines for building and ensuring that the energy is affordable and available at all times to all people.
Vinay, in the airline business, how are you bringing it to ensure that there is no disruptions? You are able to manage any distress which is coming in because of a competitor, having issues, or the kind of crisis that's come in for air travelers.
Yeah, so very much along the lines that Mr. Sani. I apologize, but very much along the lines that Mr. Sani talked about. I think building redundancies is very core to airlines. I mean, as you know, there are usually 3+ levels of redundancies built into aircraft, and that's for safety purposes. And so building redundancies is core and germane to everything that we do, whether it's redundancy of capital, so to be well capitalized, whether it's redundancy of people. As an example, our ability to respond to new pilot FTTL rules allowed us to create and deliver a network free of cancellations in this winter. So I think building in redundancies across multiple levels is what we do, and it hinges on extremely strong planning and a planning discipline, sensitivity analysis in our planning. But I think to be able to deliver this through ups and downs requires culture building. And I think that's one of the durable, sustainable advantages that Akasa has and that companies have. So a culture of safety, a culture of service. These are often talked about, but are supported by training, hiring, SOPs. But I think a little-known culture, and particularly in aviation, allowing us to react to the ups and downs that the world throws at us, is this employee-centric culture. Because without an employee-centric culture, you'll get a robotic response. With an employee-centric culture, you'll get a spirited response. And if you want to be able to provide not just a robotic response to the various circumstances, but really a spirited response, a response that reeks of ownership, then you have to build that through employee-centric culture, and that's something we take great pride in.
Mrs. Sahni, we are looking at an age where alternate fuels are in demand, biofuels, hydrogen. Maybe the future would be that in that sense. At Indian Oil, how are you looking at alternate fuels? How are you building into your entire product mix as we move forward from here?
I'll take it at a much broader context. The broader context is that today India is buying around $135 billion worth of crude oil every year. So that is a drain that Indian economy is experiencing every year, $135 billion. It sounds very big. So this wave of transition that is coming up in terms of compressed biogas, in terms of ethanol, in terms of biofuels, in terms of green hydrogen, these are all godsend opportunities for an Indian economy. Because if I can transition from this crude which is getting imported today to homegrown energies, these homegrown energies in terms of, as I mentioned, biofuels, starting from our own homegrown bio, if it is renewable power, because solar is there in India, immense capabilities are there and immense possibilities are there. If I can convert those possibilities into maybe green hydrogen or alternate fuels, that is going to be a game changer for the Indian economy. So when we talk of now coming to Indian Oil is fully committed to this transition that is happening. Today, we have taken lead in blending 20% of ethanol into our petrol that is being sold as MS or petrol that is being sold. So 20% of that is import substitution that is happening all across India, and program is working very fine. In terms of sustainable aviation fuel, that again is a very big area, because today aviation fuel market is growing at around 8 to 9% in India, and this is going to grow even further. So if I can convert a portion of that aviation fuel coming from sustainable sources, from green sources, from used cooking oil, coming from ethanol, that is going to be a very important factor going forward. So today I'm very happy to tell you that Indian Oil is the only company in India which has got the certification to produce and dispense sustainable aviation fuel in India. So we are the only company today, and we are with partners like Akasa, with partners like Air India, with other partners, we are in talks for giving them starting from June of this year, as early as next 5 to 6 months. So that is one part of it. Then coming to green hydrogen, again I'll say very proudly, I say that Indian Oil is building up India's largest green hydrogen plant at Panipat, that is 10,000 tons per annum plant. That is coming up at Panipat, very near to this place. So these are our initiatives that we have taken, plus solar is there, other wind is there. Those things we are pushing to the hilt. And that is what we feel, that if I have to give affordable energy, and this is what, if I have to build in that anti-fragility into the system, this is going to be a very big factor moving forward. If I can convert this green hydrogen movement into mobility, if I can convert this sustainable aviation fuel, wherein I am using used cooking oil and converting it into aviation fuel, or using ethanol and converting it into sustainable aviation fuel, these are going to be game changers for the Indian economy itself. And that is what is going to create that resilience in the economy, that confidence, that Atmanirbharta into the system.
And Vinay, for you, fleet is a big, not a problem, but actually a big issue, because you have peaks and you have non-peak seasons. How do you manage that peak fleet within your entire operations? And you have a big order of aircraft which is also coming in over the next few years. So how does that planning, how do you plan that entire fleet structure, the air routes? How do you bring in, to ensure that there's no redundancies in the system? How do you bring that?
Yeah, so you're absolutely right. We're flying 34 aircraft today, and we've got 192 more to come for a total order book of 226. So while we are relatively small in Indian terms, we feel by the turn of the century we'll be in one of the top 30 airlines in the world. And by the way, that's not just a reflection of Akasa and our ability to execute, but that's a reflection of India and the nascent stage that Indian aviation is, and the kind of economic growth that India is going to see. I think the management of fleet is extremely critical. And in my view, one of the things that drives Akasa is an ability to manage it with discipline. We're not opportunistic by saying, let us pad the high months with a dry lease or a wet leased aircraft. We're not opportunistic in saying, let's send off or park these aircraft during downtimes. So I think planning, fiscal discipline are key ways in which Akasa has managed to be, so far, the world's fastest growing airline in the 125-year history of global aviation. And that's how I think we'll continue to execute and continue to conduct ourselves over the course of the next several years. And I think that's really the only way to do it. It's with this discipline that allows you to be both nimble, but also keeps you on the path of the chosen strategy.
Mr. Sani, final question to you and to Mr. Dubey as well. Does decentralization help in ensuring we have you can take decisions with respect to energy sourcing at your end, and from your end, how do you decentralize your operation so that the decisions can be made at maybe a level lower or 2 levels lower to ensure better efficiency of fleet operations?
So I'm happy to take that first. So the decentralization of decision, we can talk about this for hours. We have little time. So I will say that the most critical element for Akasa to decentralize is the call on safety. We have to empower the gate agent to call a plane back if there's something that they do not see proper. We have to empower a pilot to turn an aircraft around or not to take off. We have to empower the mechanic not to certify a departure. So for Akasa, I can talk about decentralization and centralization in many ways, but the most critical form of decentralization that is not just as simple as it sounds. There's a cultural sort of a shift that needs to be made, but the most critical element is to decentralize that safety decision and do it in a manner that protects the decision maker and empowers that decision maker and makes them feel free to make that safety call in a very decentralized manner.
Yeah, in my case, somewhat similar, but as you said, the energy sourcing has to be a centralized function, but at the same time, disbursement of that energy, disbursement of that small packets of energy to the general public, that has to be decentralized. Because when we are talking of 30 million people visiting our retail outlets every day, when we are saying 3 million households being served every day by our people going and delivering that LPG cylinders to 3 million households. When I'm saying that every 2 minutes I am fueling an aircraft anywhere in the country. So it has to be a decentralized function, and that is what brings agility to the system. That is what brings safety to the system. That is what ensures that every time each and every person is empowered enough to take his or her decisions so as to meet the customer requirement as and when required. So this is working at two levels. The energy sourcing part has to be at centralized level. The supply chains have to be managed at the central levels. But at the same time, the service part, where it is customer facing, because we are arguably the most customer facing corporate company in the country. Basically, we have the maximum number of people that we face every day. So they have to be centralized. The decision making has to be given to them. The agility has to be given to them, and that is what is making us kick.
True, you both are customer-facing companies. Thank you very much for joining us today.
Thank you.
Thank you very much, gentlemen, for joining us here on stage. It's been an insightful conversation. Well, let's move on to our next guest, and he's a special one. We would like to invite and welcome on stage Mr. Amit Kumar Agarwal, who is the IAS Commissioner and Secretary, Government of Haryana. Ladies and gentlemen, please put your hands together in welcoming Mr. Amit Kumar Agarwal, who is the IAS Commissioner and Secretary, Government of Haryana. He's been joining us on stage on Global Business Summit Day 2. Please join your hands together in welcoming Mr. Agarwal on stage.
Good morning, esteemed audience. It gives me immense pleasure and privilege to welcome you all on behalf of Haryana, led by our Honorable Chief Minister, Shri Naib Singh Saini ji, who would be shortly sharing his plans and views on how Haryana will play a very critical role in translating national vision of the Honorable Prime Minister of Viksit Bharat into real outcomes. Before CM takes the stage, I have a very small presentation on why and how Haryana presents some very exciting opportunities for doing business for both global and local investors. It works. Haryana has a very strong economic foundation, and our economic strength is reflected in 4 clear fundamentals. First is scale. With a GSDP of $79 billion in real terms, the state has consistently grown above the national average. Second is productivity. Despite accounting for only 1.3% of the India's geographical area and 2.1% of its population, Haryana contributes around 7.1% of total India's GST collections, which is a testament to Haryana's strong economic base and the potential of value addition that we have. Third is performance. Our average real growth GDP per capita in the past decade has consistently exceeded the national average. Fourth is prosperity. Our per capita income is over 70% higher than the national average, underscoring strong consumption capacity. This is supported by a strong 65% working population, which depicts that we have a very strong demographic foundation for long-term stable growth. These fundamentals collectively position Haryana as a structurally strong and high-performance strong economy. Another very important factor why Haryana should be chosen is its strategic location. Haryana's greatest structural advantage is its location. Haryana sits at the heart of India's largest consumption zone, the NCR. You would be surprised to know that Haryana's all districts are connected either by a national highway or 4-lane expressways. And none of the Haryana's district is more than 3 to 4 hours from the NCR capital region, from Gurugram or Delhi. There are 2 dedicated freight corridors, the Delhi-Mumbai Expressway, expanding RRTS connectivity, and the Haryana Orbital Rail Corridor, which integrates the state seamlessly with ports, markets, and industrial corridors. The entire state is just 300 kilometers with either 3 major international airports, either the New Delhi International Airport, Zevar International Airport, or the Chandigarh International Airport. So for investors, this translates into speed to market, logistics efficiency, and supply chain reliability. Next, the Haryana offers industrial infrastructure that is both deep and diversified, with the development of 64 industrial estates spread across 42,000 acres, including multiple sectoral parks and MSME clusters. We have ensured balanced statewide industrialization. Our sectoral ecosystems are well established: automotive and EV clusters in the NCR belt, medical devices in Ambala, textiles in Panipat, leather and footwear in Bahadurgarh, food parks across key districts, and a next generation electronic cluster at IMT Sohna. Haryana today operates under a strong, stable, and incentive-driven policy regime that provides clarity, continuity, and competitiveness to investors. Building on the success of our current policy regime, the state government is soon launching its flagship Make in Haryana industrial policy and progressive MSME and export policy with the aim of Make in Haryana for the world. These policies include competitive incentives, including net SGST reimbursement, capital subsidies, employment-linked incentives, R&D and export support, and greening incentives, all designed to reduce risk, improve project viability, and encourage long-term sustainable industrial growth in Haryana. The state government is also actively formulating a dedicated set of policies for emerging sectors, including semiconductors, electronic system design and manufacturing, pharmaceutical and medical devices, IT and AI, GCCs, data centers, AVGC, as we nowadays call the orange economy, toys and sports manufacturing, and e-waste recycling and agribusiness and food processing. So Haryana offers tailor-made policy for investors across all major sectors. Incentives are important, but incentives alone do not build investor confidence. Haryana's reform agenda is built on speed, transparency, and trust, and guided by 2 clear objectives: improving ease and speed of doing business and reducing the cost of doing business. We have re-engineered governance so that investors do not navigate departments. Our objective is simple: no investor should spend time on paperwork, they should spend time on production, expansion, and innovation. Through a fully digital single roof platform covering over 140 services across 30 departments, approvals are time-bound, transparent, and accountable. Guided by the vision of the Honorable Chief Minister, we have implemented several landmark reforms over the last few years. We have reduced 1,100 plus compliances, amended the building code to allow unlimited FAR, introduced instant automatic CLU approvals for industrial zone, and enabled third-party or self-certification for consent to operate for industries from the pollution side. These structural measures reduce delays, lower compliance burdens, and ensure industries can focus on operations rather than procedures. Further, the Haryana government has passed the Jan Vishwas Act to decriminalize 164 major criminal provisions across 42 state acts, which is the most such comprehensive exercise, most such diverse exercise in the country, so that in the event on any default of while doing business, there is no criminal liability. In the end, I would like to conclude by highlighting that speed creates competitiveness, trust creates confidence. Together they define Haryana's next phase of growth. I welcome you to invest in Haryana. We promise growth, speed, and future readiness. Thank you.
Thank you very much, Mr. Anbalan, for sharing your thoughts on the infrastructure development in the state, giving a push to policy reforms and, of course, easing compliances for the industry. On that note, ladies and gentlemen, it's now time for me to invite on stage a very, very special guest, somebody who's committed to reform and the development agenda. I'm going to invite on stage the Honorable Chief Minister of Haryana, Mr. Nayab Singh Saini. May I please request you, sir, to kindly walk up on stage? Ladies and gentlemen, the Honorable Chief Minister is, of course, going to lay his vision of what a Viksit Haryana is going to look like in the next couple of years. The focus is going to be on the policy push that the government is giving to facilitate businesses in the state. Thank you very much, sir, for taking the time out and being here with us. And may I now invite on stage Mr. N. Subramaniam. He is the Executive Director and Group Chief Executive Officer at the Times Group. Sir, may I please request you to kindly come up on stage and felicitate the Honorable Minister. Thank you very much, Mr. Subramaniam. And it's now a time for me to invite Hina Gambhir. She is the news editor at Times Now, to kindly come up on stage and take this conversation forward. Over to you, Hina.
Thank you, Sumita. Good afternoon, everybody. Thank you, sir, for joining us today. सबसे पहले मैं आपसे ये बात करना चाहूँगी, क्योंकि प्रधानमंत्री ने कल यहीं से हमें बताया भारत का जो एक लक्ष्य है विकसित बनने का 2047 तक, 2047 तक, उसमें उन्होंने ये भी एक चीज़ की बात की कि अभी तक जितने भी रिफॉर्म्स की अनाउंसमेंट की है सरकार ने, वो रिफॉर्म्स आउट ऑफ कन्विक्शन हुए हैं, कंपल्शन नहीं हुए. हमारी ज़रूरत के हिसाब से हमने रिफॉर्म्स की बात नहीं की, रिफॉर्म्स की अनाउंसमेंट नहीं की, क्योंकि हमें अपनी इकोनॉमी को विकसित बनाना है 2047 तक, इसलिए हम रिफॉर्म एक्सप्रेस पर चल रहे हैं. इसी के चलते स्टेट्स का जो रोल है वो बहुत ही ज़्यादा अहम होने वाला है. तो मैं आपसे सबसे पहले पूछना चाहूँगी कि हरियाणा जो है इस पूरे सपने को पूरे करने के लिए कहाँ स्टैंड करता है, हरियाणा का क्या रोल रहने वाला है भारत को विकसित बनाने के लिए 2047 तक.
थैंक यू हिना जी. सबसे पहले मैं द टाइम्स ऑफ ग्रुप, जिन्होंने ग्लोबल बिजनेस समिट का ये आयोजन किया है, हर वर्ष करते हैं, और पूरे देश भर से, पूरे अदर कंट्री से जो सीईओस इसमें पार्टिसिपेट करते हैं, मैं आपका द टाइम्स ऑफ ग्रुप का भी बहुत बहुत धन्यवाद करता हूँ, शुभकामनाएं देता हूँ. इसका एक बड़ा लाभ देश को मिलता है. और जो आपने बात किया है हिना जी कि आदरणीय प्रधानमंत्री जी का जो संकल्प है कि विकसित भारत, हरियाणा की भूमिका क्या रहेगी. हम लगातार आदरणीय प्रधानमंत्री जी के उस संकल्प को, जिसका जिक्र कल भी आदरणीय प्रधानमंत्री जी ने इसी मंच से किया है, कल शाम, हरियाणा की महत्वपूर्ण भूमिका उसमें रहने वाली है. हम देख रहे हैं कि हमने पिछला जो हमारा बजट था हरियाणा के अंदर, बजट में मैंने अनाउंसमेंट किया था कि हरियाणा के अंदर हम 10 न्यू IMTs बनाएंगे, इंडस्ट्रियल मॉडल टाउनशिप हम खड़े करेंगे, और उसके ऊपर गति से हम काम कर रहे हैं. मुझे ये खुशी भी है कि हमने लगभग 6 IMTs के ऊपर गति से काम कर रहे हैं, और 10 के 10 अलग अलग क्षेत्र के अंदर हरियाणा में हम उनको खड़ा कर लेंगे. और जो प्रधानमंत्री जी का संकल्प है कि विकसित भारत में हमारा हरियाणा की महत्वपूर्ण भूमिका, आज अगर आप देखते हैं GST कलेक्शन के में भी हरियाणा आज नंबर 1 स्थान के ऊपर है. और चाहे इंफ्रास्ट्रक्चर की अगर हम बात करें, इंफ्रास्ट्रक्चर के अंदर भी हरियाणा
एक कोने से दूसरे कोने में अगर हमें जाना है तो मात्र 3.5-4 घंटे के अंदर व्यक्ति एक कोने से दूसरे कोने में हरियाणा के पहुंच जाता है। और कनेक्टिविटी को ध्यान में रखते हुए कि अगर दिल्ली एयरपोर्ट है, चंडीगढ़ एयरपोर्ट है, उन तक हमने हिसार के अंदर एक नया एयरपोर्ट बना है, वहाँ पर भी हम एक IMTs बना रहे हैं। इस जो विकसित भारत है, विकसित भारत में हरियाणा में, क्योंकि जब इन्वेस्टर्स उसमें गति से आ रहे हैं तो हमारी हरियाणा की भूमिका, एक महत्वपूर्ण भूमिका उसमें रहने वाली है। और आदरणीय प्रधानमंत्री जी के उस संकल्प को विकसित भारत, विकसित हरियाणा के साथ हम उसको गति से आगे बढ़ा रहे हैं।
ओके, अगर हम हरियाणा की बात करें और हरियाणा की हिस्ट्री की थोड़ी सी बात करें तो एक टाइम पे पुअर कज़न ऑफ पंजाब कहा जाता था, लेकिन आज हम देख रहे हैं कि फॉर्च्यून 500 कंपनीज, तमाम फॉर्च्यून 500 कंपनीज के हेडक्वार्टर्स यहाँ गुरुग्राम में हैं। आप कह रहे हैं कि ज़्यादा और इन्वेस्टर्स जो हैं जिनसे आपकी बात चल रही है वो भी काफ़ी इंटरेस्ट दिखा रहे हैं हरियाणा में। और GST कलेक्शन की बात आपने की तो 7.1% GST का कंट्रीब्यूशन रहता है नेशनल लेवल पे। ज़मीन आसमान का फ़र्क है अगर हम पंजाब और हरियाणा की ग्रोथ की अगर बात करें, इकोनॉमिक पैरामीटर्स की बात करें, किस तरह से ये संभव हो पाया है? हरियाणा ने क्या चीज़ ऐसी डिफरेंटली की कि आज अर्थव्यवस्था हरियाणा की जो है काफ़ी अच्छी दिख रही है?
हिना जी देखिए, क्योंकि पंजाब पूरा एक ही था। 1 नवंबर 1966 को हम पंजाब से 2 भाई थे, एक अलग हुआ है। और बिल्कुल आपने सही बात कही कि उस समय इस प्रकार की चर्चाएं थी कि ये कैसे अपना गुजारा करेगा, ये इसके पास इनकम के साधन नहीं हैं। परंतु मुझे खुशी है 1 नवंबर 1966 से जब पंजाब से अलग हरियाणा अपने अस्तित्व में आया, आज हरियाणा ने अलग अलग क्षेत्र में अपनी एक बड़ी पहचान बनाई है। एक क्षेत्र में नहीं बनाई, कई क्षेत्रों में पहचान बनाई है। आज अगर हम देखते हैं सुरक्षा की बात, आज देश के बॉर्डर्स के ऊपर हमारा हरियाणा का जवान, हमारा हरियाणा का युवा देश की सुरक्षा के लिए नंबर 1 के ऊपर है। आर्मी के अंदर 10% की मात्रा अगर है तो हरियाणा के जवान की है। दूसरी पहचान हरियाणा ने बनाई है खेल के अंदर, स्पोर्ट्स के अंदर। हम देखते हैं कि हमारा हरियाणा का युवा अगर देश मेडल लेकर के आता है तो उन मेडलों में सबसे बड़ी संख्या अगर होती है तो हरियाणा की होती है। ये हमारे लिए बड़े गर्व की बात है। और तीसरी पहचान बनी है हमारे हरियाणा की इंडस्ट्री। आज इंडस्ट्री 250 फॉर्च्यूनर कंपनीज आप देख रहे हैं हमारे गुरुग्राम के अंदर, और बड़ी इंडस्ट्री खरखोदा IMTs, मारुति का जो ऑटोमोबाइल का इतना बड़ा इंडस्ट्री वहाँ पर लगा है कि देश के अंदर सबसे ज़्यादा ऑटोमोबाइल के मामले में हरियाणा वो फीड करने का काम करता है। इंडस्ट्री के अंदर एक बड़ी पहचान हरियाणा ने बनाई है। और हमने ये पहचान वैसे नहीं बनी है हिना जी, मैं बताना चाहता हूँ कि हमने हर अपनी पॉलिसीज़ के अंदर लगातार हम उसमें बदलाव किया है। अभी भी हम हरियाणा के अंदर एक पॉलिसी, न्यू पॉलिसी हम लेकर के आ रहे हैं जिससे एक बड़ा लाभ आने वाले समय के अंदर भी मिलेगा। जल्दी ही वो पॉलिसी आ जाएगी और उसको लेकर के हम उसको प्रेजेंट भी करने वाले हैं, बताने वाले हैं, क्योंकि जिससे अलग अलग क्षेत्र के अंदर और क्या उसके अंदर हमारे इन्वेस्टर्स हैं, इन्वेस्टर्स को क्या क्या उसके अंदर फैसिलिटी हम दे सकें, उसको लेकर के भी हम काम कर रहे हैं। हमारे हरियाणा की जो पहचान बनी है, एक इंडस्ट्री के अंदर भी बड़ी पहचान बनी है, क्योंकि हरियाणा एक कृषि प्रधान राज्य था और कृषि प्रधान राज्य होने के नाते एक पहचान थी इसकी कृषि प्रधान की। आज कृषि प्रधान भी है और मैंने ये निर्णय किया है, क्योंकि आज जिस प्रकार का बेतहाशा पेस्टिसाइड या खाद का उपयोग होता है, हमने निर्णय किया है कि हम प्राकृतिक खेती, आदरणीय प्रधानमंत्री जी ने कहा, उसके अंदर भी हरियाणा एक बड़ी पहचान बनाएगा प्राकृतिक खेती के अंदर, ताकि हम ज़्यादा पेस्टिसाइड और खाद का उपयोग हमारा किसान ना करे। पिछले दिनों इन्वायरमेंट को लेकर के हमने अपने हरियाणा के किसान से एक बात कही थी कि आप पराली मत जलाइए, हम उसके लिए आपको सहयोग करेंगे। हमारे हरियाणा के किसान ने उस बात को माना है और मुझे खुशी है कि हरियाणा के अंदर हमारा किसान 95% किसान पराली नहीं जलाता है और हम इसको धीरे धीरे करके 100% की तरफ ले जाएंगे ताकि इन्वायरमेंट भी खराब ना हो, उसकी तरफ भी हमारी सरकार पूरा ध्यान कर रही है। और इस बात के ऊपर मुहर भी माननीय कोर्ट ने लगाई है, क्योंकि किसी राज्य को वो एक ऑर्डर के ऊपर बता रहे थे कि अगर आपने सीख लेनी है तो आप हरियाणा से सीख लीजिए कि कैसे पराली में प्रबंधन किया जा सकता है। हम उस दिशा में काम कर रहे हैं ताकि जो फैसिलिटीज़ है वो फैसिलिटीज़ मिले। और हमारी जो बड़ी मार्केट है, मैं आपको हिना जी बताना चाहता हूं कि इसको लेकर के हम लगातार काम कर रहे हैं। हमारा जो सोनीपत खरखौदा राई के अंदर हम ड्राई फ्रूट मार्केट, उसके अंदर इलेक्ट्रॉनिक्स मार्केट बड़ी हम बाहर लेकर के आ रहे हैं। जल्दी ही हम उसके अंदर हमने बड़ी प्रपोजल तैयार किया है हरियाणा के अंदर, ताकि एक प्लान्ड वे से कि आने वाले 50 साल तक भी पब्लिक को दिक्कत ना आए, इस प्लान्ड वे से हमारी वो मार्केट बनेगी। चाहे हमारी मार्बल की मार्केट है और
आगे 50 साल की बात कर रहे हैं, लेकिन कांग्रेस का कहना है कि 2029 में राहुल गांधी प्रधानमंत्री बन जाएंगे।
हिना जी, सपना देखना किसी के लिए बुरा नहीं है। सपना कोई भी देख सकता है, परंतु उसके लिए मेहनत चाहिए, उसके लिए जिगरा चाहिए। और वो जिगरा और मेहनत अगर किसी के पास है तो नरेंद्र मोदी के पास है। नरेंद्र मोदी ने इस भारत को बदलने का काम किया है। ये जिगरा भी मोदी जी के पास है और ये विजन भी मोदी के पास है। हिना जी, मैं एक और बात बता रहा हूं, आपने एक जिक्र किया है, देश के ऊपर आजादी के बाद 55 साल तक कांग्रेस समर्थित लोगों का शासन रहा है। आप ध्यान करिए, 55 साल कोई छोटा नहीं है, बड़ा कार्यकाल है। मोदी जी को 5 गुना कम कांग्रेस के शासन से 5 गुना कम समय मिला। आप देख रहे हैं, 5 गुना कम समय के अंदर भारत को एक विकसित भारत की तरफ गति से ले जाने का काम अगर किसी ने किया है तो उसका नाम नरेंद्र मोदी है। नरेंद्र मोदी जी ने 5 गुना कम समय के अंदर 5 गुना ज्यादा काम करके दिखाया है। ये आज देश के सामने, आज देश का हर व्यक्ति बोलता है, आज भारत वर्ल्ड के अंदर चमक रहा है।
लेकिन राहुल गांधी कहते हैं डेड इकोनॉमी है भारत।
देखिए, मैं एक और बात कहना चाहता हूं कि विपक्ष की भी एक भूमिका होती है। विपक्ष की जो भूमिका होती है वो सार्थक भूमिका होती है इस देश को आगे बढ़ाने में। क्योंकि कहीं अगर कोई गलत डिसीजन होता है, विपक्ष का काम है कि उसको बताए, लोगों के बीच में जाए। ये विपक्ष की भूमिका होती है। अगर ठीक काम भी मोदी जी कर रहे हैं तो उसका भी विरोध हो रहा है, तो फिर इस प्रकार की बात ये यहां नहीं बोलते, ये वर्ल्ड में जाकर के बोलते हैं कि आर्थिक स्थिति डाउन हो गई है। मैं एक और बात बताना चाहता हूं हिना जी, अगर आर्थिक स्थिति की इतनी स्थिति खराब होती, प्रधानमंत्री जी ने संकल्प लिया कि हम भारत की इकोनॉमी को वर्ल्ड की 5वें नंबर पर लेकर के आएंगे। ये लिया संकल्प प्रधानमंत्री जी ने, और संकल्प लिया जो 2014 जो 12वें और 13वें स्थान के ऊपर रहती थी, प्रधानमंत्री जी ने कहा कि हम इसको दुनिया की 5वीं आर्थिक शक्ति के रूप में भारत को खड़ा करेंगे। खड़ा हो गया हिना जी, खड़ा हो गया। ये प्रधानमंत्री जी की इच्छा शक्ति थी। प्रधानमंत्री जी ने कहा कि हम दुनिया की तीसरी आर्थिक शक्ति बनाएंगे, चौथी आर्थिक शक्ति बन गया। ये खाली ये नहीं है कि हमने पैसे को इकट्ठा कर लिया, इसके पीछे की बड़ी ताकत होती है, बड़ा काम होता है, जो हर पैरामीटर्स के ऊपर भारत पूरा उतरता है। और हर पैरामीटर्स के ऊपर इन 11 वर्षों के अंदर नरेंद्र मोदी जी के कार्यकाल में भारत 100% पूरा उतर रहा है। मुझे खुशी है इस बात की कि मोदी जी को कांग्रेस से 5 गुना कम समय मिला, 5 गुना ज्यादा काम किया है। ये मोदी जी की ही इच्छा शक्ति है, जिसके पास विजन होता है वही कर सकता है। तो इन्होंने भी लंबा समय कार्यकाल मिला है, तो आज तो उसका इस प्रकार की अगर वो बातें करते हैं तो वो दुर्भाग्यपूर्ण है, ये बातें नहीं करनी चाहिए। विपक्ष की भूमिका, मैंने कहा है कि विपक्ष की भी अपनी एक भूमिका होती है, उस भूमिका को सार्थकता की ओर हमें ले करके जाना चाहिए, जिससे कि देश को लाभ मिले, देश को नुकसान ना हो। परंतु विपक्ष की भूमिका भी मुझे ठीक नहीं लग रही है।
ओके, अब इन्वेस्टर्स की भी थोड़ी बात कर लेते हैं, क्योंकि तमाम इन्वेस्टर्स आपको सुन रहे हैं इस वक्त। जनवरी में भारत ने मदर ऑफ ऑल ट्रेड डील्स इंडिया EU FTA साइन किया। फिर उसके बाद बहुत ही जल्दी 7 दिन के अंदर हमने देखा कि इंडिया US ट्रेड डील, जिस पे बातचीत 1 साल से चल रही है, वो भी पॉजिटिव डायरेक्शन की तरफ मूव करनी शुरू हो गई। तो हरियाणा में इन दोनों ट्रेड अग्रीमेंट्स को लेके और जो इससे पहले ट्रेड अग्रीमेंट साइन हुए हैं, किन किन इंडस्ट्रीज पे आपका फोकस है और किस तरह से तैयारी की जा रही है ताकि यहाँ की जो इंडस्ट्रीज हैं वो बनाए यहाँ पर और बेचे देश में, विदेश में?
हाँ हिना जी, क्योंकि कल ही मैंने जो हमारे यूरोप के इंडस्ट्रियलिस्ट थे जिन्होंने हरियाणा के अंदर अपनी इंडस्ट्री लगा रखी है, उन सब से कल मैंने यहीं दिल्ली में एक बड़ा कार्यक्रम किया था। उन सब से मैं बैठा था, बातचीत किया था। और मैं जब अपना बजट तैयार कर रहा था, मैं लोगों से बात करता हूँ, अलग अलग स्टेक होल्डर से मैं जा कर के उनसे सुझाव भी लेता हूँ। और बजट के लिए पिछले वर्ष भी जब मैं बजट तैयार कर रहा था तो मैंने लोगों से जा कर के सुझाव लिए थे, चाहे इंडस्ट्रियलिस्ट हों, चाहे टेक्सटाइल इंडस्ट्री के हों, चाहे स्टार्टअप्स हों, या हमारे अन्य एग्रीकल्चरिस्ट के किसान हों, IPOs हों, या महिला हमारी इंडस्ट्रियलिस्ट हो, या हमारे सेल्फ हेल्प ग्रुप की बहनें हों, या हमारे जनप्रतिनिधि हों। ऐसे अलग अलग क्षेत्रों में जो स्टेक होल्डर्स थे उनसे मैं ये चर्चा करता रहता हूँ कि आप सुझाव दिए, अलग अलग ग्रुप के अंदर बैठ करके उनसे बजट पूर्व परामर्श हम उनसे सुझाव लेते हैं। और मैंने AI बेस्ड एक चैट बॉट भी बनाया है, उसके माध्यम से भी मैंने लोगों से, आमजन से सुझाव लिए हैं। लगभग मेरे पास 9000 के करीब में उस चैट बॉट के ऊपर सुझाव भी आए हैं। और लगभग मैं आपको बताना चाहता हूँ 5000 स्टेक होल्डर से भी मैं अलग अलग क्षेत्र के अंदर मिला हूँ, युवाओं से अलग मिला हूँ, और हमारे अलग क्षेत्रों के अंदर जो भी स्टेक होल्डर्स हैं उनसे मैंने बातचीत किया, उनसे सुझाव लिया, और ताकि हम उस बजट के उन सुझावों को बजट में शामिल कर सकें। और मुझे खुशी है, मैं आपको बताना चाहता हूँ कि जो उनके सुझाव आए, मैंने पिछली बार जो सुझाव लिए थे मैंने उनको बताया कि आपने इतने सुझाव दिए, इतने हमने बजट में शामिल किए, इतना बजट हमने जारी किया, इतना खर्च कर दिया। उनके सामने पूरा का पूरा हमने बताया। उनको भी अच्छा लगा कि ये जो पहले 2014 से पहले चलता था कि ये बजट तो सरकार का बजट है, परंतु पहली बार ये महसूस होता है, अभी आदरणीय निर्मला सीतारमण जी ने भी बजट प्रस्तुत किया है, ये महसूस होता है देश के लोगों को, प्रदेश के लोगों को कि बजट हमारा है। नहीं तो ये बजट सरकार तक सीमित रह जाता था कि सरकार का बजट है, सरकार अपने तरीके से करती है, परंतु लोगों को ये महसूस हुआ है कि ये बजट हमारा है, हमारे लिए खर्च हो रहा है। और उसको लेकर के जब हम उनको सुझाव लेते हैं, सुझाव लेकर के उनको शामिल करते हैं, उनके अनुरूप बजट बनता है, तो उसका एक लाभ भी प्रदेश को मिलता है, जन को भी मिलता है। और हमने जो आदरणीय प्रधानमंत्री जी ने जिसे मदर डील भी कह रहे हैं कि एक बहुत बड़ी डील, क्योंकि जब मैं ये सुझाव ले रहा था तो मेरे पास, मैं जब पानीपत के अंदर टेक्सटाइल इंडस्ट्री के बीच में गया था तो उन्होंने उस वक्त ये चिंता जाहिर की थी कि हमारे पास टैरिफ ये 25% लग गया, इसका हमें दिक्कत में आ गए। परंतु आदरणीय प्रधानमंत्री जी ने उसकी तरफ जो गंभीरता से लिया है, पहले ये हमारा यूरोप के साथ जो समझौता हुआ है उससे एक बड़ा लाभ हमारे हरियाणा के इंडस्ट्री को मिलेगा। और कल जब मैं उनसे बात कर रहा था तो उन्होंने बड़ी इस बात की खुशी जाहिर की थी और मैंने कहा कि आप हरियाणा के अंदर आइए और जो अपने लोग हैं वो भी यहाँ पर आएँ और इन्वेस्ट करें ताकि हरियाणा के अंदर हम उसको सभी फैसिलिटीज़ वो उपलब्ध करा सकें जो भी उनके अनुसार है। अभी मैं हिना जी एक और इसके अंदर हमने अभी निर्णय किया है कि हमने जो 10 IMTs बनाने का निर्णय किया है, 10 IMTs के अंदर हमने ये निर्णय किया है, अभी हमारी पॉलिसी भी आ जाएगी कि किसी व्यक्ति को किसी प्रकार की कोई CLU NOC लेने की आवश्यकता नहीं है। IMT के जो हमारा क्षेत्र है वो ऑनलाइन अप्लाई करेगा, अपनी CLU डाउनलोड कर लेगा और जाकर के इंडस्ट्री लगा देगा। उसको कहीं किसी दफ्तर में जाने की जरूरत नहीं है। हमने इतना इसके अंदर सुधार किया है कि आने वाले समय के अंदर लोगों को कहीं किसी दफ्तर के चक्कर ना काटने पड़े, इसके अंदर बड़ा एक हमने सुधार किया है। और लगातार इसको लेकर के जब मैंने कल उनसे बातें की तो बड़ा इंटरेस्ट उन्होंने इसके अंदर दिखाया है कि हम और इसके अंदर हरियाणा के अंदर आने के लिए तैयार हैं। तो हम जो आदरणीय प्रधानमंत्री जी का संकल्प है उस संकल्प की तरफ, और जो उन्होंने डील किया है इस डील का हरियाणा को एक बहुत बड़ा लाभ उसका मिला है, हमारे इंडस्ट्रियलिस्ट को भी मिला है। आने वाले समय के अंदर जो इन्वेस्टर्स आएगा उसको भी एक बड़ा लाभ हरियाणा के अंदर इसके अंदर मिलेगा।
जी, बड़ी अच्छी बात आपने की कि आप लोगों के सुझाव भी सुनते हैं, बजट आप पेश करने वाले हैं क्योंकि आप वित्त मंत्रालय भी देखते हैं इस राज्य का। तो आपने लोगों से इनवाइट किए सजेशंस के किन एरियाज में फोकस किया जाना चाहिए। इन्वेस्टर्स आ रहे हैं लेकिन सब लोग जो है सिविक इंफ्रास्ट्रक्चर की बड़ी कंप्लेन करते हैं। I mean, अगर हम हरियाणा की बात करें तो गुरुग्राम सबसे पहले जुबान से निकलता है, लेकिन सिविक इंफ्रास्ट्रक्चर मतलब उसको लेकर आप क्या कर रहे हैं? क्योंकि फॉर्च्यून 500 कंपनीज हैं, ईज ऑफ लिविंग भी तो बहुत ज़रूरी है।
हिना जी, मैं बताना चाहता हूं क्योंकि हमारी सरकार का पूरा फोकस इस इंफ्रास्ट्रक्चर के ऊपर है। अभी जब ये बरसात का सीजन ऑफ हुआ, बरसात के सीजन ऑफ होते ही मैंने हरियाणा के हमारे 6 अलग अलग सेक्टर्स हैं, HSADC है, HSVP है, ULB है, हमारा PWD है, हमारा मार्केटिंग बोर्ड है, हमारे ये 6 ऐसे सेक्टर्स हैं जो सड़कें बनाते हैं। मैंने उनको सभी को इकट्ठा बुलाया और इकट्ठा पहले उनको कहा कि आप अपनी अपनी सड़कों की पूरी मेरे को रिपोर्ट दीजिए पूरे प्रदेश की। उन्होंने रिपोर्ट दी मुझे बना करके, कौन सी सड़क टूटी हुई है, कौन सी सड़क अभी लाइबिलिटी में है कि उसके ऊपर हमें कहीं थोड़ी टूटी हुई है उसको रिपेयर करना है। मेरे को पूरी की पूरी लिस्ट जब आई मेरे पास, मैंने 4,500 करोड़ रुपया हरियाणा के सड़क इंफ्रास्ट्रक्चर को मजबूत करने के लिए जारी किया और उसके ऊपर काम भी चल रहा है। और आने वाले 2-3 महीने के अंदर जो गर्मी का सीजन है, क्योंकि एकदम सर्दी आ गई थी, कुछ ग्रेफ ये फोर लग जाता है, इसके कारण से ग्रेफ के कारण भी काम रुक गया और अब काम चालू हो गया। आने वाले समय के अंदर हरियाणा का एक भी सड़क टूटा नहीं होगा, ये हमारी सरकार की गारंटी है। इसको लेकर के मैंने 4,500 करोड़ रुपया ये जारी किया ताकि सड़कों का ये सुदृढ़ीकरण हो जाए। लगभग मुझे खुशी है 70% सड़कें ठीक कर दी गई हैं, 70% सड़कें, 30% रह गई हैं जल्दी ही, क्योंकि सर्दी के बाद अब शुरू होगा तो इसके ऊपर भी जल्दी काम चलेगा और एक भी सड़क टूटी नहीं होगी, क्योंकि हमारी ये प्रथम प्राथमिकता है कि लोगों को रास्ता उनको सुलभ और सुरक्षित मिले, उसको लेकर के हमारी सरकार काम कर रही है।
तो आप गारंटी दे रहे हैं कि इस साल जुलाई से सितंबर के महीने में लोगों को नाव लेने के बारे में सोचना नहीं पड़ेगा?
नहीं, उसके लिए हम काम कर रहे हैं। मैं आपको और बताना चाहता हूँ, बरसात के कारण कई बार अभी जैसा मौसम के अंदर भी तब्दीली आई है और इन्वायरमेंट इस प्रकार का खड़ा हो जाता है कि एकदम से 1 घंटे में इतनी बरसात हो जाती है कि बहुत ज़्यादा जल भराव हो जाता है, क्योंकि चाहे हम कोई सिस्टम भी खड़ा करते हैं, वो सिस्टम भी उसके आगे फेल हो जाता है सारा का सारा, क्योंकि बरसात एकदम इतनी गिरेगी, पानी इतना गिरेगा कि ब्लॉक उसको निकलने में भी घंटा 2 घंटा लगता है। परंतु मुझे खुशी है कि हमने अपने गुरुग्राम की, मुझे लग रहा है कि आप बात कर रहे हैं, गुरुग्राम के अंदर आज वो स्थिति आ गई है कि 4 घंटे के ज़्यादा अगर बहुत ज़्यादा बरसात लगातार पड़ रही है, 4 घंटे से ज़्यादा पानी नहीं रुकता। परंतु उसके लिए हमने जो हमारा लो लाइन एरिया है, एक अलग ड्रेन काटने का भी प्रपोजल हमने तैयार कर लिया और जल्दी हम एक ड्रेन निकाल करके यहाँ से, उसके ऊपर अधिकारी लगे हुए हैं, पूरी रिपोर्ट बना रहे हैं, और रिपोर्ट बना रहे हैं तो शीघ्र ही यहाँ से ड्रेन निकाल करके उसको हम इधर यमुना की तरफ ले जाएंगे। चाहे वहाँ पर STP लगाने की बात है, ट्रीटमेंट करके उस ड्रेन के अंदर छोड़ना, और उसको फिर एग्रीकल्चर को भी देने की बात है, पानी को, ताकि जल भराव ना हो। और मैंने एक और काम किया है हिना जी, मैं आपको बताना चाहता हूँ कि गुरुग्राम के अंदर आने वाले 50 सालों तक भी अगर आबादी जितनी भी बढ़ेगी, पीने के पानी की दिक्कत नहीं आएगी। हमने उस दिशा में टेंडर भी लगा दिया है, और हम मुनक से सीधा पाइपलाइन से उसका टेंडर भी हमारा लग गया है, और लगभग 2000 करोड़ रुपए का उसके ऊपर काम होगा, और वो पानी हमारे गुरुग्राम को मिलेगा। और गुरुग्राम के अंदर अलग अलग भी हमने STPs लगाए हैं ताकि पानी की कहीं कोई दिक्कत ना आए, और बरसात के अंदर भी यहाँ पानी रुके नहीं, उसको लेकर के भी हम काम कर रहे हैं। और स्वच्छता को लेकर के वेस्ट टू एनर्जी अलग से प्लांट की भी हमने तैयारी कर ली है, लगा रहे हैं। कल ही इसका टेंडर खुला है। गुरुग्राम का कूड़ा कहीं पर दिखाई नहीं देगा, उस दिशा के अंदर हम काम कर रहे हैं। आने वाले समय के अंदर धीरे धीरे सरकार उस गति से काम कर रही है, गति भी और ट्रस्ट भी। हम उस विजन को लेकर के काम कर रहे हैं कि लोगों का विश्वास भी जमे और काम की गति भी तेज हो, उसको लेकर के हमारी सरकार काम कर रही है आदरणीय मोदी जी के नेतृत्व में। क्योंकि मोदी जी का जो सहयोग मिलता है अतुलनीय है, और आगे हम गति से उसके अंदर काम कर रहे हैं।
चलिए, आपने इन्वेस्टर्स को अच्छी खबर दे दी, गारंटी भी दे दी। थैंक यू वेरी मच सर फॉर स्पीकिंग विद अस हियर टुडे। थैंक यू फॉर जॉइनिंग अस।
थैंक यू, थैंक यू।
Many thanks, Tina, for moderating that very interesting conversation, and Chief Minister, sir, for gracing the occasion with your presence and, of course, giving us your view of the kind of investment opportunities that lie ahead in the state of Haryana. And, of course, while we look at the ease of doing business, you also shed a spotlight on ease of living that's going to be in focus by the government of Haryana. Many thanks once again. Ladies and gentlemen, let's now shift our focus to the other session. Coming up is a special address by P. Balagan. He's the Principal Secretary, Industries, Investment and Services Department, the Government of Maharashtra. May I please request Secretary Sir to kindly come up on stage and address the gathering. And like the previous address, ladies and gentlemen, this address is also going to focus on the next investment decade. While the center will come up with policies, but it will also be incumbent upon states to sort of participate actively and actively engineer investment. Of course, Maharashtra is looking at investment opportunities in startups, global capacity centers, manufacturing sectors as well. Yes, sir. Yes, sir, please. Over to you.
Namaskar. Good afternoon. I'll have a very small presentation. Probably I'll finish it in 7 to 10 minutes. Maybe 5 minutes also open for any questions. You also can be blunt in asking the questions. I don't mind replying that or taking that. That's okay. I can see. Thank you. So everyone is looking at figures 31, 5, 30, 2030, 2035, 2047. So where we stand as a country as a state. It's a simple comparison. They're not like figures. And how like as a nation we are performing and how as a state we are performing. By and large, we are like going together. Probably we need to grow more, probably aggressive if we really want to be there, particularly for the country to reach 5 by 2030 and 1 trillion for our state. There are some numbers. This 570 is an unaudited, but probably by end of this year should be this May we should cross 600 billion USD, and we are going to be the first $1 trillion sub-national economy of the country. And we can see some of the strong, like 700,000 graduates every year we are passing out, and of course 15% of the export share. We have a 64% of the services share, very dominant. Like though manufacturing is also, service is also very dominant. Look at FDI, like 2 to 2.5 decades, almost close to 1/3 of the FDI lands in Maharashtra, and largest employable talent pool. And if you look at really, if anyone travel to like probably Mumbai, Pune, Nasik, Chhatrapati Sambhaji Nagar, Estwell, Aurangabad, and also Nagpur, the huge like humongous infra things are happening. One is like landmark is like the super communication corridor connects Nagpur with Mumbai. And also you have like a host of the metro projects coming up in like Mumbai, Pune, and of course Nasik and Nagpur. And the Vadhavan port is going to be the game changer. Probably it's going to be thrice the size of the JNPT, which is the largest container like handling terminal now. The Vadhavan port is going to be the game changer, just not for the state, for the entire country it's going to be there. Probably top 10 ports in the world it's going to be. So there is also a connector from like Nasik, Igatpuri to Vadhavan, 100 kilometers. It's a super communication corridor. That way entire hinterland is also connected with JNPT, BPT, and also Vadhavan port. There is also Vasai Virar Alibag multimodal logistic corridor. Only the land acquisition cost alone is almost close to around 60,000 crore. The recent cabinet has also approved that. So that will connect, that will bisect like Mumbai, Delhi, I would say Mumbai, Delhi, or Mumbai, Ahmedabad, then Mumbai, Nasik, Samruddhi, then Mumbai, Pune, Mumbai, Goa. It like literally bisects all the connectors. So obviously no traffic can come to Mumbai. Obviously they can be go to the like port of destination. And there is also Shaktipet coming up, which will connect Nagpur with Panjim, like Goa. The land acquisition is also been approved, so that also will be planned 4 to 5 years. That means a strong, like 100 billion USD of like infra project is being taken up. And why the state is like differentiator? Basically, continuity in the policy and the strong infra-led development, and strong industrial infra company, which is like Maharashtra Industrial Development Corporation, which is an SPA, Special Planning Authority, which also operates water supply schemes, which also operates effluent treatment schemes, also has some of the electricity distribution licenses. That way it's like quite a hood. And we also not leaving anything, though the sectors are going to come, and we are doing fairly well in ease of doing business. And obviously land is like, we are adding another 1.5 lakh acres in another one or 2 years. We already notified close to 50,000 acres. Probably by May, 25,000 acres we will be acquiring. The major chunk will be in Gadchiroli, which is going to be a steel capital. Then Nagpur, then you also have in Haryana, Nasik, and obviously in Konkan. This is aspirational, so we grow somewhere 13 to 40% for services, and industry has close to around 8%. Really, we need to be aspirational, and we hope with the investment which we intention we signed, probably I don't think there is any looking back, but of course it's going to be a lot of pain remover we need to do, both at probably the state level and also at the union level. This is just a sectoral insights where we actually stand. It's like more of for an internal circulation, but still you can see. And what is the capital we should be requiring if we really want to turn around the economy for this country? So probably we should require close to around $1 trillion investment, going with the thumb rule of probably 1/3 will be probably in the same state, because with the state is being quite a big consumption economy ever. With GST base, probably I think we should score much better than a smaller size states with 14 crore population. There are somewhere where we expected growth we are looking at, and services we are doing fairly well. There are sectors which were not so good, like some mining. So mining is going to be a game changer for us, because only in Gadchiroli we signed the investments for almost close to 3 lakh crore. 50 million tons of steel will be produced probably in coming 10 to 12 years, the largest steel hub anywhere in the world, or probably out of that 30 to 35%, probably we are looking at the green steel and specialty steel, where the structural stability is maintained. So that way, you have all the sectors have been covered, both manufacturing and services. So what makes, again, like this policy? The policy, you have all the policy, and despite the change in leadership, the continuity is there. Honoring the commitment is always there. Who is there, that doesn't matter, but the state is there, policy is there. So that gives the best of the investors' confidence. Obviously, that is where we say, you can look at the umbrella policy. We have also an IT and IT, of course, the GCC policy has been widely taken care of. So these are the policy sector. I'll, of course, circulate the presentation. So we are looking at all the 24 key sectors. You can see the legacy sectors and also sunrise sectors. So obviously, we are covering almost all the sectors. I'm so happy to share that in past 13 months, the state has signed investment intentions worth close to around, obviously, 30 plus 15, almost 45 lakh crore and another 10 lakh crores in the pipeline. So roughly it comes to around, I would say, 650 to 700 billion USD. Out of that, 30-35% is for services and rest all for manufacturing. The massive thing, even if you could land 60 to 78%, the whatever target set is obviously there. And this policy is what, like, this policy alone, like, tries to capture around 850 billion USD, 350 from services and 500. It also goes for some structural change, like creation of Invest Maharashtra, and also commissionerate for MSME and commissionerate for services. So structurally, we are thinking differently, and Gadchiroli Chandrapur as a steel corridor, and basically aggressively going for a land acquisition. 20 such smart townships are going to be there. Obviously, sustainable inclusive growth, circular economy policy is going to be there. So these are the priority sectors, what exactly we should do for our services and what exactly incentive. First time the thought process is services, because it isn't already an incrementality of like 10 to 12%, 13%. So we should add on that. Probably this is where the game changer is going to come. And you look at GCC, almost we are, I would say almost 25% of the GCC are here, and we are adding another 400, I would say the companies, probably 800 units. So that makes GCC as a, so basically here also we incentivize the, I would say, their operational cost by providing them not tapering incentives or like flat incentives of up to like 50% of the pay, which is drawn after 1 lakh and other thing. And also capital subsidies been given. So that is an area where I think the investors can also look at. And this is the data center corporate capital, I would say close to around 75 billion USD worth of deals we signed only for data center. Roughly, if everything goes good, and Mumbai has close to around 300 and 750 megawatt of power to be like offloaded. So as of now, the demand is almost only for the data centers registered at the SLDC, which is at Kalwa, Thane. It's almost close to 2,700. Now the demand is 2,700. Another, I think you name a company, they're all there. And the state is also setting up a quantum valley at 2,500 acres where all the frontier tech is going to be there. Probably will do much better here. And trust sector policies, again, this thinking like very disruptively what exactly the points of pain and what exactly the number we should like chip in so that the investment becomes like the de-risk. The state is chipping in as in like probably your co-investor to de-risk your investment. So that is where the capital subsidy is being like offered up to 30, some places even 35 to 40%, particularly in semiconductor and fab chips. So why Maharashtra? The numbers, I'll not repeat the same thing. So these are our trusted friends with us. I have another one minute for questions. So 10 minutes are given. I'm just through with that. Thank you. Namaskar. Any question if you're there, I'll stand. Otherwise, I can give a space for next session. Thank you. Namaskar. Jai Hind. Jai Maharashtra.
Principal Secretary, sir, for your vision on what Viksit Bharat is going to look like. And of course, Maharashtra's role in that. You've talked about a whole host of industries that are going to be at the front and center of Maharashtra's development. Most of these sectors, like GCCs and data centers, also very nicely weave into the trade agreements that India is having. So that advantage will also come about in all of these sectors that you spoke about. Ladies and gentlemen, it's now time for us to move on to our next session, the India Advantage. and how to build it. Well, the India advantage, ladies and gentlemen, is no longer defined by market size alone. It is shaped by platforms, financial depth, digital infrastructure, and demographic energy. Capital is increasingly evaluating ecosystems, how banking integrates with enterprise, how mobility platforms support with commerce, and how skilling institutions, they align with industry demand. Advantage today is led and must be renewed through innovation, governance, discipline, and operational credibility. And in fact, to take forward the discussion, may I please request Hina Gambhir, News Editor, Times Now, to kindly come up on stage and steer this conversation. The guests include Rajesh Chandan, the Chairman, Elements Wellness, India Shoppe, Ruchika Panesar, she's the country head, India NatWest Group, Sanjay Salunke, CMD, Jaro Institute of Technology, Management and Research, and of course, Mr. Shiva Shailendran is also there. He is the Director, Consumer Growth and Categories at Uber India and South Asia. It's over to you, Hina.
Thank you, Sumita. Building the India advantage. Now that's something that we are going to be discussing with our wonderful panel this afternoon. And let me just tell you, we've got like a very interesting panel here with us. We have Rajesh, who represents the wellness space. We have Ruchika, who represents the banking space. We have Sanjay, who represents the higher education space, and also Shiva, who represents essentially the mobility space. And because we are talking about scripting a tomorrow, so the actions that we take today, the actions that are taken today are going to be extremely important for our country. And today, India is being seen as a key engine when it comes to the global growth. So I want to ask each one of you, with respect to the sectors that you represent, what is that one advantage that India really has right now? Let's start with you, Shiva.
Well, I'm representing Uber. I'm sure most of you have been customers of Uber. We've been in India for close to 13 years now. The reality of the business is we have diversified quite a bit in the last 13 years. What started as a typical four-wheeler ride-sharing company has now diversified into four-wheelers, three-wheelers, two-wheelers, going deeper into the market with metro ticketing. And all of this is because consumer preferences are shifting, right? And this is a very, very unique thing about India. A very unique feature about India, if I have to answer to your question, which is the consumer preferences, the kind of challenges and opportunities that we have in India are very unique, which helps us in multiple ways. One is the kind of innovation that we do in India. A lot of these products that I just mentioned are India-first products. They're now being exported globally. We're also having the opportunity to build a huge tech team in India based out of Bangalore and Hyderabad. A lot of tech for Uber globally is now being built out of India. And this unique consumer segmentation provides us the opportunity to then double down upon what we need to do to trigger growth over the next 5 years. And the ambition keeps shifting. What started as just a four-wheeler ride-sharing player, the ambition has now shifted to becoming a one-stop shop for mobility for all consumer needs in India, right? And that requires a very different mindset, a very different strategy and that approach to how you approach the market. So
I think which also requires you to be on your toes all the time, because if preferences are shifting,
absolutely,
things are evolving, so you have to also sort of ensure that you cater to your customers accordingly. Interesting. Ruchika, what is your view? What is that one India advantage that we have right now?
Thank you, Hina. First of all, thank you for having me. Hi, I'm Ruchika. I'm part of the NatWest Group. We are a UK bank. And when you think about banking, very much so banking is transforming based on consumer expectations changing. That's the only constant, is how consumer expectations are changing across the globe. And for us, the India advantage is in the demographics, is in the talent play. When you think of us, we in India are about 18,000 colleagues. We're about a third of the global bank in the country. And we're a microcosm of the global bank, right? We run a lot of our technology, data, AI, finance, risk operations out of India, and we take advantage of that phenomenal talent base that we have, the pace of skilling that's happening in the country, as well as, if I may, over the last half a decade, the innovation that has happened in the digital public infrastructure all the way up and down the stack, and how that has had an effect on that demographic and the talent is what we are taking advantage of even as we build our teams here.
Okay. Talent pool, demographic dividend, great. Rajesh Chandan, what is your view?
Today, if you see the internet cost in India, it's just 10 to 15 rupees per GB. Compared to the world, where is the average is around $3 to $4 per GB. This has made an India advantage to scale up at a larger level. A smallest tier 2 or a tier 3 cities can also export their goods, can reach to the global audience across. We at Elements Wellness, we have 900 plus shops across India, point of sales. We have 5 lakh plus wellness experts. We make sure that all our transactions are 100% digital. That's an added advantage. Through the internet connection, we are able to reach to the remotest location. I'm a part of something called National Traders Welfare Board of India, which is the government of India's part, which conducts meeting every week and make sure that every individual trader across India, they can give their queries to the government and they get the resolution. More than 2,350 resolutions we are given, which means it builds the confidence to the last point, to the last trader also, that Indian digital economy is helping them to scale up to the biggest level. So that's the India advantage of what we have today.
Okay, Shiva.
I'm Sanjay.
Oh, sorry.
That's okay. So I'm from Jar Education. Jar Education is 2009 formed company, 16 years bootstrap in EdTech, where the space is little defamed or whatever, but profit making since inception, and dilution only done when we got listed on 30th of September last year. Okay. To your point, demographics are in favor of India. 65% of our population is below the age of 35. That's one biggest advantage. Second advantage is in India, we first tell our kids, learn, learn, learn. And later on, if it is difficult, earn and learn. Right? And if you look at the global market on digital learning, EdTech is globally around $250 billion US, and is expected to be more than $400 billion US by 2030. Same way in India, the total addressable market for the higher education, online and certification was in 2023 around 13,200 crore, which is expected to be by 28, 41,450 crore. So the CAGR growth is around 25.7%. And fortunately now, the IIMs and IITs have plunged into executive education in a major way. Earlier it was not the case. And because of the new education policy, 2020, wonderful things are happening. The online degree diplomas are put at par with the conventional degree diplomas. By that, there's a big upsurge by the corporate acceptance for the online programs. Second, the national education policy mentioned that the higher education GR, gross enrollment ratio, to be increased to 50% by 2035, which is currently only 29-30%. The humongous task, right? So online has to be there. Correct? And in online, the IIM IITs, as they're increasing the executive education program, and now everybody has understood in the corporate world, we have to be perpetual learners. The days are gone that I did my BTech, MTech, doctorate, it's over. Second biggest part is the corporatization of education has to happen. Because industry says grads are not employable. Institutes are saying my grads are employable. Now where is the gap? The gap is, with due respect to all academicians, maybe sitting here or across the globe, you're not gone on the shop floor. You're not working in the industry. You cannot teach merger acquisitions or valuations from book. Right? Did you do 2-3 merger acquisitions? Even simple example like an HR guy who has handled strike can tell about what is strike, what is layoff, what is lockout. But you cannot read a book and say section 2Q under Industrial Disputes Act defines strike as cessation of work, blah, blah, blah kind of thing. So the teachers will have to go to the industry. Teachers have to be the leaders and leaders have to be teachers. So when the corporate guys will come in the academia and tell what is required by the corporate world, then only the actual education will be fruitful, meaningful. Then only this, all grads are going to be employable. And now degree days are gone. Nobody is going to look at, after some time maybe, degree and diploma. What skills you bring along with it? Including IBM, Google, Microsoft, they said, okay, degree as mandatory, one part is okay. But what your skills, what project you handle, what exposure you got, and you are bringing. So India advantage is the parents will not take some fancy clothes for themselves, but they educate the kids. The Asia, particularly more of the psychologies, learn. I will give you an example if you don't mind. Now, when they take people or the medical professionals have understood that we have to be jack of all. The days are gone, that I am master of my own domain. Everybody. So we were just giving a program to IIM Trichy 3 years before. So we gave a program on healthcare management. They said, healthcare management niche area, will you get the learners? We said, yes, we'll get the learners. Out of 93 learners, we got 27 doctors. So while giving a talk, I asked one doctor, you will be in OT, operation theatre, or you will handle finance? He said, Dr. Salonki, we did that mistake for the last 15, 20 years. We were only in the OT. Where the money has gone, I don't know. So now when I have to start my own hospital, I should know finance, I should know HR, I should know marketing, I should have some glimpse of IT, right? So this is how the things are changing. When IT guys want to start their own organizations, they want to understand finance.
But then, Sanjay, we are also living in the age of AI, where everything is going to be dominated by AI. I mean, today, if I want to know about a particular subject, I just need to quickly go to, one of the apps that's available, ask the question, and then I get the answer within seconds. I mean, that's how fast the system really is today. So do you think our education system is aligned to the future needs, because the future is going to be dominated by AI?
Yeah, you are correct. AI is going to support. AI is not going to replace the teachers entirely. Okay, they will supplement. Right? So a teacher will understand the psychology, the learner's ability, and give an exact example which he is asking for. AI can give, but again, you have to be careful what information you get from where, how authenticate, how good, proper, and I think it will take some time to we learn only directly from robots or machines or from AI. Still that teacher or my kids should go to school and all that is bound to be there. And only thing I just mentioned, the teachers, like I give a good example, I'm Ahmedabad. A lot of faculties on the board of the companies. Now when you learn in the board meetings, right, you come and give it back in the classroom. That's why the employability is best in Ahmedabad and all those top-notch institutes. So that we'll have to learn. Let the teachers go to the industry.
Okay. Rajesh, now the question really is also how we need to be globally competitive. There is, a cost advantage that India really has. Prime Minister Narendra Modi, before the budget session of Parliament and before the budget was presented, made a very important point that Indian companies need to now focus on quality. If we want our products to be picked in the world, then we need to focus on quality. So what is being done to also get trust and aspiration for Indian products that are made in India?
See, the global consumer today trusts, like, he is not thinking where the product is being made. He is actually looking for the quality of the product. India, from ages, we have yoga, we have Ayurveda, right? Yoga has been accepted across the world, not because it is very trendy or not because it is very inexpensive or not because Instagram is been marketed well, but because the quality and the trust is there. The results are there. Same way Ayurvedic products, it has the quality and it has given results. I'm telling you about my story itself. Few years back, I just went to an Ayurvedic store to buy few products. When I entered into, I was not pleased with the store. The products, results were good, but the packaging quality was not that good. Like it was very shabby, right? Then I thought, why not we explore? Why not we export this same thing to the world with a better packaging, with a science-backed system? And that's how the quality came into place, and that's how today I am able to sell more than 1,500 crores of products year on year to the world. What Modi ji had told and what India is today is quality has to improve, and worldwide it is being accepted. everywhere towards in the world, when the quality, Indian quality is highly appreciated rather than any other country's quality. Today with these FTAs and with these new things, when India has been opening up to the world, it has a greater advantage. So India is going to lead in a better way. Yes, quality is very, very important, and trust is also very, very important, and we've been giving this from ages, and that's why it has been accepted across the world.
Do you agree, Ruchika?
You know, before I get into this question, if it's okay, I'd like to build upon the prior conversation that was about still anchoring on talent. I think there was a point being made about readiness of talent, and at NatWest we depend on, tier 1 schools and bring in great talent every year and rely on that heavily. But I think that there is a partnership between industry and academia that has to be real. When we bring interns into the organization, it's equally important that our interns are actually working on production scale projects and are not necessarily just working on, dummy projects, etc. So therefore, building skills that are, taking them to true employability, as was being said. I do think that there's also newer schools out there that have been built by, and have been founded by ex-corporate leaders, etc., that are placing a premium on project-based learning, which I think is really helpful to bridge that gap. For us at NatWest, it is long gone about, you use the word cost. For us, it hasn't been about cost for a while. It has been about talent, as I said. It has been about building a long-term strategic asset in India for the NatWest Group. And it's been about elevating a great delivery engine to becoming a real innovation powerhouse for the bank that is building end-to-end full stack solutions for our customers, all the way from the customer and colleague experience to the data backbone and everything in the middle, when it comes to whether it's the building of the models, it's the testing of the models, it's the actual building of the APIs, all the way end to end. And that has been about true value creation and driving enterprise KRs, key results, versus about doing things because, commodity. Right? I hope that's helpful.
I'll also talk to you about the challenges that your sectors really are facing. But before that, Shiva, how are India's unique mobility challenges making it a global R&D lab for Uber with learnings used purposefully, say, in other markets?
So, as I said, a lot of products are actually tested, innovated in India. There are a lot of archetypes that we have taken globally. For instance, if you look at intercity trips or outstation trips, used to be a very India unique use case where you want to travel to a different city, it's a highly offline market, you hire a cab from the market. We've been at this journey of digitizing that market for around 5-6 years now. And we have almost 200 plus routes on intercity that are live on Uber. You can take these trips on Uber. You don't have to go to offline operator. And now this product is now live in many other markets as we speak, in the US, in Australia, and we're seeing great traction for this product. It's just a classical example of what works in India will definitely work in a lot of other markets, just that you need to find the right product market fit. For instance, the other classical example is metro ticketing, right? A service that has been live in the app for around 5 to 6 months now. We're live in 5 cities. First of its kind, again, we're seeing great traction, not just on the transfer ticketing or the metro ticketing, but people are also using Uber to commute for the first mile, then take the metro ticket, and then commute for the last mile. So people are looking for connected journeys. People are looking for multimodal transportation. Right? Our consumer base is also shifting. Consumer base is not just a car user or a two-wheeler user or a four-wheeler user, depending upon the need of the hour, depending upon the use case. People use the kind of mode that is convenient for them. Right? Now this means very different things for the kind of portfolio that you need to have on the platform. Again, this is a learning that we're taking to a lot of other markets. And needless to say, as I said, tech is being developed in India. So we have this unique advantage of trying everything here and then exporting it to the rest of the world.
Okay, interesting. Ruchika, now talking about the challenges, because of course we know that we have demographic dividend, we have opportunities, we have a vision also, and political will as well. So given all of these circumstances, what are the challenges that, we are facing right now, perhaps a reform that the country needs to ensure we are able to make the most of the advantage that we have right now?
Thank you, Hina. First, I'll start by saying I'm a glass half full kind of gal, right? As I often say. So I don't tend to think of these as real challenges. I think of them as phenomenal opportunities.
See, we've always turned the crisis into opportunities.
Absolutely, absolutely. And I think these are at two levels. One, I'll start with the country because that's where you're anchoring. I think for us, as has been said, really getting our people and the strength of the demographic into that deep skilling quickly is going to be really important, and readying the country for wide-scale adoption of AI is going to be a very important lever into where we are going. I think we are poised though. I think, one, the unparalleled demographic, two, the investments at all levels of the stack, continued investments in the digital public infrastructure, in the semiconductor, in all layers of the stack. There is that investment and that intent, but making sure that that widespread adoption is happening and is real, that gives us that federated scaling opportunity, which is possible only in India. I do think that we have a unique benefit and opportunity in this country to scale in a federated manner, which is not possible in many other parts of the world, right? For us in banking, and closer home, for us in banking, consumer behaviors are changing, consumer expectations are changing, and for us, our challenges or opportunities are really about building those connected consumer experiences in digital banking based on consumer needs and wants, and building more productivity for our colleagues in the next iteration. How do we innovate faster, right? How do we fulfill the needs of our customers faster, and do so in a world which is AI-powered but human-centric? That's the unique, interesting nuance and challenge that we're sitting on. And, we have proof points that we can scale AI in everything that we've done in 2025. We have many examples within the organization and in everything that we do where we have scaled, the adoption of AI as well as the use cases in the consumer base. It's about now taking that and doing that in a faster way,
okay.
and driving to more consumer benefits.
Okay. Sanjay, one reform perhaps that's the need of the hour.
The way I said, the educationists should go to the industry. That's one. The government of India has done good work. NEP 2020 done good work. Viksit Bharat. You have multiple platforms like Swayam, NPTEL, right? Democratization of education has happened now because of the technology advancement. So the people, maybe in rural India, we in metros, we feel because we have best of the best faculties to teach and educators. What about the rural India? Because one of my faculty, when I did my MBA, he taught me, mind-boggling. I said, if such faculties are available to the people in Kolhapur, Solapur, Begusarai or Jabalpur, the rural India, the real diamonds and jewels are also in rural India, right? And that's because of online and this digital learning, this is possible now. So the people never dreamt that I can learn from IIM Ahmedabad, or IIM Trichy, or IIT Madras, IIT Delhi. Now because of the tech platforms, it is possible. That is also pushing up the talent a lot. And the corporate world has also realized that, as I said earlier, but we had to be perpetual learners. Every 2-3 years, we have to keep on learning. Right? And there's a lot of entrepreneurship happening in India. That will push the economy a lot. So hats off because of Viksit Bharat 2047 or whatever the steps being taken. That has given a good push, and I think the future is very bright.
Okay, future is bright, Rajesh, but is there any challenge that you want the government to immediately address?
In UK, there is a Ministry of Happiness. In UAE, there is a Ministry of Tolerance. Okay, if India and the globe has something on Ministry of Global Happiness Index. Today, India needs a healthier world, right? If we can cater to a healthier world, how it can be healthier is because of prevention, right? Rather than cure, if we start early and start prevention, if government comes with a reform that from the age of 25 itself, you will have to practice these things and measure the happiness, then I think at the age of 45, they won't end up in hospitals, rather they will be happier at home. If some reform like this comes in place, because we have to see the real Bharat, where it lies. We know that India is targeting a $10 trillion economy, whether it is targeting to a $10 trillion healthy economy. Where will all this money be useful? If we are wealthier, it's not useful, it should be healthier. So I want to inform the government that we should have some sort of a thing where we can make India healthier and wealthier. Thank you.
I think everybody agrees to the point and the suggestion that you gave. Thank you very much. We're completely out of time, but appreciate all of you for joining us today. Thank you.
For moderating that session. And gentlemen, having our own Ministry of Happiness is a great idea. We do hope that the government really looks into it, because that is also an important parameter as we develop the country. And as far as the India advantage is concerned, well, we definitely have to make the most of the demographic dividend that we have, and skilling is going to be important as we enter a new decade, or what many are calling a decade. On that note, it's time now for us to switch our focus and shift to a very interesting conversation that we're going to be having up next. This is going to be on the moral economy, reimagining capitalism for a transformative century. And in fact, for this session, may I please request to come up on stage Ms. Marianne Williamson. She's a #1 New York Times bestselling author on spirituality and metaphysics as well, 2020 and 2024 Democratic presidential candidate as well. Ms. Williamson, if you could kindly walk up on stage for your session and kindly address the gathering.
I don't see a clock. Could someone give me a clock or a watch or something? It's over there and I can't see it. I'm so sorry. I can sort of see it. Okay, I can sort of figure it out. Hello, namaste. It's wonderful to be here with you. A real honor. And it's been very interesting for me as an American to be in the presence of such an optimistic group of people. There is hope in the air. There's possibility in the air. There's great business success, an ascension of the capitalist model doing very, very well in your country. I congratulate you. And also, as an American, I cannot but feel the comparison, because my country is not in a good mood. In my country, there is great anger, and there is great sadness. And among millions of Americans, including very, very powerful people within the business community, there is the constant question, how did we let this happen? What were we thinking? And what millions of people are coming to understand are the ways in which we were not thinking. We were not thinking about the whole. We were thinking about our lane. And business particularly, it can become very tempting to keep our eyes only on the charts, only on the data, only on the statistics, and only on the success that applies to our field. We were thinking in terms of short-term profit. People were thinking in terms of competition. People were thinking in terms of success that was very much a 20th century model. And we felt, as you feel, that we didn't have to worry about some of those other bigger questions because, for instance, we felt about Obama the way you feel about Modi, the excitement that was in the room last night. So some of the issues that we thought we didn't need to care about because, you know, those people have that handled. But in a democracy, there is never a guarantee that those people will remain in power. And what my country has learned, to great sadness and even horror, is that just making a lot of money is not enough to necessarily protect us. having worldly, even capitalist success will not necessarily be enough to protect us from forces which might threaten. Now, the name of this conference is that this is a decade of disruption, and this is a decade of disruption. And I know from having talked to people here that because of your huge size, your huge power, and now your huge capitalist success on the ascension, there's a sense that you will be able to withstand whatever other worldly disruptions are occurring. I say to you as an American, we thought that too. And not only that, but we now see that many in the business community, not only in the business community, but in the entire society, should the disruptions continue the way they are now, and I know that everyone here realizes that that includes a great dissembling in the United States of America, then the powers that be in India will need to do more than just protect India. You will need to hold a space for what a powerful democracy can be in the century that unfolds ahead. And that will be a place of power not only for India, but for the entire world. The second part of the title of this conference is not only the decade of disruption, but the century of change. And I know that no one here needs to be reminded. We don't know yet what kind of change. For the world at large, indeed, it could go either way. Now, I'm not saying that the answers don't exist. I'm not saying that there isn't in India, in the United States, in Europe, in Africa, in Asia, everywhere. We have the answers. We have the ways to answer the tremendous challenges that lie before us. Those challenges, however, are too many for us to ignore. Whether it has to do with climate change, whether it has to do with nuclear energy, whether it has to do with AI or anything else. Something happened in my country back in the 1980s in the state of Wyoming, where there was the largest conflagration of fires, forest fires, than had ever existed in our history. And what happened that summer was that there were a lot of smaller fires, and those smaller fires all fit the category of what was considered acceptable burn. Just let it burn. But that summer, in a way that completely changed how forest fire management is looked at now, there were too many stress points, there were too many fires otherwise considered acceptable burns happening too close together at the same time. There are things happening in the world. If it was only ethnic divisions, if it was only religious divisions, if it was only nuclear issues, if it was only threats to democracy, if it was only this or only that, we live in powerful nations, we can absorb it. Too many stress points are happening now. And capitalism should not just be a force that is about the accumulation of wealth. 100 years ago, we thought that. We thought, well, if there's enough economic wealth, more countries will become democratic, etc. We know now that that's not necessarily true. There are enough powerful, authoritarian, capitalist countries. And so we realize that ethical inquiry, when I say moral inquiry, I'm not talking about religious dictates. I'm not talking about who's Hindu, Muslim, Christian, Jew. That's not what I'm talking about. I'm talking about the universal questions of ethics, which means more than how much money is made, which means more than short-term profit, which begins in our own environments. Leadership in the 21st century is no longer going to be a top-down model, not if you want to be success in your companies and not if you want to be a successful nation and world. We're now talking about a shift in paradigm from ruthless competition to collaboration. I think some of the most inspiring commentary made about business at this conference that I have heard came from Queen Rania yesterday. And one of her lines was, just because you have the authority doesn't mean you have all the answers. When she talked about humility, let me tell you something. I come from a country being humbled right now. And in that humility, we are learning things. We are going through a moral reckoning that, oh, if only we had been thinking about these things 40 years ago. The top-down model of leadership is over. The issue that you can think about money and not talk about the well-being of your workers, those days are over. The well-being of the environment, those days are over. The well-being of animals, those days are over. And if the business sector takes unto itself the larger issues of ethical inquiry, there is no more powerful vortex of power than what is happening within business. When your prime minister sat here today with a great capitalist titan of your country, those are two equal vortexes of power in your country, just as they are equal vortexes of power in my country. And in this century ahead, take AI alone. Everybody knows this. Everything I'm saying, individuals are already thinking about these things. Individuals in this room are thinking about these things. We're having private conversations about these things. But every business, I believe, should have a division of ethical inquiry. Not with rules, not dictating how things have to be, but a space where the conversation can occur. And right now, too many people in powerful business communities do not feel the emotional and psychological permission to necessarily bring these things up. And I'm particularly speaking to the women in the room, because often it is women in a business situation, in powerful capitalist vortexes, who are asking questions like, is this really the right thing for us to do? And might not feel permission to bring up the conversation the way it needs to be. And yet studies have been done that show when even one person will say, I agree with that, we should be having that conversation, then it opens up a space for answers. We can have answers. The genius exists on this planet to be able to handle all of the stress points that face humanity today. But first, we must be willing to ask the questions. Yesterday, I was on a panel at Bennett University with two of the speakers here. One was a gentleman named Kunal Dalal. He may or may not be in this room. He is an Indian who lives in the United States now. And one of the students at Bennett University asked, the conversation was about AI, and one of the students asked about the environmental destructiveness that is created by these data centers. This is an ethical question. We can't just go forward with AI not asking these deeper questions, not only about the environmental issues, but also about the human issues. No one in this room needs to be told. We understand the incredible positive potential of AI, but also thinking people know that this thing could get ahead of us. And I come from a country which has already demonstrated what happens when you allow your technological progress to outpace your moral progress. But the reason I mention this is because Kunal then talked about a conversation he had had with a very powerful player in the energy sector who had represented a very old model of how energy is to be exploited at the expense of people, at the expense of health, at the expense of the environment. And they had a conversation about new ways of doing technology so that we can absorb the greenhouse gases that occur. And so even though I cannot really see how I'm doing time-wise, I think I understand. I think my appeal to all of us is that we realize that none of us can afford at this time to be people who stay only in our lane. No sector, including business, can afford to think other people will handle this or other people will handle that. All of us must be thinking about our grandchildren. And yes, I understand trillions of dollars being made. I congratulate you. It's exciting to be in the environment of a society that is this optimistic, but I also remind you what we all already know. Given the incredible challenges that face the human race today, you being yourself a nuclear power, There is not enough money that any of us could make that could guarantee to protect our children and our grandchildren should things go terribly and desperately wrong on a global level. It's not too late. It's not midnight yet. I do remind you, again, you already know this, one of the major powers in holding forth the light of democratic possibility is benched for now. I promise you as an American, we're doing everything possible to change that. But for right now, everybody else has got to carry the big questions. And we can as a human race. Whether we come from the United States or India or Europe or Africa or Asia, you know, we're living at a time of two parallel universes. One global order, as the President or Prime Minister, I'm not sure which, of Germany said yesterday, the old global order is collapsing. But there's another world, described by Arundhati Roy. A new world is struggling to be born. One of the greatest hopes for humanity is that rising capitalist forces in no way be tempted to be part of the collapsing order, but rather see itself as part of the world that is struggling to be born. If we dwell only in the old order and the old consciousness, as Queen Rania was saying, this breeds arrogance. And I know, because I come from the United States. And when you're arrogant and when you're entitled, the problem is you are more likely to become blind. Blind to things that you only realize decades later you should never have closed your eyes to. I hope for you, my wish for you, is that you don't have to have a cycle of going up and coming down before realizing all this. I wish you the best, and I also hope not only for your country, but for all the world, that you deepen into the consciousness where we understand that it's more than commerce that we're after, it's more than successful commerce we're after righteous commerce. We're towards something which truly does have to do with the elevation of the world, the goodness of the world, the happiness of people, the health of the world, and the survivability and the sustainability and the thriving of this world so that we can bequeath it to our children and our grandchildren. A major capitalist master of all things said to me once, "Marianne, I understand you, but how are you going to do this? How do I do this? I've got to make money for my shareholders." I said, "You're going to have to figure that out. But I'll give you a hint. A spiritual quest will help you." And he started writing me emails. He said, "I learned to meditate, and I realized that I have more creative thinking, that my creative thinking is as important as my strategic thinking, that my heart doesn't have to be disconnected from my head, that I can treat not only the colleagues that I work with, my customers, but also my workers and the entire world as part of that which I serve." He rescued his company. His company is even more successful. We are living now at a time of a great rewilding. We're going back to our hearts and who we become, not only in politics, not only in business, not only in every other field, when we realize that a business is a living organism and that leadership involves relationship, changes your company, changes your country, and changes your world. God bless you. I wish you well. Thank you.
We'll have commerce, but make it more righteous. That's the key highlight of Ms. Marianne's session. Thank you very much, ma'am, for that very thought-provoking session. Ladies and gentlemen, we now break for lunch, but I do request you to kindly come back sharp at 2 p.m. The lunch is being served at Raja Rani Bagh, but I do once again request you all to come back in time so that the next set of sessions can begin sharp by 2 p.m. Enjoy your lunch. the way, in the first half of the day, we had great conversations around India's manufacturing muscle, the demographic dividend, and of course how industrialization across key sectors is really moving forth, keeping in mind with the vision of the Prime Minister's vision of Viksit Bharat. In the second half as well, we'll try and keep up the momentum of the first half. But before we begin, let me thank our sponsors. We'd like to thank all our partners for their consistent support over these past 10 years. The ET Now Global Business Summit is powered by Spark Capital and Bennett University, the Times Group. Strategic partners, also we'd like to thank Elements Wellness, Jaro Education, Government of Maharashtra and Government of Haryana. Our media partners include Business Insights partner ET Edge Insights, radio partner Mirchi, and music streaming partner Ghana. The official outdoor media partner is Times OOH, and network partner is Times Network. The event overall is conceptualized and executed by ET Edge and the Times Group. And with that, it's now time for us to take a look at the next session. But before that, I'd like to make an announcement requesting all the gentlemen, all our esteemed attendees to kindly take your seats, and those at the back may please come up in front, given the fact that the front seats are vacant. I'd request you to please come up in the front and take these seats, as we're just about to begin. Our next session is on the dawn of super intelligence, AI, and beyond. In fact, artificial intelligence is no longer a futuristic promise. It's a present force reshaping business models and governance frameworks, economics, and even the way we define human capability. As we stand at the threshold of what many called the dawn of the superintelligence, the question now is not just how powerful AI will become, but how responsibly, ethically, and strategically we will be able to harness it. And help us navigate this profound shift, let me welcome on stage Ivana Bartoletti. She's the Global Chief Privacy and AI Governance Officer at Wipro. May I please ask you to give a huge round of applause for Ms. Ivana Bartoletti. Thank you very much, Ivana. The stage is all yours.
Thank you very much, and it's great to be here with you. Being Italian, I know that eating is very important, as it is for you. So I know that listening right after lunch, I mean, Italians, we drink a lot of coffee after lunch, and so thank you for being here. So thank you for inviting me here, and I also want to say thank you to India for convening the AI Summit at a very important moment in the evolution of artificial intelligence. From Monday, global leaders will gather to discuss AI, and the timing is certainly not symbolic, it is structural. We're moving from a phase of experimentation to a phase of systemic embedding of AI. Previous global conversations, from Bletchley Park to Paris last year, have focused on safety and catastrophic risks. That focus was and still is absolutely necessary. But today, risk management alone is not sufficient. The defining questions are now about readiness, about institutional preparedness, about whether governance can keep pace with technological acceleration. This is where India's leadership matters. India is home to over 1.4 billion people. It generates roughly 20% of the world's data. It has the second largest AI talent base globally. And more than 700 million citizens are digitally connected. According to McKinsey, generative AI alone could add between $2.6 and $4.4 trillion annually to the global economy across sectors. This is not marginal growth. This is structural transformation. India's experience with digital infrastructure shows something critical to the world. And that is the large-scale technology adoption is possible when two conditions align. First, when society is open to transformation. And second, when institutional capacity supports and regulates their transformation. This alignment is rare and is very powerful. India's technological approach, evolving beyond purely ex-ante restriction, reflects an ambition to move from risk categorization towards life cycle accountability. As AI scales, governance must scale with it. This summit, therefore, is not just about symbolic leadership, it is also about operational leadership. This is the first such gathering of its kind hosted in the Global South, and that matters very much. AI governance cannot remain a conversation driven solely by normative approach, drafted in policy papers. It must evolve into implementation capacity. I've been involved into the AI governance discussions for the past 10 years, but now something's profoundly shifted. And the shift we need, in my view, is very clear. From abstract risk management to accountable deployment. From principle statements to institutional readiness. From regulation as reaction to governance as capability. Because AI will not only reward technical capacity, it will reward absorption capacity, the ability of institutions and businesses to translate AI adoption into productivity, inclusion, and long-term resilience. Institutional power will determine who benefits from AI. When we speak about super-intelligent AI, we should not imagine science fiction. We should observe acceleration. Foundation models, they're now capable of reasoning across domains, systems designing molecules and accelerating drug discovery, autonomous agents executing complex workflows, generative models reshaping knowledge production and communications. These are deployed realities. But alongside the innovation, we have seen systemic stress, disinformation amplified at scale, synthetic media affecting women disproportionately, AI companions influencing vulnerable populations, labor displacement concerns across multiple sectors, and workers questioning their future and employment stability. And we must be honest about something else. AI is not just software. It is semiconductor supply chain. It is earth, rare materials. It is hyperscalers, data centers. It is energy grids under strain. AI is infrastructure. It is energy. It is geopolitics. The competition is not longer only about better models. It is about compute capacity, sovereign infrastructure, and strategic autonomy. This is where governance must mature. In the era of superintelligent systems, governance must mean institutional capacity to deploy responsibly at scale. It must be regulatory clarity aligned with innovation cycles, public-private coordination on infrastructure, resilient supply chains, robust audit and oversight mechanisms, skills development within institutions. Governance is never a constraint on growth. It is the architecture that allows growth to be sustainable and provide long-term value. The countries that succeed will not be the ones that move fastest alone. They will be the ones that move fastest with trust. If AI is to scale, it must be trusted. And this is not an abstract. It is built layer by layer. First, direction before capacity. Capability without direction creates volatility. Before expanding compute and model power, nations must define societal objectives. what economic transformation is intended, what risks are totally unacceptable, what sectors are prioritized. Clarity of direction stabilizes acceleration. Second, design for trust. Trust must be embedded at the design stage. Transparent data flows, documented model development, human oversight mechanisms, and clear accountability chains. Retrofitting trust after deployment is not an option. It's costly, and it is very destabilizing. Number three, inclusion as performance. AI systems reflect the institutions behind them. Inclusion is not just moral signaling, it is system optimization, diverse data sets, diverse design teams, and inclusive regulatory input reduce systemic bias and enhance resilience. Four, democratization beyond access. Democratizing AI does not just mean giving everybody access to powerful tools. It is participation in design, governance, and standard setting, open ecosystems, interoperability, capacity building for regulators and enterprises. Nations must move beyond from being consumers of AI to co-architects of its evolution. India combines scale, talent, digital infrastructure, and political ambition. Its digital infrastructures demonstrates the deployment at national scale can align with public objectives. Its AI workforce provides capability, its data ecosystem provides input, its demographic scale provides testing ground. But leadership now requires more than deployment. It requires shaping the norms for scalable governance. Superintelligent AI will test institutions. It will test regulatory ability and speed. It will test democratic resilience. The question is not whether AI will transform our societies. It will. The question is whether governance systems can evolve from compliance structures into strategic capabilities. We are entering a phase where AI is becoming an embedded layer of economic and institutional life. The dawn of superintelligent AI is not a distant horizon. It is a present structural shift. The countries and businesses that will lead these huge transformations are those that will be able to align technological ambition, institutional capacity, infrastructure resilience, and public trust. India has the opportunity to demonstrate that scale and responsibilities are not opposites. They are mutually reinforcing. And I look forward to the discussions ahead as we collectively shape this next phase of AI. Powerful, accountable, and aligned with long-term human progress. Thank you.
Thank you very much, ma'am, for your insights. Let's, in the meantime, move on and talk about our next topic of discussion, because we are eagerly awaiting for the esteemed panelists to join us on stage over here. And this time, we will be talking about building the world's next breakout brands. Well, this is going to be the big talk as far as this discussion is concerned, because in a world where capital that moves fast, technology that moves faster, and consumer loyalty that is constantly being redefined, the brands that break out are not incremental. Now, when we talk about they being exponential, they are the ones who form from day one. They have been built at an intersection of innovation, resilience, and also a bold vision. So let's talk about our next session, which is the building the world's next breakout brands and bringing together the founders who are not just participating in global markets, but they're actively shaping them across continents. Let's welcome on stage Mate Pence, who is the founder and CEO, Loft Brazil, joining us here on stage. We have Ren Aito, who is the co-founder and CEO of Sakana AI Japan. Pratik Gauri, who is the founder and CEO of 5IR UAE, and this session will be moderated by Sanjeev Magat, who is the Senior Executive Editor, ET Now and ET Now Swadesh. All of you, please join us on stage. A big round of applause, ladies and gentlemen. Building the world's next breakout brands. We will begin the session now. Over to you, Sanjeev.
Thank you, gentlemen, for joining us today. Let me start with you, Mate. You're from Brazil. You're looking at the real estate sector from a technology point of view. How do you see technology bridging the gap with respect to the entire property and the real estate cycle there?
First of all, thanks for having us here. Great to be here talking about the decade of disruption. And I think a lot of us here are looking at this from different angles. In our specific sector in real estate, I would say it's never been more exciting than today to be building, because you're looking at a sector that objectively is the largest asset class in the world. Real estate is by far the largest asset class in the world, yet it's one of the most analog, most offline asset classes or sectors in the world as well. So building at the intersection of real estate and technology, at the end of the day, if you take a step back, we're really trying to fill a trust gap. You know, why is this industry today so offline? It's so offline because it relies on a lot of human trust. It relies on a lot of human interaction. So in large part what we're doing at Loft, and you know, having started this in Brazil, having expanded it across Latin America, and having an ambition of taking it to other parts of the world over time, is really combining the best of both worlds of digitization, of AI native technology solutions, and at the same time human interaction at the interface where it most matters. So integrating brokers, integrating real estate agencies deeply into the process as well. But at the end of the day, it's really about leveraging technology to help close a trust gap, which, especially in emerging markets, is still very much sort of the biggest void. It's table stakes in a lot of places like the US and Europe. Trust has become less important because there's more of a kind of default trust environment. But if we look at places like Brazil and places like India as well, there's still a large trust gap to be filled. And I think our role as technology players is to try and close this gap.
Ren, you're from Japan and you're running an AI company. You started off with foundational models and then you pivoted to products, fintech. What led to that pivot from being in foundational models to product-centric approach here?
Yeah, thanks for the question. And I think we are not completely pivoting from foundation model to the application. But the point is, if I may build on what Mate says, whenever we are talking about AI, we are talking about AI in general. But my approach is that whenever we are talking about AI, we have to specify which sector you're talking about. Of course, if the artificial general intelligence comes tomorrow, it will be sector agnostic. The real estate, e-commerce, medicine, maybe like a one superpower, like a God level AI can solve the entire problem. But it's not a case at this moment. At this moment, the foundation model is great. ChatGPT, Anthropic, whatever is excellent. But still, even if you're using ChatGPT for, let's say, the loan application or finding whatever your favorite real estate, it doesn't work automatically. So what I'm saying is that it's not something like an application layer guys can do to help the foundation model. But the foundation model guys have to go into the application layer. We, as a foundation model layer, have to run extra miles, not just being complacent about making excellent models, but we have to do more. We have to do more by specifying a specific industry sector. In our case, which is financial sector and defense sector. With the financial sector, we started by automating a loan application process. So whenever you have this SME loan application, mortgage loan application, banks are using thousands of bankers, the junior and senior and the very senior, to analyze those applications and making a decision whether to approve or disapprove that loan application, on what condition, what covenants. Even if you're chucking in the entire bank data, your personal data, your company's data into the ChatGPT, bank cannot make that decision of approving or disapproving a loan application. It needs more integration. You have to pick up more the unwritten rules, know-hows. It's a combination of the sector domain knowledge and the AI expertise to actually deliver the complicated problem.
Pratik, you look at blockchain very closely. How do you see this technological advancement coming in, and how blockchain can bring in some kind of continuity or bridge the entire gap here?
So if you look at the way blockchain has been progressing, right, in the last few years, I think it's already permeating into multiple industries. Right now, one of the biggest things is if you look at fintechs, right, most of the banks are now embracing blockchain, whether it's putting most of the stocks on the chain or using the technology primarily because of its innate nature of being transparent and innate nature of, you can't delete a record once you entered the record, right? So there are multiple use cases. One big use case is stable coins, for instance, right? The market's gone into now trillions of dollars. And if you look at this use case of stable coin, that's actually permeating into almost every industry because you don't need to wait. If you look at cross-border payments, you don't need to wait for a couple of days to receive remittances or to send remittances. You can do it instantly. So those kind of use cases now are actually visible in almost every industry. And I think integrating AI and blockchain, I think that looks like the future of fintech, where because of blockchain, the transfers are going to be extremely fast, extremely secure. And on the other hand, because of AI, you don't need to understand what the technology actually does, right? For a 60-year-old, they don't need to understand what actually it does, but you can just use the technology to send and receive payments and to actually invest into other pieces. And with AI, it makes it easier. The front layer becomes AI, but at the back end, it's going to be blockchain. I think that looks like the future of fintech.
Matt, property tech is a very asset-heavy structure, and you're trying to, streamline it through technology there. How do you see, if I were to ask you, the biggest debate today going on globally is an Anthropic or any other AI is disrupting the traditional IT sector. Do you see there is room for both traditional IT services and AI fintech or products together to work together?
It's a good question, and I think that it kind of comes to the root of how complex some of these industries are. In particular, real estate, we're talking about an industry that, especially at a local level, but even if you go kind of to the country level, is extremely complex. There's a lot of idiosyncrasy in kind of how the process works, how the integrations with banks and other players work. So we actually see a very sort of best of breed and best of both worlds combination, not just in real estate, but other large sectors as well, be it healthcare, be it crypto. We're applying a lot of these agentic models that are working really well, but are fully disseminated and to some extent commoditized, and applying them to these specific, very complex problems. So for our industry, we actually see the complexity and the asset heaviness and sort of the idiosyncrasy of the industry as a large advantage, because building to those idiosyncrasies and building solutions that are very specific is something that, in our view, the agentic models help us do our work, but won't necessarily be the ones solving those problems. So I do think that there is a massive opportunity at the application layer or at the platform layer, applying agentic models and bringing those capabilities to the end consumer, be that a small business, be that a enterprise client, or be that, in our case, millions and millions of home buyers, home renters, and folks looking to finance. If you just take the mortgage process as an example, it's a process that today has 180 plus steps before you actually get a mortgage disbursed by the bank. So going all the way from finding the home that you're looking to buy to getting a mortgage disbursed is a multi-step process that, by the way, involves a lot of physical visitation, involves you looking at the home. So I think that that's a process and a value chain, again, where agents can speed up and take out a lot of inefficiency, but you're not going to be resolving the entire problem end to end just by putting a chatbot to it.
Again, fintech is doing a lot of stuff here, but if you look at from a regulatory point of view, how easy is it for AI to be used as a tool, given the fact that you have financial regulators who will have a lot of restrictions, who will be very apprehension because there could be systemic risk which is going to come in. Do you see one model to work, or it will be a customer to customer or client to client?
Yeah, probably this question is going back to what Amate says about 100 different steps in a real estate agency, for example, real estate industry, for example, because there are lots and lots of steps and procedures and rules. And what you have to capture, or what you have to differentiate, is that there is a written rule, like the manual. Every entry-level bankers are giving this 50-page manual, how to do the mortgage loan application, how to examine the mortgage loan application. My question is that 50-page manual enough? The answer is not enough. And then, how do you learn? The younger bankers are learning from the senior bankers, looking at their day-to-day business, talking with the customers. They are trying to pick up the know-how, which can be said as an unwritten rules. But more than that, it's not just an unwritten rules, but some nuances, some condition depending on the situation. So you have a whole lot of complication about how to deal with one single business line. It's a combination of the written rule, unwritten rules, know-hows, your own discretion. How can you teach them to the AI? Written rule, fine. You put the written rule in the AI, prompt engineer, and then the AI starts to understand what that is. But you have to do two more things. One is you have to collect those unwritten rules or know-how somehow from the human being, from the human bankers, and then verbalize that, and then getting that into the AI. Because it's an AI who is learning this rule, the manual doesn't have to be condensed into 50 pages. 50 million page manuals are fine, right? Because you are not teaching a human banker, you are teaching AI. So the you collect a lot of know-hows, verbalize that into 50 million pages, and then teach that to the AI. That's still not enough, because the rule is not always comprehensive. Occasionally, human beings are exercising their discretion. They understand the nuances, and then which cannot be verbalized. And then a good thing is about the AI is you don't have to verbalize everything. As far as you teach the AI the correlation between input and output, without questioning, AI learn what is the right results. Imagine you're driving a car, or you're sitting in a passenger seat. Some of the drivers are excellent. I'm a horrible driver. Can you verbalize why my driving is horrible? You may try to say, this guy brake 2 times within 20 seconds, so the rule have to be this and that. It's impossible. The only useful feedback I want is this driver is a good one or bad. And then if this driver is a bad one, AI learn not to replicate Ren Ito's driving, right? So it's a combination of the many different things. You have to teach AI to be smart.
Pratik, how did you move to sustainability first blockchain? Because there are gaps which is there in Web 3.0. Which are the gaps that led you to move to that direction?
So if you look at, two types of consensus mechanisms that work in the blockchain, one is proof of work and the other is proof of stake. So when you look at proof of work, it requires a lot of energy. So if you have more energy than me, meaning like if you have more computers than I do, then probably you get rewarded and I don't get rewarded. That's how Bitcoin probably works. And the other type of consensus mechanism is proof of stake, where if you have more money than me and we are two validators trying to validate a block on the chain, there's a higher probability you get rewarded and I don't, which takes you back to the old traditional finance system that the rich keep getting richer and the poor still keeps getting poorer, right? So what we came up was a sustainable proof of stake model where we've given a weightage to sustainability, and that's why we call the company Fifth Industrial Revolution, where you make money while you do good. So we wanted to make sure that the world moves in a direction where if you are doing good to the world, you make more money. So, you know, just to give you a small example, for instance, if you are an electric vehicles company and I'm a diesel company, right? And we are two validators in our blockchain. So there's a higher probability that you get rewarded and I don't get rewarded because you get points for being more sustainable. So this was, we spotted this gap pretty early that, you know, the way blockchain is progressing, once it permeates into every industry, it needs to be sustainable for it to survive, because I think the next wave is going to be humanity. I mean, of course, AI and blockchain is great, but then humanity needs to stay at the center of any technology. So that is why we came up with this.
Guys, the final round of questions. Matt, if you can take us through, where do you see the adoption of AI being much faster, emerging markets, or is it going to be the developed countries?
Well, I think it's disseminating everywhere extremely quickly. I think that I do believe that a lot of the software level problems in developed markets have been resolved, whereas many emerging markets, not all, but many emerging markets are still in the process of digitization. So I think that the adoption curve of AI in those emerging markets where we're still seeing digitization ongoing will be an even steeper adoption curve. So my prediction is that countries like India, countries like Brazil, all across Latin America are going to see extremely rapid adoption, also because consumers are much more digitally native than folks in developed markets. So if I had to kind of predict the curve, I would say that emerging markets are going to see even more rapid adoption of AI agents, also because there's so many more inefficiencies across the economy on average than what we're seeing in developed markets.
Ren, in the financial markets for emerging markets, do you see these markets, you know, leapfrogging a generation to adopt them much faster than the developed countries?
Absolutely, because like leapfrogging is a key in adapting to the new technology. And I think whenever you say the digital bank, it's only about some nice user interface, user experience. But now the banks are branching out to like including like consumer financing, the second-hand, the car financing, and so many different areas. And then the integrated solution by using AI. And then this will be only empowered and ensured by the AI will be of crucial importance.
Pratik, do you see blockchain getting used much more in the industrial and manufacturing sector in some of the emerging markets?
Yeah, I mean, if you look at the manufacturing, right now there is a lot of leakage till the time from manufacturer to the retailer. So I think the whole system need to go on the blockchain. I think a lot of fashion brands have already started to do it. A lot of watch brands have started to do it to prevent counterfeits. Even in healthcare, to prevent counterfeits, I think the whole manufacturing would ultimately move on the blockchain. So that's obviously, I think, already started to happen.
Gentlemen, it was a pleasure talking to you. Thank you very much.
Thank you, gentlemen, and thank you, Saji, for moderating that very fascinating conversation. Overall, it's going to be AI, which is going to be central to building the brands of tomorrow, and not just AI, but emerging markets like India as well. On that note, it's now time for us to switch our focus to our next conversation. It is about all that we've discussed till now as well. It's going to sort of take up from that too, because if the past decade has taught us anything, it is this, that uncertainty is no longer episodic. It is structural, geopolitical shifts, technological disruption, economic volatility, and the rapid acceleration of AI are redefining what leadership truly means. So it's not just about building the brands of today, but leadership as well. The question is, what does it take to lead in such an era, and what skills must tomorrow's CEOs cultivate? More importantly, How must strategy evolve when change itself is the only constant? Our next session, ladies and gentlemen, is about leading in an age of uncertainty, skill, strategy, and the CEO mindset of tomorrow. This brings together two distinguished academic leaders who sit at the forefront of shaping global and Indian leadership talent. Please join me in welcoming Sergey Guriev, the Dean of London Business School, an internationally respected economist and thought leader on global markets, governance, and institutional resilience. In fact, he is going to be in conversation with Raj Singh, Vice Chancellor of Bennett University, an institution that is, of course, at the forefront of preparing India's next-gen industry-ready leaders. May I please now request Mr. Raj to kindly come up on the stage. Mr. Singh, if you could please come up on stage and kindly carry forward this discussion. The stage is all yours, Mr. Singh.
It's such a pleasure to talk to you, Sergey, this afternoon.
Thank you very much, Raj. Thank you very much for inviting me. It's a great pleasure and honor.
Good afternoon, everyone. Ladies and gentlemen, the 10th Dean of London Business School, Professor Sergey Guriev, a highly respected academic, an economist, a thinker, a commentator. He is a public intellect and policy voice across the world. Professor, I glanced through your work, and whatever I could understand, I've tried to summarize, and I hope I represent what you have done. If I look at your work and the intellectual contributions, it shows how modern authoritarian power works and sometimes distorts economies, and why political freedom and economic prosperity are deeply intertwined. You're undoubtedly the most suitable person to talk on the topic this afternoon. Last almost 1 year, we have seen some of the most engaging geopolitical discussions. They've been as captivating as the Bollywood thrillers in Indian context. They've been as prosaic as they've been poetic. There's so much to talk on what has happened and how it sets a direction for the future. But let me start with a few questions which I have listed. And the first one will talk about the decision making. In the age defined by geopolitical shocks, AI disruptions, and fragile supply chains, how should leaders cultivate epistemic humility without appearing indecisive?
Yes, thank you very much, Raj. And once again, thank you, the organizers of the Global Business Summit, for inviting me. For LBS, India is the most important country in the world. Actually, we are a global business school, and we make sure that among 6 students in a study group, we have at least 5 nationalities. So we cannot have any more than 15 or 20% of any nationality in the study group, in the MBA program, in any program. And India is actually the biggest nationality at LBS, driving our success. And for us, having a great contribution to Indian business success, to the business community which is driving this country forward, is an important part of what we are doing. As a dean, I report to a governing body, the board, and I have 2 Indian board members, Mr. Kumar Birla, who is our alumnus, and another alumnus, Raj Rao, who is a president and chief operating officer of Global Infrastructure Partners and member of Executive Committee of BlackRock. So for me, coming here is very, very important. Answering your question, Raj, is difficult because indeed we have this decade of disruption and century of change. So change is indeed something that leaders need to embrace. At the same time, you need to provide a long-term vision. And this is the most important trade-off every leader faces. Without dictating your vision on everybody, because if you dictate your vision, you also lose the incentives and empowerment of your colleagues, of your team, to contribute to the innovation and agility. So how can you actually encourage both agility and innovation on one side, which is needed because, as you rightly said, last year we saw so much change, so much uncertainty. As an economist, I can tell you that we know how to measure uncertainty, and so last year was unprecedented uncertainty. We've never seen that much uncertainty in global economy and US economy for that matter. And at the same time, you combine agility and innovation with a long-term vision and guidance. And the only way to do that for any leader is to be honest with your colleagues and explain to them, this is what we are, this is what we are not going to change, whatever happens, and this is what we can change, how we innovate. And for example, when I think about my own organization, London Business School, I'm saying, we are a global business school, we'll always be a global business school. We are an academic rigor excellence institution. Whatever we do, we want to produce new ideas, new research, thought leadership at a very high global frontier. We are also close to real business, and this is what we are, and this is what we are not going to change. But how we teach, what we teach, where we teach is something that we are happy to innovate, because the world is changing and we need to change with this. So being very clear on what is the long-term vision, what is the DNA of the organization, and what needs to be innovated, changed constantly. I think this clarity and transparency is very important.
You have more or less answered my next question, which was about the central command and control versus decentralized intelligence of the people being used. As a follow-up, may I ask you, can there be some institutional mechanisms wherein you can update the beliefs quickly without compromising with the strategic coherence?
Yes, on centralization, decentralization, and updating the beliefs, I think one other thing is the world is not only uncertain but also complex, something that you referred to, geopolitical shifts, trade wars, accelerating climate change, AI disruption. So the world is not just moving fast, it's also complex. No single individual can solve all the problems and provide all the answers. So you must seek feedback. You must make sure that your colleagues, who are sometimes better informed than you are, at least on some issues, feel that you are listening to them, that their feedback will be taken on board. And this is where command and control versus decentralization and updating your belief happens. You have to seek the feedback proactively. And this is, I'm sure people in this room would sympathize with that. That's actually not easy, especially when feedback is critical. Sometimes CEOs are saying, I don't want to hear about problems, bring me constructive criticism. If you bring me a problem, bring me a solution as well. But the problem there is, if problem emerges in one part of organization, solution may actually be produced in another part or even outside the organization. And it is role of the CEO to bring those things together and not say, if you're bringing me a problem without a solution, I don't want to listen to you. And that, of course, is psychologically very hard because you get a lot of negative information. We have a problem here, we have a problem there. It's your job to think how to orchestrate the different parts of organization to provide a solution. And you get a lot of critical information, negative information, which is hard, but this is what the job of CEO is. You need to encourage and actively seek negative feedback. You need to encourage people who bring you problems to do that as soon as possible. And this is, you mentioned my work on authoritarian leaders. Authoritarian leaders usually don't seek negative feedback, and this is very dangerous for organizational success. So I think actively seeking critical feedback, actively signaling the problems, encouraging people who signal the problems is something that you really should do.
So more consultative kind of decision-making is what you recommend, where you can harness the talent of every team member.
Yeah.
Beyond analytical and technical expertise of the CEO or the leader, what are the inner qualities you would like to define for the CEOs of tomorrow?
Right. I think this is also the time where trust matters so much. I talked about long-term vision and agility, and the world is changing so fast that it's very easy to lose track of the long-term guiding star, if you like. And to instill trust, you need not just to declare what the culture of the company is, what your guiding star is, but to practice it on day-to-day basis. So the trust comes not from what you say, but from what you do. And if you do one thing and say another thing, you undermine trust. And I think this consistency is very, very important. The other thing is courage to make decisions. Now, we also live not just in the world of complexity and uncertainty, we also live in the world of social media and radical transparency. So you make a mistake, goes viral, you lose your job. Especially as university leaders, we know that. Being a university president or vice chancellor today is very hard. It's actually very hard for headhunters to find new university presidents. Nobody wants to be a university president these days. A lot of university presidents are losing their jobs. Columbia University is now through 4th president in 3 years or 2 years. So why? Because social media disseminate information about mistakes very quickly. So a lot of leaders think, I should be slow and cautious. I should not make bold decisions, because if I make a mistake, I lose my job. And of course, it's wrong, because the world needs bold decisions. Your organization needs decisions because the world is changing. So what you need to do, you need to make decisions, but you also need to explain to your colleagues why you're making this step. Saying, this may be a wrong decision exposed. Ex ante, this is the logic, this is the argument, this is the evidence I've collected to make this bold step. It's a risky step, but I'm making it because the organization needs to make a decision, needs to change. And once you are transparent about this, and once you have the trust of your colleagues that you're doing that not because of your ego, not because of selfish reasons, but because you want to benefit the organization and move it further in pursuing its mission, then you can be forgiven even if the decision is a mistake after the fact. So I think this courage to be transparent about being able to make decisions which are risky, I think it's very, very important part of the CEO's mindset today in the world of uncertainty and transparency.
Thank you. It's a great answer, I believe. This takes me to my next question, which is somewhat related. You know, we are passing through the periods of uncertainty which generate collective anxiety among the people in organization. How should leaders communicate during volatile times like the ones we are facing today in terms of distinguishing transparent reassurance and false optimism? And how can the leaders avoid becoming either alarmist or complacent?
That's a great question. And for example, my colleague said, Sergey, when you say that this is an existential threat to our organization, don't use the word existential, because it's false alarmism. Even if the threat is very important, say substantial threat. And also tell us how you're going to tackle it, because the world is the world of shocks. Some of those shocks are very difficult. Now, I should tell you, LBS is doing well. We'll be very high in the rankings published on Monday. It's very likely that we'll be in top 5. I'm not allowed to say in which position in the world. We are #1 in the executive education in the world. But still, we are facing a lot of headwinds. And we have to be very honest about those headwinds. And the way to be honest is to collect whatever evidence you can collect. Some of this evidence is quantitative. Some of this evidence is subjective. So we need to make a leap of faith. We are at the frontier, so the things we are doing has not been done before. So by definition, there is no market analysis that can inform me when I want to try out this way of teaching with AI or teaching this program on AI. This is innovation which is groundbreaking, so there is no past evidence to back it up. But whatever evidence you can collect and honestly discuss, you have to be honest about this. At the same time, about optimism. When you talk to your colleagues in the organization, at the very top level, the decisions you are making is not, these decisions cannot make everybody happy, right? Because eventually it's about allocating resources across priorities. This colleague believes that their division is most important. The other colleague believes their division is more important. And you need to allocate resources across priorities. And this is what CEOs are paid for. And once you make this decision under scarce resource constraint, you will make somebody less happy. And this is the nature of CEO's job. And this is what we communicate to colleagues, saying, look, when we walk out of this room, unfortunately, some of you will be less happy than you expected. And once you're honest about this, once you identify trade-offs and tensions, I think this transparency helps you to make those difficult decisions.
Great. I think it's all the more difficult in academia, particularly to convince people, you know, yeah, where everyone has very, very strong opinions at times. You know, in 90s, we saw when we moved from GATT to WTO and more towards globalization. But the happenings of last 1 year indicate that we're moving away from globalization to more bilateralism, if I may use the word. How should CEOs design strategies when the rules of the game themselves are changing? Sanctions, political risk, regulatory shifts, technological discontinuities. How to trade off between optionality and efficiency as a CEO or the leader in the organization?
Right. I'm still a big believer in globalization, and it's not a coincidence that I'm Dean of London Business School, which is a global business school, which is especially important today because when other institutions, especially American institutions, are forced to retreat from multilateralism, globalization, institutions who care about global classroom really are important for bringing students and faculty from all over the world to learn how to work and study together, because the future of business is still global, whether it's through multilateral deals or bilateral deals. And I fully agree with you that last year was very difficult for people who believe in globalization. But if you think about this, India is in a very different space because it's a big market already. But if you're in a small country, and an average country in the world has 6 million people, population, right? What can you do in innovative space when your market size is 6 million people? You cannot innovate. You cannot develop a big new breakthrough product or service. You cannot invest in R&D. So globalization is really critical for including people living in smaller countries into this innovative mindset. And in that sense, access to big markets is really important, and I would like to salute the Indian government again for signing those breakthrough trade deals in recent months. Because it also matters not just for India, but for smaller European countries. And I live in a reasonably mid-sized country, UK, but it's also, UK market is still too small if we want to have breakthrough innovation products and services.
Even though time is up, but I think we both, being from academic institutions, the talk may not be complete if I don't ask a question. In this AI education reset which we are facing these days, what kind of changes you believe we should bring in the academic institution like ours, particularly maybe with reference to UK and India?
Right. Sorry, we are out of time, so I'll be very brief. So the rise of AI is a huge disruptor to education system. And to answer this question very briefly, a lot will be automated and moved online because of the rise of AI. And so we need to focus on part of the process which is not automatable, which is human connection, sharing insights, networking, bringing people whose knowledge is not yet in the chatbot, which means research active faculty and top practitioners to the classroom to talk to students, sending students to outside of classrooms to organizations or to global trips so they can learn how India operates. And we send students every year to 25 locations in the world. In order to get a degree from London Business School, you have to go on one of those one-week trips and get a grade for this. And we actually send students every year to India as well. Whatever is not digitized and automatable will have to remain the product, the service that education institutions need to focus on. Experiential learning, interaction in the classrooms with top peers and with top practitioners and top academics. This is harder to automate. Thank you.
Thank you so much. An absolute
Thank you, Ram.
pleasure talking to you.
Thank you.
Thank you so much.
Thank you. Thank you, Ram.
Thank you very much, gentlemen, for taking out your time and speaking on the topic as far as how we explore business education, strategic thinking, and leadership development that must evolve to prepare the world that is defined by complexity and constant transformation. But when we speak of global growth today, that is now being rewritten and is being shifting when we speak of the trade corridors, strategic tariffs, supply chain realignments, and a renewed emphasis on economic security. And in this evolving landscape, trade is no longer just about commerce. It is about diplomacy, resilience, and long-term global stability. So for our next session, when we speak on trade, tariffs, and global growth, let's quickly on stage invite, as we are honored to welcome His Excellency Lazar Comunescu, who is the Secretary General of the Black Sea Economic Cooperation Organization and former Minister of Foreign Affairs of Romania. With decades of diplomatic experience, he's joining us on stage, and in conversation with him is Shishir Priyadarshi, who is the President of the Chintan Research Foundation and former Director at the World Trade Organization, a seasoned expert on global trade frameworks and policy negotiations. Thank you very much for taking out your time. Over to you.
Very warm welcome, Lazar. And I love these 15-minute sessions. You can bang on. My only starting point is you should certainly have had the word trade tariffs and global uncertainty. And I think that's what we'd love to focus on, how uncertain is the global trade landscape, and that's what we need to address. So Lazar, let me start straight away, just 2 words. Are we moving towards greater fragmentation in global trade, or are we moving towards greater connectivity like the kinds that you see through FTAs?
Allow me first of all to share with you how pleased and honored I am to be here in this and to have been invited in such an important event like the GBS. And I say that all the more so as I see it in this invitation, not just a pleasure, but an honor to the organization which I have the honor to represent, because that means that here in India, which is actually, it's one of the real engines of growth, globally speaking. I see that there is an interest in the region which I am coming from. And I have to say that there is reasons to be interested in this. When you look into the region which is covered by the Organization of the Economic Cooperation in the Black Sea, you may see that there is a quite important market consisting of more than 350 million people. Not to speak about the fact that this region is, for example, securing more than 20% of the global trade in grains, for example. Not to speak about energy and others. So this is, once again, a reason for which I feel all the more honored to be here today. This is one point. But there is another one, and I'm trying to come back to your question. It happens that this conference takes place almost in the same time with another important international event, which is the Munich Security Conference. But there is talk about mainly hard security. But there is another important point which is linked to this forum over here of New Delhi. One should not forget or not neglect that there is an extremely important economic dimension of security. And this is something which I see as it has been discussed here in these 2 days here in New Delhi. Because how can we conceive security on long term without economic development, without economic cooperation? And here I'm coming to globalization versus fragmentation, which was referred to by our distinguished moderator. I personally, I know there is a lot of talk about the deglobalization, the regionalization, fragmentation, and so on. I would say, as a very good friend of mine in Romania is saying, that what we are witnessing now is not a deglobalization. It's a process of re-globalization. And where through various local, bilateral, regional arrangements, one actually is seeking how to face the new emerging international order, an order which will be based on revised rules, because everybody speaks about the respect of rules and so on. Yes, but those rules established 80 years ago, we have to admit that they have to be changed. Yeah, but they have to be changed through dialogue, not to competition and to imposing from one side on the others.
Agree with you. Economic security probably will lead to other kinds of security. And one security that is right staring at us is that clock, so we'll keep to the time security too.
Absolutely.
Let me get to the nitty-gritty of it. You know, if we went around this room and said in the context of tariff, what is the word in the last few months that you've heard most? And I think it'll be fairly, for me, easy to say, you'd either come up with weaponization of trade, or you'll come up with tariff wars. In any case, what is being struck at the heart of the very, very foundation is the stability and predictability that the bound rates and the MFN rates on tariff that the World Trade Organization had provided. They've just gone out of the window. And I want to ask you, Lazar, that in a world where increasingly you will not have recourse to the dispute settlement system that the WTO provided, You will not have recourse to the MFN rate of duty that they had. So is nearshoring more important or friendshoring more important?
Sorry? What?
I mean, do you want to look for supply chains which is near and accessible, or do you want to look for supply chains that are with friends?
You want to have supply. First of all, it is extremely important. It's part of the security I was referring to. To have predictability and to be able to project economic development, you have to provide for or to avail of sure supply chains. Without that, it's impossible. And from this perspective, I would say that the region I'm coming from, and which is, my organization is dealing with, is of key importance in providing that opportunity or the possibility of having secure supply zones. Why I'm telling that? Because you all know about the fact that in the recent past, there have been a lot of initiatives, important initiatives dedicated to connectivity. Be it BRI, IMEC, Middle Corridor, Global Gateway of the European Union, and so on. But when you look into the map, and we are talking about how to provide for the best links between Europe and Asia. And for Europe, it is essential, because Asia is the center of economic growth today and for the future as well. You cannot avoid but crossing the Black Sea region. Be it about sea transportation, road transportation, multimodal transportation. And this is why we in the organization, we've been trying to promote and to develop projects which may be able to facilitate this, let's say, increase in the security of the supply. There are two projects I would like to mention. One is the so-called motorways of the sea, which is conceived as building up a kind of a network, providing as good as possible links between Europe via the Black Sea, further on Caspian Sea, or downwards via the Mediterranean, Suez Canal, and the Indian Ocean, and coming to India as well.
Lazar, thank you. You've raised 2 points which allow me to then perhaps put 2 questions. You talked about regionalism, and you also talked about trade corridors. Let's start with the first one. Clearly, over the last maybe 15 or 20 years, regional trade blocs, regional customs union, they were very important, just like the one you also represented, the Black Sea. Today, there is probably a greater shift that geographical proximity is not required, and you could have a trade cooperation with countries which could be, the closest distance could well be through the center of the earth. So you tell me, how important is geographical proximity to this whole concept of regional cooperation? And second, in a way related, can you have regional cooperation now between blocs? I mean, rather than just between countries, you create blocs and then they create the regional cooperation. Lazar.
Well, I will start with trying to make a comment on the last part of your question, and because what I see is first of all, regional cooperation, be it formalized in organizations like the one which I represent and others, because there are a lot. This proved to be a good instrument for developing cooperation. Because, regional and among neighbors cooperation is good as far as it is based upon really a fair approach. Because here is another aspect which I want to stress. We all recognize that competition has been an engine of growth. But when that competition is a fair one, and not used or looked at as an instrument of domination or control by some. And from this perspective, developing regional cooperation, especially when it comes to countries which are not big countries and so on, this is a way how to be able to compete in a competition with the bigger actors. And from this perspective, you see, the European Union is now searching kind of, let's say, under the current circumstances, it's aiming at, of course, first of all, deepening the integration inside the European Union, but also establishing predictable and stable and secure links with other parts of the world. And the recently signed free trade agreement between the European Union and India is just one example. There are many others as well. But regional cooperation, I see it as a way through, to make the best possible use of the resources locally, but at the same time of finding the best possible way of interlinking with other regional organizations or other important markets or countries.
Sure, sure. No, thank you. Thank you for then talking about the India-EU FTA. In fact, in any economic discussion in the last few weeks in India, initially the India-EU FTA, and I think more recently the India-US trade agreement, of which perhaps slightly lesser details are known. But on this point, and perhaps I have a small view myself, do you think with the kind of increasing number of free trade agreements that countries are having, do you think this will weaken the global multilateral trading system, or do you think it will actually strengthen it? And I'm not sure.
I am tempted to say that, in a way, I was alluding to this in my previous comments. I see all these initiatives, efforts, free trade agreements, or regional, let's say, platform of cooperation, as modality to adapt at the same time to, to create opportunities so as to face what would be a new international order. And this is, in my opinion, where we are. And because sooner or later, as I said already, despite many comments which may be contrary to what I'm saying, globalization is there, and interdependencies will become even stronger, especially in a period of digitalization. We've been listening to this today and yesterday. By the way, the Prime Minister was yesterday stressing how important it is, the revolution which is coming up with the digitalization. Digitalization means what? Practically increase of interdependencies. But here, there is one point which is extremely important to be taken into account. It is not just interdependencies among countries. Among the role of non-state actors is also increasing. This is what I see as the core of the new international order, finding an appropriate networking or a framework where you have governmental actors, state actors, but also non-state actors. Because at the end of the day, when it comes to business, whatever governments may decide, plans, initiatives, projects, and so on, if you don't have, you have to have somebody to implement it. This is the business, the entrepreneurial community. And that's why, in my opinion, bringing in entrepreneurial community, not just in the implementation of projects, but also in the shaping of decisions and plans is quintessential.
No, actually, I couldn't agree more. I don't know what all of you in the audience think. That globalization actually leads to interdependence, which over the last 2 decades had actually been thought to be a good thing. But there are, certain actors, certain major actors who are actually, I would say, weaponizing interdependence. Yeah. If I'm dependent on you, then they want to extract a price. And that perhaps, again, hits very much. But that is a subject we can carry on discussing. But I'll take up the last point about, specifically, that governments may, create agreements, government may sign agreements, but it's finally the industry, the business, which has to trade. So how important do you think is the role of people like here, who are all business leaders, who are industry leaders, who represents India's growth story? How important is their contribution towards the success of any free trade agreement that a country signs?
No, to say important is, I would say, too little. It's extremely important. And by the way, you may wish to know that it is not by mere chance that within the structure of the organization which I'm representing here in front of you today, we have established also a business council. A business council which consists of what? Of representatives of the business companies in each of the member states of the Black Sea Economic Cooperation Organization. And since I've been Secretary General of this organization, I've tried to make this business council to assert itself as the real promoter of and the one who is creating opportunities for cooperation among the governments. So the role of the business is quintessential.
Brilliantly said. I mean, he said, let I use the word important as too little. We've got to find another adjective for all you gentlemen and ladies in the room. But listen, I mean, we are all, I know, and I'll branch off only for a minute into Hindi. You know, my name is Priyadarshi, but today all of you need to be Doordarshis to determine what next to do. So the real question, I think, is important. We need to be prepared for the future. And as we were talking outside, if every crisis is to be seen as an opportunity, then perhaps what global trade has seen in the last few months is the opportunity to plan ahead. Any thoughts on that, Lazar?
And all these agreements which we were discussing, they are the proof that there is an awareness in this respect. And these agreements, long-term agreements like the one which has been signed, were signed also by India. Yesterday, the Prime Minister was referring to the fact that only in this year there was 5 agreements which India has signed with other actors. This is something which projects how one should evolve in the future. And this is the best possible instrument under the current circumstances. Until, as I said, all these instruments, a new, let's say, set of rules governing the international economic cooperation will become operational.
Thank you. And as we come probably towards possibly the last, or maybe we might have one more question, let me preface the question by something that our Commerce and Trade Minister said very recently. Minister Piyush Goyal, I think, said 2 things in the context of globalization. He said India, when it negotiates, must not negotiate as a $3 or $4 trillion economy, but must negotiate looking far ahead when we hope to be a 10 or a 15 or a 20 trillion. You know, that's the vision you should have. That's the mindset you should have. And related to this, the other very important point he made was that no country can fully develop without integrating itself into global economy. And if you look at the way the Southeast Asian countries about 20 odd years back rose, so I want to ask you how, and maybe that could be your comment here, how important do you think is to look ahead in the kind of growth that we want, and how important it is to integrate through globalization?
Well, look, that's what we've been trying to do, including in my organization. You may be surprised to hear the fact that despite everybody knows that for 4 years already, this region of the Black Sea has been confronted with a war. But nevertheless, and this is the important element which I want to bring to your attention, we've been able, exactly because there is, despite of the fact that we have war, there is an awareness about the need to look on the long term. And this enabled us, despite all these difficulties, to come up with a new Black Sea economic strategy agenda, which is projecting, defining the lines of action of cooperation in this part of the world for the next decade. So it's in this way that I see how to prepare for the future.
Lazar, thank you so much. I think that's been a phenomenal conversation we've had. It's probably allowed us to touch on about a dozen issues, each one of which we could have spent many a moment. A few words just to conclude this session. What others do, we have less control. So therefore, let's try and take our own future destiny in the context of global trade in our hands. And finally, I must say, the stronger the multilateral organizations are, the more stability and predictability we'll provide. And therefore, rather than seeing what is happening as a turmoil, perhaps we should see this as the most important occasion for a reform in multilateral institutions.
And building upon what has been done so far, but also take into account lessons learned. Why, for example, the organization you've been working with at a very highly qualitative way, in my opinion, the World Trade Organization has to be revived, and so as to allow these organizations to become what it has to be, the one which helps having really a global ruled order in terms of economic trade and cooperation.
Perfect. With that word and hoping that India leads the reform and India leads the new change into WTO, ladies and gentlemen, let me join you in thanking Ambassador Lazar.
Thank you.
Thank you very much, gentlemen. As both of you have explored the future of multilateralism, the impact of tariffs on global growth, and how emerging economies can navigate at an increasingly complex trade environment. A big round of applause, ladies and gentlemen. Thank you very much for joining us here on stage. Let's move on and talk about, in today's hyper-connected world, the consumer brands are no longer being confined by geography. The most ambitious founders are now building with a global mindset from day one, leveraging digital distribution, data intelligence, and sharp brand positioning to scale across borders. But what truly separates a strong domestic brand from a global powerhouse? Well, it is capital, culture, community, or clarity of vision. This is going to be our next session all about, talking about beyond borders, turning consumer brands into global powerhouses. That dives exactly into this topic. Please join me in welcoming Anant Narayanan, who is the founder and CEO of Brand.me, formerly known as Mensa Brands, and my colleague Sumita Karir will be handling this session on stage. So please welcome on stage, as the topic of discussion this afternoon is Beyond Borders, turning consumer brands into global powerhouses. Sumita, over to you.
Thanks, Amita. Hi, Anand. I believe you have a flight to catch.
Yes, so thank you for accommodating me a little early.
Right. Right, but I'm looking forward to this conversation that we're going to have. In fact, the guests just before us, they were talking about multilateralism, trading blocks, and of course disruption all across the globe. So when we think about building brands from India for the world, the current kind of global disruptions that we're seeing, are you looking at them as opportunity, and do they further sort of restrict the expansion of Indian brands into global geographies because of the kind of increasing protectionism that we've seen and the end of globalization, as some would say?
Yeah, so I don't think globalization is going to end. Firstly, by the way, thank you for having me. It's an afternoon session post-lunch, so thank you all for paying attention, and excited to be here. I think there's a 20-year opportunity to build consumer brands from India. We've done it in IT, we've done it in pharma. I think we can do it in consumer brands. Why? Because now you can understand consumers from wherever they are in the world. So consumer data is available, so that's one level playing field. Distribution is more democratic. You don't need a distributor to go distribute. For $3, $4 you can get to India. For 120 rupees you can get it to most pin codes in India, right? So distribution is democratic. And marketing is very different now, because you build on community. So I think there's a big opportunity. Now, I think geopolitics will play a role. I do think India is positioned very well. I mean, yesterday we heard our Honorable Prime Minister speak, and I think there is a big opportunity with the EU, which is already clear. I think there is an opportunity in the US. I think there's certainly a massive opportunity in the Middle East. And I think if Indian founders of consumer brands can start thinking global from day one, why can't we build a large billion-dollar consumer brand or multiple billion-dollar consumer brands from India, which hasn't been done before?
So why haven't Indian entrepreneurs not been able to build a solid consumer brand, even though we are seeing sort of startups venturing abroad? You have the likes of Ola, Urban Companies, Zoho, PhonePe, among several other companies which have expanded globally, but not one single consumer brand.
No, so I think, look, I'm an entrepreneur, so I think more positively than journalists. So my belief is,
have to give us realist
so
answers.
my belief is you can, and I think that's why we've started Brand.me. But why hasn't it happened before? I think it wasn't a very easy level playing field, I would say. If you're big, you can market better, you can appoint a distributor, you basically are able to set up operations. I think those barriers are coming down now, and therefore I think it's an opportunity. I think that's number one. But number two, I would say it is difficult. I think it's a long, long journey to build global consumer brands. You need to understand consumers in a different geography. You have to package for it. You have to get the feature right for it. But look, we have 3, 4 brands which are now market leaders in the spaces that they play in. They're niche spaces, but I think you can build global brands.
So when you say that it's difficult to build global brands, but in India, we are consuming a whole lot of global brands here.
Yeah.
I mean, America has built fantastic brands. Europe has.
That's right. And I think, therefore, for the next 20 years, why can't we build? And the reason I think, so going back a little bit to my original point, I'll give you an example just to make it more real. One of our brands is called Majestic Pure. Majestic Pure is essential oils, right? We do an aromatherapy and wellness brand. India has always made a lot of essential oils. You know, we have a lot of manufacturing. We actually export it in bulk, but we have never built a brand. The largest brand is, like you rightly pointed out, an American brand called Young Living, which is $1 billion brand with 25% EBITDA. Now, we are able to get to the same product quality, better design, at a much lower cost. And I think the US is also now opening up to a mass premium Indian-made brand. And so we have now built a $50-60 million brand in 2.5 years, which is growing very rapidly and really competing with Majestic Pure, with Young Living, right? So I think it's possible. It's going to take time, but I think if you have ambition and you're disciplined about executing, I think you can get there.
Would you stick your neck out and give a timeline?
Sorry?
Would you stick your neck out and give a timeline?
To get to $1 billion of revenue, I think all of brand.me, which is 10 brands that we have, we hope to get there in about 7-8 years, right? We are a $200 million business now. So I think it's possible. Individual brands, I think, will take between 7, I don't think you can build brands in less than 7 to 10 years. So it is a patient execution game. But I think you can get large dividends by building out great brands because they're very defensible over time.
Absolutely. It's a patient game, and of course, patient capital is something that is also needed. I was talking to a bunch of CEOs. That's essentially the view that they held. But Anant, your company, I mean, you've been the fastest to achieve the unicorn status in 2021. You've acquired 20 companies, consolidated them into 10 companies, all in the space of healthcare, wellness, and lifestyle. And you want to now build an Indian version, India's very own HUL. You want to be the HUL of India, right? But what is your strategy going to be, and what is the timeline that you're looking at for ensuring it?
No, I think, look, I think you described it well. It's a digital version of Unilever that we want to build, or a digital-first version of Unilever that we want to build. I think if I look at what are the core skills that are different in this new world, if you look at a classic FMCG company or a classic brand, which is more offline heavy, what matters is where are you placed, right? Which shelf are you placed in? If you look at the new world, what matters is where do you come in the first 4 swipes of your mobile phone? So the growth hacking of how you actually appear on that shelf is very different. And so one thing that we do, and I think do differently, is we are very tech first, and therefore our ability to think about ads, pricing, visibility as technology products across consumer brands so that you appear on shelf, if you will, which is the first 4 swipes, is much better. We pay less for it, and that allows us to grow faster. Second is, if you think about brand building, I don't know when was the last time you basically thought a large actor endorsed a brand and you thought it wasn't an advertisement, right? I think that era has also changed. I think now people want to sort of buy brands that their friends recommend, that the community actually recommends. And that requires having an online reputation and being able to manage that much better, different skill than before. I think these are the 2 new ones. The core of it, however, is getting to develop great products, which I think now you can develop with data much better than you did before. So one example, right? We actually are able to get into the shelf in 3 to 4 months a new brand, right? Or a new ingredient. So when we see a trending ingredient, let's say you see rosemary hair oil trending, right? We see it in TikTok before it goes to Amazon, before it goes to Walmart. So there's a progression. If you pick that up quickly and you're able to get it on the shelf very, very quickly, that's a structural advantage. So data-led product development, community-led marketing, and tech-led growth hacking, I think are the 3 different skills that I think are required for success now. And that's what we're trying to build at brand.me.
Do they, I mean, all the factors that you've mentioned, do they essentially trump what offline brands may face in terms of challenges related to expansion, whether it's related to exports clearance, or perhaps regulatory challenges in other countries?
No, so I think cross-border trade is still cross-border trade. I think those issues, risks still stay. I don't think that changes, right? Because, look, we actually have 50% of our revenue coming from outside India, and some of it from the US, some of it from Europe, some of it from the Middle East. But we actually still have to go through the same issues. One of the things that we have all learned over the last 6-9 months, and the previous speaker was speaking about it, is resilience of the supply chain. So the ability to quickly adapt a supply chain to a changing geopolitical structure and tariff is an important skill. And I think that's needed for all consumer brands, whether it's offline or online.
Let's also talk about the policy support that, the government has extended, especially even as we want to become the topmost startup ecosystem across the world. We're currently at number 3 with over 100,000 registered startups with DPIIT. But the government essentially announced a 15% safe harbor rules for data centers. There was also a tax holiday for that. 1 lakh crore in R&D investments, a 10,000 crore fund of funds. Is that sufficient to sort of give that, sort of capital cushion to companies, given the fact that that is one thing that startups and new age brands, which might be doing exceedingly well, but, lack of access to enough capital is something that they voiced over and over again?
So, look, I have a contrarian point of view. Okay. I think there is enough capital available for good ideas and good entrepreneurs. I think, in fact, I do think the advice I would have, at the risk of sounding, I think it's important to be capital efficient, and we don't talk enough about capital efficiency. I think most businesses in India that have been built over decades have been incredibly capital efficient. Many startups haven't. I mean, I used to be in Myntra before and, MedLife and so on. So, but I think it is important to actually be capital efficient. So I would say if you have a regulatory framework that's predictable, that you can plan around for 3 to 5 years so that you can design supply chains, I think that's what's required. And then I think, of course, the ease of doing business must get better, which I think the government is working on. I think capital, if you have a great idea, you have a great team, and you have initial traction, there's always capital available.
Well, I'll sort of differ from you on this point, given the fact that many in the deep tech and robotics, that ecosystem, it was very, very difficult for those founders to get capital initially.
No, by the way, that's completely true. I think I was speaking about less capital needing businesses like the ones that we are building. I think for deep tech and anything which is very deep and heavy on R&D, one needs.
All right, so the buzzer is gone, but I'll just take 30 seconds of more time because I have a rapid fire to do with Anant. Anant, let's get started. One consumer brand that you wish you had built first here in India.
I think pet care.
Okay, one Indian snack you believe deserves worldwide domination.
Dosa.
Whether that qualifies under the snacking category or not, we're not sure.
No, I think it does. I'm South Indian, so.
Your guilty pleasure consumer brand that you personally love way too much.
Sorry, say that again?
Your guilty pleasure consumer brand that you love a lot.
Don't know. Something in chocolates. Yeah.
You have to answer that.
You don't have a brand. Don't have a brand.
No, there is no other option, right?
Yeah. Anyway, let's keep going. Yeah.
Okay. The most unexpected place you've discovered a great consumer brand.
I think, look, India, I mean, when we bought 20 brands, like I told you, I met 800 founders.
It can be out of your fold, right?
No, I'm saying it wasn't, there were many brands that we didn't buy. But I think we met a lot of founders. And I think if you look at parts, tier 2, tier 3, tier 4 towns of India, I think people are building some great brands.
Which ones would you be betting on?
In lifestyle, in various categories. But I think people are building some great brands, right? So, yeah.
Do you want to mention some examples?
No.
Okay. Last question. The most unexpected place you've discovered a great consumer brand.
That's what you asked just now.
That was about geography. This is the most unexpected place.
When you say place, what do you mean?
Well, you're open to sort of interpretation.
I like, again, just going back, I think the heads up for tails and what they've actually built. I'm a pet parent, so I think they've done a fantastic job of building up a brand.
Absolutely. And it is these very homegrown brands that are giving tough competition to legacy brands. And Anant, you are also one of them doing that rather successfully. So congratulations to you on that.
Great.
And lovely speaking with you.
Thank you so much.
Thank
Appreciate
you.
it.
Rapid fire was rapid indeed, Sumita. Thank you, Mr. Naran. Thank you to you as well. All right, this is going to be even more interesting, what we're going to talk about, because in this summit that has now been shaped largely by macroeconomics and capital flows, it is also worth acknowledging that societies interpret change through multiple lenses. Now, India's traditions of astrology and Vastu have historically offered frameworks for understanding cycles, alignment, and even timing. And in these modern enterprise environments, many individuals draw on cultural and philosophical reference points while navigating uncertainty. Now, these systems coexist with data-driven decision-making that offers psychological grounding in periods of rapid transformation. And as economies modernize, cultural frameworks adapt. This conversation that reflects on how traditional wisdom continues to inform perspective in a world that is defined by disruption. Please join your hands together, ladies and gentlemen, in welcoming Dr. Jay Madan, astrologer of global acknowledgement and authority in Vastu, the conversation that will be headed by Ms. Navika Kumar, Group Editor-in-Chief, Times Now and Times Now Nav Bharat. Please give them both a big round of applause. The ladies shortly will be joining you on stage. Well, this is your cue, ladies and gentlemen. Big round of applause for Dr. Jay Madan and Ms. Navika Kumar joining us on stage.
Thank you, Amita. Huge round of applause, ladies and gentlemen. I'm very proud to introduce to this august audience here a woman who's made her mark. A woman who tells us about our astro karma. A woman who tells us about easy everyday spirituality, and all of us want to know how to peep into the future. Well, I don't see a crystal ball, but she can see it in her own way. But above all, somebody who has given great importance to mental well-being and how that is so important in today's day and age. Thank you very much, Dr. Jay Madan, for joining us here at the ET Now Global Business Summit.
Thank you so much for your kind words, and thank you for these lovely listeners, all of you here. Thank you so much for being here. Thank you.
We know in India, everybody wants to peep into the future. So I want to know from you, is astrology really a business line?
What do you say, guys? Is astrology really a business line? We are talking about financial year 2030 to be reaching globally a $20 billion industry. Is it not a business? This is something where you're happy, you want to know whether this happiness will last. You're sad, you want to know when is this going to end. You're sick, you have a baby at home, you're buying a house, you're buying a car, you're buying a mobile number. We are needed every time.
I thought Rahu and Ketu were problems that we only saw in India. Are you saying global business, Rahu, Ketu?
So the industry, astrology, or what do we say as foretelling, is the industry that got a lot of boom from COVID time. It wasn't this blossoming the way it is because of COVID, because uncertainty, that is something the era taught us, that anything can happen anytime, and that uncertainty made it a very digitalized system. You know, the astrologers who were sitting outside the temple were now on your phone. So it is giving a lot of employment to people. We're already at 1 billion, right now, as we talk about, and it's growing, and the kind of data you get to know, you see only people between 20 to 35 are the people who need clarity on A, their career, second, their love life. 80% of the issues are this.
Love life and career. Well, only people between 20 and 35? Do all of you here in the audience not need to know how to peep into the future? How many want to peep into the future and are not in the 20 to 35 age group? Actually, very few. Everybody wants to know.
Astrology and astrologers are like doctors of Botox. Everybody has it, perfect. And then say, I don't believe in it. This is all natural. This is the agony with us.
Okay, yeah, we don't admit it. We are cool. We don't want to...
It's natural. The success, I only owe what I do. So that's how it is.
Fantastic. So, Jay Madan, I want to ask you, is this knowledge? Is this a God gift? Is this a skill set that one can acquire? How does astrology as a science actually work?
So this is something which comes maybe somewhere around mentioned 4,000 years ago. Astrology, as J.P. Morgan says beautifully, that astrologers are not meant for millionaires, it is meant for billionaires. Because it was never a science which was for regular, ordinary people. It was only for the kings. The palaces were designed, the cities were designed, the temples were designed. An ordinary house was not designed. Thanks to the invasion of Turks and Britishers, the only good thing that happened with that is that the science got fragmented. It reached to common people. It was only meant for rulers. So this is how the kind of Vastu we talk about or we discuss about, it is not meant for regular people because they had no imagination that 5,000 years later, there'll be a building, people will live over each other, there'll be apartments. This is not the structure at that point of time. So it was just designed for bigger structures. It is something which is coming down the generations, not just ours. I mean, globally, in Western, Mesopotamian, I mean, you see there are little signs of people doing cloud gazing and talking about the future. So this is something, if we are humans, we are talking about insurance, we are talking about future, we're talking about 2047. You are actually peeping and building future. And why would you not reassurance? We work like weather app. When you're going to Singapore and you know it's going to rain, you're not going to walk with your white pants on and no umbrella. We are just here to guide, not to predict. If you are taking prediction as an addiction, that's your problem, not ours.
Well said. So let me ask you, what does your crystal ball tell you? Where is the world, where is the world headed? Geopolitically, we're seeing wars going on in different parts of the world. Everybody more so looking at their own country and their own nation's well-being rather than the world's well-being. Where do you think this is going?
Yesterday, I was appreciated very briefly by Prime Minister because
Absolutely.
I only say good things. So I don't want to answer this and make everybody go, little cuckoo in the room and saying that again. Because the moment we talk about predictions, whether it is life or the country, they cannot be 10 on 10. It cannot be always good. Of course, as we spoke back in November, talking about things getting better for us from March onwards. We see the way we are going with America. We did a great deal with EU. Great times for India ahead. Next 7 years, our country, I mean, the Prime Minister says 3, I see in 7 years reaching #2 economy. That'll be where we'll be stated as. We Indians are mentally entrepreneurs. You go to a village, you see a pan wala, you see a vegetable hawker, you see somebody serving in train. This is in our blood, and he's just giving us more opportunity to perform well.
He says 2047 Viksit Bharat. How do you see it?
I say सोने की चिड़िया.
वो तो थी उड़ गई.
वापस आ जाएगी. सारी birds migrate कर आती हैं, ये भी आएगी.
Okay. All right. So let me ask you, the real market of astrology, as you said, it's big business, and by 2030, it's going to be 20 billion. We see a lot of apps coming up trying to predict. Are these apps operated on knowledge, or is it AI which is replacing the real science? And will you be telling us predictions in the future or some app?
So astrology, or let's say astrologers and doctors, are very much relatable. If you have stomachache, you'll pop a medicine, it'll be fine. For 15 days, if you have stomachache, you're not going to ask your chat GPT, what should I take? You're going to go and visit a doctor. Similarly is every field where we need personal touch, reassurance. We need human emotion to be involved in it. And astrology is not something where people come for physical issues that, oh, I have this disease. They do come for that also. But it's majorly emotional. It's majorly mental. And I think a human touch would always be needed. AI can be fun, but it doesn't give you reassurance. It doesn't give you that comfort. Not for 10 years from now. That's not what I see.
So you're seeing issues of mental health, stress. I mean, there is a lot of stress. I mean, I think, I don't know about other people, but news profession, very stressful. All of us probably can't do with AI. We will need guidance. But speaking from here on, stressful lives, what's going to happen in unstable world. Are you seeing mental health and astrology, the way you look at it, as very deeply connected? Is health and astrology connected?
I'll answer it in 4 parts because you I think, have put in all the questions together. News industry doesn't take stress, it only gives stress. You open a news channel and you'll say, "Main zinda hi kyun? Why am I even making babies? Why am I even alive? What is there good in life?" There's no good news, it's only bad news. So you have to be very
For the good
selective.
news, you have the MyGov app.
For good news, we only see Navika, and then you see good leaders being shut up by a woman, and you say, "This is fun, I'm going to watch this." So I don't miss her show because for me, that is women empowerment. So hats off to you, Navika. Coming back to mental wellness, you know, I study manifestation more than astrology. And because all of you are here and you're giving your time, just a small secret, because I like sharing what everybody can practice in life. Your words create world. You know, the words that you speak create world. Each time you say something, the brain takes it so damn seriously. Now, this happens in 2 ways. If you get up in the morning and if your phone says snooze, it plays snooze and you press the button, each time you press snooze, the first thought, your subconscious mind is super active and it says, "You know what, don't take this one seriously. Whatever goals you have in life, your brain will say 50% discount, this one cannot achieve anything." So your brain is a damn serious separate entity than what you are. The moment you say stress, it knows that this is the kind of feeling which is very relatable. The more you say stressful, it makes you more stressful. Since I'm 43 right now, 17 years.
Not many women give their age away.
Yeah, well, I'm 43 and I have a 21-year-old daughter. But with that, since 17 years back, I've been only sleeping for 4.5 years. Holiday, sickness, whatever, maximum 5 hours. Never in my life I've slept over than 5 hours. Hardly any dark circles, nothing. Just meditation and right words. So the whole idea of what you tell to this one, it takes it very seriously. This has no sense of humor, you know, it's a damn serious thing. The more stressful you keep saying, the more keeps happening. So mental wellness and astrology are very much connected. We are now talking about psychologists and therapists and all that. Let's go 100 years back. Where were therapists? Where were psychologists? These were simple counselings we received either from Dadima, from Vedji, or from astrologers. So we, as the matter of fact, astrologers are doing more placebo effect, comfort and mental healing than anything else. So astrology and mental wellness are very much connected.
So Jayji, you said, you know, manifestation is something that you believe in. Okay, how does one manifest? How does one do it? If you can give us a simple example.
So let's understand the biggest power we have is our mind, because no matter how good looking you are, how fit you are, how rich you are, how sharp you are, if you suddenly fell off the stairs and you go into coma, everything else that you have is alive but useless. So something which is here is the most powerful tool we have. Now this tool is active at 2 points of time very strongly. When you are in the moment of taking a nap, which is usually afternoon nap or before sleeping, or the moment you're up in the bed and trying to wake up. That is the time your critical brain, conscious brain, subconscious brain, and critical brain, which accepts and rejects every idea that you give it to. That brain is what you need to convince in life. Manifestation is how many of you have ever read or heard Hanuman Chalisa? I'll say 2 lines and just see that if you remember. Asht Siddhi Navnidhi Ke Data. Yaad hai? Which says, Asht Siddhi Navnidhi Ke Data. One who can give you 8 powers and 9 kinds of wealth. Well, a lot of billionaires have 9 kinds of wealth. But which are these 8 powers we are talking about? The 8 powers are different powers that we all can acquire, but we never question, so we never receive. 2 of these powers are Prapti Siddhi and Prakamya Siddhi. Prapti means that I want this and I will have it. This is law of attraction. And Prakti Siddhi is law of attraction. And Prakamya Siddhi is talk about law of surrendering. Where you receive. Manifestation happens when you actually receive, not when you want to receive. How many of you pray and ask for God, please give me strength? We can be honest, you know I'm a face reader too. So when you ask for strength, you actually ask for struggle. How else in your life will you display your strength if you don't have challenges? So each time you say a word, there is a caveat at the back of it. We don't realize it, it's okay. But the moment you say, itni shakti hame dena data, he says, le beta struggle bhi le le, because shakti dikhayega kahan? Shakti pradarshan ke liye stage bhi to chahiye.
तो क्या मांगना चाहिए बता दो. शक्ति मत मांगो भाई, साथ में स्ट्रगल आती है. एक के साथ एक फ्री.
Manifestation happens with right words, because that's where you created the world when you said mama, papa, aja, tata. So the first thing you should ask is grace, because when you're under an umbrella, everything is taken care of. Like when you're a small baby and your father lifts you and jumps you up in the air, you only smile. Ab koi kare to aap pe bharosa hi nahi hoga ki mujhe catch karega ki nahi karega. Kar bhi nahi paega. But that faith, see, we as astrologers, we do one simple thing. We take the energy, any consultant, be a good doctor, a good astrologer, a good lawyer. We take the energy from hope to faith. When you are watching an India-Pakistan match, abhi bhi hone wala hai na? I don't follow cricket. Now suppose there is this match going, last over, India needs 10 runs and only 1 wicket left. You're very hopeful that if Virat Kohli is batting, India jeet jayegi. But when you're watching that match, your body language will be like this. You're squeezed, you're like constrained. Hope itself means 50-50. If you know it's the last over, India need 3 runs and we have 4 wickets in hand, you'll watch like this. Because faith has expansion. A good consultant takes you from hope to faith. That is what we all are doing. Coming back to the question, manifestation happens through 3 simple ways. Right time, you know the time now, before sleeping, or the moment you're up from the bed. It happens through ritual. That means when you write, your brain absorbs what to do. It follows the instructions when you write something. The third thing happens with repetition. If you keep repeating things again and again, this one says that this is truth. There was a research that happened at Bye-bye, guys. I won't extend. This last word, a research that proved that when you fake something, your brain thinks that this is true. So I hope you all have beautiful, manifested, successful, happy, joyful lives. This is my prayer for all of you today. Thank you.
So next time we don't have to say Shakti, we have to say grace. Okay, and one more magic word.
Happiness, because that's what we need at the end of the day.
So grace and happiness and manifestation will begin to happen. But I know the bell is rung, but anchors always take extra time. May I be indulged for 2 more minutes? And Jayji, I want to ask you, how does one actually make peace? Is peace something that we should ask for? Contentment and peace, ke nahi?
So contentment is actually an enemy of ambition. Only when you are grateful and you are ambitious is where you are happy. So that balance one has to maintain, that you have to remember how far you've walked, how far you have to walk. So that ambition and gratefulness, when walked together, is where satisfaction happens. And that should not be for too long. If you're too satisfied, trust me, you'll be too useless. So make sure that satisfaction is not 1/10 of your day. That's it. Rest of the time, you've got to keep your gears moving and on and about.
Life ka naam jaddo-jahad hai, to lage raho munna bhai. But quick rapid fire. How long do you see Prime Minister Narendra Modi being where he is?
If you ask me, wo already amar ho gaye hain. So he is not going to go from the history. It is just about the physical thing. A lot of astrologers do predict they see him going this year, that year, this year. I see him completing the term, if that is what you meant.
And the next? I thought 2047 tak aap bata dein.
मतलब अगर हम उनके टेलोमेयर सेल्स बढ़ा दें तो ये संभव है.
Rahul Gandhi, will he ever be Prime Minister?
I like the guy, but he's just in wrong profession.
Wrong profession. What would you rather have him do? Martial arts?
No, I would imagine Rahul ji, because we've worked out together, we've been in gym together, and he's a nice guy. But he should be into a hotel industry, restaurant industry, media. He can do excellent with media.
My God, my job is in danger, not Modi's job is not in danger. My job is in danger. Is that what you're predicting?
Modi ji's luck, look at it. Opposition with Rahul Gandhi. I mean, unbelievable.
Well,
and I like the guy. Please record it. I really like the guy, but he's in wrong profession.
Do you see next few elections coming? Want a little bit of suspense to go from there?
Bengal will be magic. Rest, I don't want to spread the beans and
Bengal
spill the
will
beans.
be magic. Something is happening there.
Already started.
And Tamil Nadu भी फिर बता ही दीजिए.
ये देश अपना ही है. आप समझ नहीं रही हैं. 2 साल में कहीं से आवाज ना निकली है, ना बिहार से, ना तमिलनाडु से, कोई आवाज ही नहीं निकली है. देश अपना ही है.
देश अपना है, बिल्कुल, and future अपना है. And if you have some...
For all of you, if you think I'm pro-BJP or if I'm pro-Modi ji, I'm pro-my country. Anybody who governs for the country, for the people, is my hero. कुर्सी की इज्जत अपनी जगह है और व्यक्ति की इज्जत अपनी जगह. I respect his mindset for us as people. Yesterday he was here, I was there. He got emotional saying कि अगर मैं 2047 की बात करता हूँ, अगर हमारे आज़ादी के लिए लोगों ने बोला होता कि मैं क्यों मरूं, अगली पीढ़ी अपने आप देखेगी तो क्या हमारा देश आज़ाद होता? He had tears in his eyes. I respect the love for the country, and I am for my country. Anybody who does anything for my country will have my heart, my brain, my soul, everything. He does for my country.
Well, on that note, thank you very much, Dr. Jai Madan. As always, wonderful speaking with you. And big round of applause, ladies and gentlemen. Manifest with the right words and peep into the future with the travel from hope to faith. Thank you very much for joining me.
Thank you, ma'am, for moderating that session, and thank you very much, Ms. Madan, for that very fascinating and fun conversation, of course, giving us a glimpse of what is to come forward in 2029 elections as well. But ladies and gentlemen, it's now time for us to move on to our another session. This is going to be on Uttar Pradesh's journey to a $1 trillion economy. In fact, Uttar Pradesh stands at the center of India's scale story. Its demographic weight, infrastructure expansion, and industrial policy focus positions it as a pivotal contributor to national growth. The ambition to build a $1 trillion state economy reflects a long-term structural strategy, and that involves logistics networks, manufacturing clusters, agricultural productivity reform, and fiscal management. In fact, translating this potential into durable economic power, that requires administrative coordination and capital discipline. In fact, for this very session, may I please welcome on stage Mr. Deepak Kumar. He's an IAS and who's going to be in conversation with Hina Gambhir, news editor, Times Now. Hina, may I please request you to come up on stage along with Mr. Deepak Kumar.
Thank you, Sumita. Good afternoon once again, ladies and gentlemen. Mr. Deepak Kumar, pleasure to have you with us today. We're going to be talking about the journey of Uttar Pradesh from potential to powerhouse, the journey to $1 trillion economy. So, Mr. Deepak Kumar, Uttar Pradesh, we know, has set a rather ambitious target of becoming a $1 trillion economy. What are the three, in a way, biggest structural shifts that are going to make this aspiration achievable?
Good afternoon, everyone. And it sure is a privilege to be here and slightly intimidating also. We are all aware that Honorable PM has set us a target of $5 trillion economy. And Honorable CM in line has also set us for UP a target of $1 trillion. UP so far about a decade back was contributing 8% to the national economy, which has now gone up to 9%. And obviously, Honorable CM says that we constitute 17% of the population, and we must punch higher. We must contribute commensurate to our population. And if you see the growth rate, and especially the post-COVID growth rate, the nation has been growing at roughly 14%, and UP has been has achieved about 16% of growth rate. So while the national growth rate is itself very awesome, the acceleration of UP is very noticeable. So the intent is there and the content is also there. You asked about the three sectors.
Yes.
The structural changes that have enabled this, or that we are projecting. So the first one, according to me, is the instilling of rule of law. Our CM is a strict disciplinarian, and he wants the rule of law implemented. And the first beneficiary has been the law and order. And I mean law and order not in a very restricted sense, but in a very institutionalized sense, in the sense that the police has better training, the response time is less, the equipment, the vehicles, they are upgraded, the institutions are firmly in place, the prosecution is better, there is no zero tolerance to crime. So this is the base. Now beyond that, we have a world-class infrastructure. Many must not be aware that UP has 55% of the expressways of India. Naturally, the largest road network, the train network is there. We have 16 airports. 4 of them are international. The 5th one to join as an international airport to be commissioned will be Jewar, which will be the largest in Asia. And obviously a whole ecosystem will come with that. Also that dedicated freight corridor, UP owns about 33% of that. 33% of it will be passing through UP. So we have very good connectivity. The National Water Highway number 1, that is in UP. We have 6 metros. The 7th Meerut Metro will soon be operational. So connectivity-wise, we are number 1. Land availability-wise, we are very good. We are working on about 75,000 acres of developed industrial land.
Okay.
So infrastructure and land is there. We have the best of the policies. We have 34 sectoral policies. You name the sector, we have a policy for that. And we also learn from the other states. If they are giving any incentive or concession, we adopt that. And ease of doing business is there.
Okay.
We are a front-runner state. And the third aspect, if I was to choose, was we provide a big consumer base. Every 6th Indian is in UP. So we obviously have a large consumer base. And if you look at that, the fact that the per capita income has gone up, has doubled from about 56,000 to 1,25,000 in the last 9 years.
Right.
So that also provides you the buying capacity.
So essentially you said law and order, that has improved. Second, policy support. And third, of course, is the consumer base that the state of Uttar Pradesh really provides.
Yeah.
Infrastructure, like you mentioned, has been central to UP's transformation narrative that we are talking about. Expressways, you mentioned about them, airports, logistics parks. Can you also tell us a little bit about how the infrastructure that we are witnessing, infrastructure growth, that's translating into actual industrial investment and eventually job creation?
We see what is visible to most of the observers is the development that is taking place in NCR. And the most prominent one is obviously the electronics industry. Again, many people may not be aware that 55% mobiles are made in UP. About 60-65% electronic component is manufactured in UP. And this is what meets the eye. But you see all up across all the sectors, whether it is primary, secondary, UP has made sizable progress. And we see this happening. We have defense nodes. The 2 defense nodes that are in India, one is in UP. So from small ammunition to large ammunition, small guns to large guns to BrahMos, they are manufactured in defense corridors. We have integrated manufacturing and logistic hubs, 27 of them. So all along the expressways, we have developed industrial nodes. So that has opened up our state. The opportunities are everywhere. And in all the sectors, be it the food and agro processing industries, or defense, aerospace, or the new renewable energy, or the new and emerging technologies, semiconductors. Next week, one semiconductor facility will be operationalized in UP.
Okay.
So all these sectors have come up well. Okay. So you cannot say that only one sector or some sectors are prominent. Some sectors may gather more limelight, but all sectors are progressing, including the traditional sectors like textile, leather, leather shoes, leather goods, non-leather goods. So there is commendable progress in all the sectors.
Okay, so you've given us a sense of the kind of sectors that you are focusing on right now that can help UP achieve the aspiration that it has. Now, investors today also look beyond incentives and policy support. They also look at execution, speed. How has UP improved ease of doing business in terms of clearances, land availability, and then most importantly, dispute resolution?
Our Honorable CM is very particular. He says speed is the new incentive. So in this environment when most of the states are coming up with excellent concessions and subsidies, obviously, if the investor has to choose, speed is one of the things. As I said, ease of doing business in UP is in focus. From 12th position, we have come to the front-runner state. If you see logistics or good governance, any index that you take, export preparedness, we are at the top. There is a special provision that when an investor comes to UP, there is a Udyam Mitra. He is a kind of relationship manager, and he is especially trained, experienced people. They handhold. So from the time an investor expresses his intention to invest in UP, there is a handholding, and it is at officers level also. And Honorable CM himself monitors all this. There is a CM portal, and there is a easy access. All the investors who have worked in UP or who have any intention, who have met the CM, realize this, that they have direct access to the Honorable CM. So I think that is well taken care of. Ease of doing business is there. And as I said right in the beginning, rule of law also means contract enforcement. And we have eased that. We have eased the business guidelines, the building bylaws. Recently, UP was judged the best in deregulation, decriminalization. There are about 577 provisions that were decriminalized. So all this shows that we really care and we have taken measures to improve things.
Okay. Talking about agriculture sector now, that still employs a large part of UP's population. How do you see the transition from agriculture-led livelihoods to value-added agro-processing and rural industrialization?
About 65% of our population is still dependent on agriculture, and it contributes about 26% to our economy. And that is the main concern, because everyone cannot be involved in industrialization. Everyone cannot shift to manufacturing, and yet agriculture has to be given the primary role. So what UP has done is taken a lot of steps. One is diversification. UP as it is the leading producer of wheat, rice, potato, sugar cane. So that is there, but what we are promoting is diversification, moving into other sectors, dairy, pisciculture. Also, there is a World Bank project going on. About 4,000 crores have been invested in that. That will provide a platform for farmers for easy access to credit, to market, and the problems that they are facing. So they will have a platform. The startups, the techs, the agro-tech companies, they will get a platform to directly engage with the farmers. Also, all the connectivity that I talked about, that is making things easier for the primary producer. So they have ready access to the nearest town, or they have access to the airports. Now, Varanasi and Jewar, they will be developed as mega food parks. So the producers of the farmers, they can directly be exported.
Okay.
Also, we have a lot of agro-processing units coming in. There are incentives for that also, right, from 35% going up to 70%. So a lot of industries are coming, and the farmers are getting better prices for their produce. The produce that was earlier going west, like parali, that is being processed now, and farmers are getting a price for that.
Okay. Last question. What's the vision for UP 2030?
For 2030. See, we already are top 3 state economies. So by 2030, we will definitely be in top 2. In manufacturing, we are in top 5. We will be in top 3. In exports, we are top 5. We will be in top 3. And I said, right now we contribute 9% to the national economy. We'll be nearer to our $1 trillion goal. Also, we will like our youth to be better skilled. They will be job providers, not job seekers. We envision more participation in labor force by women, more empowered women. We have many schemes going on. We have Lakhpati Didi, wherein women are empowered. A special credit is given to them. A special training is given to them. And with all these industries coming up, UP will obviously be there at the top.
Well, absolutely. Good luck with that. And thank you very much, Mr. Deepak Kumar, for joining us today. Wonderful speaking with you. Thank you very much.
Thank you. Thank you, everyone.
Thank you very much, Mr. Kumar and Hina, for moderating that session. And let's move on then to our next session. This is essentially on entrepreneurship in rising Africa. In fact, with a very young population, rapid urbanization and expanding digital penetration, the continent is reshaping assumptions about growth and innovation. And that is something, ladies and gentlemen, that the next session is going to be focusing on. We will be calling upon stage Ms. Amo Ubudu. She is a media mogul, philanthropist, and founder of Ebony Life Media. In fact, her session is going to be focusing on Africa's entrepreneurial landscape that has emerged as one of the most dynamic frontiers in global enterprise. May I please request Ms. Abudu to kindly come up on stage? The stage is all yours, ma'am.
Hello, hello, hello. Good afternoon, good evening, everyone. It's wonderful to be here. This is my very, very first time in India. The hospitality has been first class. I want to say a big thank you to the Times Group for inviting me. I think representation is really important. And one of the reasons why I'm actually here today is I looked at the agenda and the lineup of who was going to be speaking at this event. And I noticed that there weren't any black women, because I do my research. There were no black women on the list. There were no Nigerian women on the list. There were no African women on the list. And I said to myself, it was important for me to be here to speak on behalf of my sisters, because sometimes we're never seen. And it's really important for us to be in the room, because I know how hard we work. I often say that for a black woman to be recognized and to be celebrated, she literally has to work 3 times harder than her white counterparts. But what that also does is that it prepares us to go out there and to give everything 100%. We tend to, once we get into the room, we tend to excel at absolutely everything that we do. So my thanks again to the Times Group for inviting me. And the topic that I've been asked to speak about or requested to speak about is entrepreneurship, you know, in a rising Africa. And those words are very dear to my heart, because rising Africa, we truly are rising. And then entrepreneurship, I literally believe that every African is actually an entrepreneur within themselves, you know. And Africa is not short of either of those assets. We're rising, we are entrepreneurial, and we give everything that we do absolutely 100%. And Africa cannot be ignored anymore. You know, so to all of you today, I want to suggest that if you don't already have an African partner in any business that it is that you're doing, I suggest and I strongly recommend that you find an African partner, because truly the continent can't be ignored anymore. We're no longer emerging. We really are at the forefront of everything, you know, and some of those issues and some of those challenges that often we're presented with have become our superpowers. I have found that I, as Mo Abudu, have created this enabling environment. I've created Ebony Life, you know, the group of companies that we have created simply because of the challenges that exist within the media space, but it's become such a superpower to me. Now, some of the superpowers that we have on our continent includes the fact that we are 1.4 million people. We have the youngest workforce in the world. The median age of an African right now is 19. So if you're looking at your future workforce, and if you're looking at your future consumers, they are going to be in Africa. So again, I suggest to you that if you aren't already trading or doing business in Africa, it really is time for you to look at doing so. We're driven by the gaps that we see, and that's what fuels us as entrepreneurs across the continent. There's rapid tech hubs in Lagos, Nairobi, Cape Town, Kigali, and also in Nigeria, in Lagos. Now, again, we're not short of natural resources. When you look at 70% of the world's cobalt comes from Africa. Lithium, copper reserves, of course, oil and gas, especially in my dear country, Nigeria. Diamonds, emeralds, rubies, sapphires, you know. 70% of the world's cocoa comes from Africa. Coffee and tea, also, a large share of that also comes from our continent. But what I am happy about exporting to the rest of the world, which we have consumed for the longest time, is media. Now, I set up my media company about 20 years ago, and this is a little bit of the case study around what I'm going to be talking about today. I'm talking about case studies. You know, Harvard Business School did a case study on my company 2 years ago. We're the first African company that they've done a case study on. They did case study A, and they've done case study B. And coming up sometime this year is going to be case study C and case study D. And what gave me, you know, the courage and the inspiration and the willingness to take part in, you know, in that study was that it's important for our stories to travel. We have for the longest time consumed Western media. You know, we've left it to them to tell us who we are and that our stories come from their perspective. But what about us taking some responsibility and some ownership for our storytelling? Yes, Nigeria is one of the largest producers of film on the continent, very much, close to the number of films that Bollywood are doing. There's Hollywood, there's Bollywood, and of course there's Nollywood. And for me, what I'm inspired about is that looking at those gaps in our society and saying, how do I begin to fill those gaps? So I was born in England, raised in England. You can almost say that I'm probably an unofficial ambassador, for Africa and for Nigeria. And I decided when I was literally turning 40 that it was time for me to move out of my 9-to-5 job, which was working in an oil and gas company as head of human resources. And then I decided that I wanted to get into the world of media. And I set up, as an entrepreneur, the first Pan-African talk show. I've interviewed so many important people around the world. And one of the interviews that was very dear to my heart was when I interviewed Hillary Clinton. And one of the questions that I asked her has actually been instrumental in what I would say has contributed to my success today. I said, how do we change the stereotypical views that the world has of Africa? And she said, Mo, more and more people like you need to be speaking on behalf of the continent. And that made me realize that I needed to move beyond just doing a talk show for the continent. I had to move into a bigger space and create an ecosystem. And that ecosystem that I have created has identified all the key gaps that we have. And as an entrepreneur, many people have referred to me as a serial entrepreneur because what I have done is to look at those spaces. So the Ebony Life group of companies includes capacity building. We fully understand that our filmmakers need to be fully trained. So we have a creative academy in partnership with the Lagos State government, and it trains up-and-coming filmmakers in about 8 different topics, from script writing to acting to directing to producing to cinematography and so on and so forth. And then there's Ebony Life Media, where we produce films that showcase our continent, which is so important for people to see. We need to be in charge of the narrative. Times are gone where we've left the storytelling to the rest of the world to tell us who we are and to make stories about us. We need to make stories about us that we can share with the world. Another part of our ecosystem is Ebony Life Place. If you're ever in Lagos, Nigeria, you've got to come to Ebony Life Place. We have a lovely boutique hotel. We have amazing cinemas. We have restaurants and event spaces that are absolutely first class. People often come and say, wow, is this Nigeria? At times I beg to differ and I say, wow, what do you expect to see in Nigeria? Because the image of what often is seen is the worst of our continent. Now, the streets of America aren't all paved with gold. But what we tend to see is the best of America in a lot of the movies that are made about America. So we also have to take some responsibility for that narrative. A part of our ecosystem is also distribution. Now, I took it upon myself that it was important for me I've worked with Netflix for a number of years, and we'll continue to have a partnership with Netflix. But I also know that there's a gap. There aren't that many streaming platforms that come from the continent. So I took the bold step, about maybe 24 months ago, that I wanted to launch the Ebony Life On Plus streaming platform. And please, the app is available in the Google Store or the Apple Store. You may wish to download and have a look at how amazing the platform is. And what gives me great joy is that when I look at our data, literally 49% of those that have subscribed and have become members of our platform are in the diaspora. So that tells you that there is really a market for wanting to take on African content, for wanting to see our stories told, for wanting to see our music and our fashion and our traditions and everything that is represented on that platform. So that gives me great hope. Another part of what we're doing at Ebony Life is we're working with a group of DFIs on launching a film fund. Because we know that the only way to scale the film industry across the continent is to make films at scale. If you make a film that's this big, your return on investment is only this big. If you make a film that's this big, your return on investment can be that big. So this film fund, I'm hoping and praying, will launch before the end of this year. And that would really give us capacity and the ability to be able to make films that can even be showing in a local cinema right here in New Delhi or Mumbai. I've had several conversations with part of the Times Group on us looking to see how we can even collaborate on an amazing story that I have that's actually about an Indian family and a Nigerian family, and I'll leave the rest to be told when you come out and you see that amazing film that I hope we do get to make. But today, it's just to share with you all that entrepreneurship is rising across the continent. Even when everything isn't right, entrepreneurs rise to the challenge and they make it right for them to ensure that they can really, truly, and wonderfully be a part of that ecosystem, no matter what professions they find themselves in. I'm really proud to be a Nigerian. I'm proud to be an African. I'm proud to be a part of this. Africa really is rising, and that we are at the forefront of doing really, really great things. And thank you so much for listening to me today. Thank you.
Thank you very much, Mo. It's been a very inspiring journey to hear from you. Thank you very much for joining us. All right, ladies and gentlemen, let's move forward and talk about innovation, especially when it comes to the Japan World Trade Bridge. Global trade that is now being reshaped by new corridors, supply chain recalibration, and also strategic alliances. Japan continues to remain central to the high-value manufacturing, advanced technology ecosystems, and precision industrial networks. And as India strengthens its manufacturing ambition, the India-Japan partnership acquires a new structural importance. Trade innovation today has extended beyond tariffs to regulatory alignments, investment facilitation, and also technology collaboration. To explore how Japan is now positioning itself in this evolving global architecture, please join your hands together in welcoming Akiko Okumura, who is the Executive Vice President of the Japan External Trade Organization. Good afternoon, ma'am. The stage is yours.
Good afternoon. Thank you for your introduction. So thank you very much for taking the time to join us today. My name is Okumura, and I'm Executive Vice President of JETRO, Japan External Trade Organization. Today, I'd like to speak about the current state of economic relations between Japan and India, and the direction in which cooperation between our two countries should move forward. Let me begin by emphasizing that the economic relationship between Japan and India has clearly entered a new phase, both in scale and quality. Historically, the Japan-India relationship has been driven primarily by manufacturing, particularly the automotive sector. This remains an important pillar of our partnership today. At the same time, in recent years, the relationship has evolved beyond this into a more strategic and multi-layered partnership. This evolution is driven by growing awareness of economic security, as well as increasing synergies between Japan and India in advanced technology fields. In addition, Japan faces a serious domestic challenges as population decline accelerates and securing highly skilled talent becomes increasingly difficult. Under these circumstances, cooperation with India is no longer just about market expansion, but it's becoming a vital element in sustaining the Japanese economy itself. Furthermore, beyond large corporations, Japanese small and medium-sized enterprises are now increasingly looking to India, marking a new phase of expansion. Japan-India cooperation has expanded beyond making India to what can be described as making India make for the world, reflecting a growing global perspective to position India as a manufacturing hub. India is no longer merely an investment destination for Japanese companies. India is increasingly becoming a global export hub and a key platform for expansion into third countries, including Africa. Just the lady Mo
mention about that. So currently, around 1,400 Japanese companies are operating in India. At the Japan-India Summit meeting between Honorable Prime Minister Modi and Honorable Prime Minister Ishiba in August last year, our leaders set a new target of 10 trillion yen in private investment into India over the next decade. I believe this target reflects strong expectations and deep mutual trust in the future of our economic relationship. While the automotive sector, led by Suzuki, Toyota, and Honda, has traditionally been the core, Japanese investment in India has recently diversified across a much wider range of industries. These now include electronics, industrial machinery, chemicals, food, logistics, and financial services. As a result, economic security, high-tech collaboration, and people-to-people ties have emerged as new pillars beyond investment alone. JETRO conducts yearly surveys of Japanese companies operating overseas. According to our survey, more than 80% of Japanese companies in India indicate their intention to expand operations. This is the highest level among all countries and regions surveyed. For Japanese companies, India remains and will continue to be a destination for proactive and forward-looking investment. India's investment environment has several clear advantages for Japanese companies. First, its overwhelming market size and growth potential. Second, relatively competitive labor costs. Third, the ease of communication, particularly through the widespread use of English. At the same time, challenges remain. These include time-consuming tax and administrative procedures, rising labor costs, and constraints in infrastructure. JETRO continues to support Japanese companies on the ground, including efforts to address these challenges. In the field of economic security, JETRO, CII, and the Japan Chamber of Commerce and Industry in India jointly developed an action plan in August last year. This is a new framework built on the analysis of the strengths and vulnerability of both countries. It is based on three key pillars. The first is expanding investment in strategic sectors, in key sectors such as AI, semiconductors, solar power, and batteries. I am confident that Japan and India can create strong synergies by working together and building on each other's strengths. The second is strengthening cooperation in the technology and innovation. By bringing together the respective strengths of Japan and India in technology, research, and innovation, we can create significantly greater value. In this context, the expansion of Global Capability Center, or GCCs, and increased investment in research and development in India are particularly important. India has already established itself as a global hub for IT, engineering, and R&D. For Japanese companies, India is increasingly becoming not just a cost-efficient location, but a strategic partner that plays a central role in value creation and innovation. At the same time, to ensure that such cooperation is sustainable, it is essential to promote strong intellectual property protection and prevent technology leakage. Creating an environment in which innovation can be developed and shared with confidence will further strengthen mutual trust between our two countries. The third is enhancing collaboration in human resources. The expansion of human resource collaboration, which will shape the future of Japan-India relation, is also important. By promoting personal exchanges among private companies, universities, and research institutions, we can go beyond simple knowledge transfer and move toward genuine co-creation. The accumulation of these human networks will form the foundation for long-term technological cooperation and industrial partnership. As I have mentioned earlier, the scope of cooperation between Japan and India has become extremely broad. When Honorable Prime Minister Modi visited Japan in August last year, more than 170 MOUs were signed at the Japan-India Economic Forum organized by JETRO and others. These slides shows the sectors covered by those MOUs, and as you can see, they span a wide range of fields, including semiconductors, IT and AI, hydrogen, startups, and healthcare. The next stage is to translate these agreements into substantive collaboration in advanced industries. I believe it is clear that Japan-India relations are entering a new phase simply by looking at the expansion of these areas of cooperation. Everyone here would agree that there is little debate about utilizing India as a global export hub. From India, Japanese companies are increasingly expanding into Africa and other third country markets. India's role as a trusted economic partner will become even more important the years ahead. Here I'd like to explain how we can leverage Indian talent and intellectual infrastructure through 4 key points. The first point is the talent exchange. Japan is currently facing a serious challenge in securing highly skilled talent due to population decline and aging. To address this gap, we aim to connect world-class Indian professionals with leading Japanese companies. This will enable a sustainable and mutually beneficial circulation talent for both countries. The second point is academic linkage. We will promote joint research in deep tech fields through collaboration with top Indian institutions such as IITs and IISc. At the same time, we will build sustainable recruitment pipelines with a long-term perspective. Industry-academia collaboration forms a foundation for long-term innovation. The third point is GCC utilization. We position India's global capability center not merely as outsourcing bases. They will be leveraged as strategic innovation hubs for R&D, digital transformation, and global operations. The fourth point is regional exchange. We will promote practical cooperation between local governments in Japan and India. by attracting and developing highly skilled talent, including IT professionals. We aim to address acute talent shortage in regional areas. Through those 4 initiatives, we will further deepen Japan-India economic cooperation with people at its core. So, okay, and finally, I'd like to talk about Japan's contribution to India. Key KPIs which highlight Japan's key contributions to India. Japan is a key partner for India in investment, infrastructure development, and human resource development. Cumulative Japanese FDI amounts to approximately 2.7 lakh crore rupees, with around 1,400 Japanese companies operating in India. Through JICA, Japan has provided long-term support for core infrastructure such as metro system, high-speed rail, and dedicated freight corridors. So, in human resource development, Japan has contributed to the skill development approximately to 24,000 young people based on the Japanese-style manufacturing training programs over the past 7 years. So JETRO will continue to serve as a bridge between Japanese companies and India. So, sorry for the timing. So JETRO anchors its activities in these initiatives, and we will continue to serve as a hub connecting business people, technology, and nations. In doing so, we will support a future in which Japan and India grow together. Thank you very much.
Thank you very much, ma'am, for your insights. Ladies and gentlemen, let's continue with the sessions there. We have few more to go before we put an end to this very historic Global Business Summit 2026. It's day 2 here. That's what we are looking at. And this time, we are going to talk about reinventing legacy brands, keeping purpose, relevance, and consumer trust intact while scaling globally. Now, this is where it happens the most, the legacy brands that carry accumulated trust, but they also carry accumulated expectations. So in an era that is defined by transparency, sustainability, and consumer scrutiny, reinvention now extends far beyond marketing repositioning. Now, it requires supply chain recalibration, product innovation, digital integration, and also governance accountability, where consumers increasingly evaluate coherence between stated values and operational practice. So scaling globally while preserving identity has now become one of the defining leadership challenges of this decade, and to examine how purpose and performance intersect in modern brand strategy, please join your hands together in welcoming Mr. Mike Jatania, who is the Chief Executive Officer and the Chairman of the Body Shop and co-founder of Aurea, which is this stage conversation is going to happen with my colleague Hina Gambhir, who is also the news editor of Times Now. Big round of applause, ladies and gentlemen, in welcoming our guest on stage. Hina, over to you.
Thank you, Amita. Ladies and gentlemen, a big round of applause for the Cosmetics King, as he is called, often referred to as the Cosmetics King. And we are going to be talking about a brand that most of us have used at some point in our life, the Body Shop. It remains, a part of our life. It started about 50 odd years ago. It still remains a part of our life. And Mike is somebody who actually helped the brand rescue. It was on the brink of collapse about a year and a half ago, and he helped the brand come back to life, literally. So let's start first by asking you, in one word, how will you describe the brand Body Shop today and why?
Purpose-led. I would say the Body Shop is a purpose-led brand and has been a purpose-led brand for the last 50 years. So it's deeply rooted in purpose.
And how are you ensuring that that purpose continues? I mean, it started with a purpose, it has a soul, it has an identity of its own, but you have rescued it, you are reinventing it, but you also have a legacy to look after. How is that happening?
Yeah, great question. And it's a pleasure to be here amongst all of you. Let me put it, first of all, into context, the Body Shop, and then answer your question about legacy. So the legacy is 50 years old. It was set up by Anita Roddick in those days, and she set up a brand which she wanted to be a force for change, a force for good. And so she brought purpose to the brand right from day one. Purpose for diversity, purpose for ethical sourcing, fair trade, and a whole range of purpose-led attributes that she wanted to make sure her business founded the Body Shop brand on. Now, in terms of context, it's a brand that's now $1 billion brand, selling in 70 countries around the world with approximately 2,000 stores. So it's a very diverse brand. Legacy brands bring with it a considerable amount of awareness. It's a brand that has got 80% awareness globally. So it's a big awareness. What has it lost over a period? And this is a challenge many legacy brands face. And in one word, you can describe that challenge as relevance. How do you bring back relevance? So the purpose and the legacy is deep-rooted and is not broken. What we need to do is to make sure we bring relevance back into the brand through the product, through the packaging, through the conversation that takes place with today's consumer.
Can you also tell us a little bit about the transformation period that you led? When you took over nearly 18 months ago, the brand was at a very, very critical moment. What was that one thing that required immediate attention, something that needed to be changed, and something that you couldn't really afford to change even if you wanted to?
I would say that, and again, let me put it into context. The Body Shop was a very successful brand that was sold to L'Oreal for 650 million pounds. It was later sold by L'Oreal for 1.3 billion to a South American group based out of Brazil. So big groups have owned it. What happened was, over these ownerships, the soul of the brand was lost and cost crept in. So when we got an opportunity to acquire the brand, it was in a loss-making position, and it had to be put into administration. So we rescued it in June. The first call I got was in June 2024. We completed the acquisition in September, and within the last 16 months, we have done a transformation, driven by multi-layer approach, but cost-cutting, right-sizing the business, changing the ways of working, speeding up innovation. That has allowed us to really get into a very strong, profitable, and cash generation mode now, from which we can now create the foundation for the next 50 years.
But the personal care market today is extremely competitive, and it's a crowded space as well. So what is your vision? What is your goal? How do you plan to ensure that the brand remains true to its identity? Because, when it was created, it had a motto. It made women feel confident in their own skin. But then you have so much of competition today. The space is like it's growing very fast.
Yeah, look, there is no doubt the beauty industry is a very competitive industry, but it is a very big industry, and it is also growing. So one, we've got a category and an industry that is growing, and in many parts of the world, double digit. But the competitiveness there is very severe, I would say. So you have to have real clarity of purpose, a very sharp amplification of what the brand stands for, and then execution of that. And ensuring that you are now playing a game where the rules have changed. You've got bricks and mortar stores, so we've got 2,000 stores, as I mentioned. But today, every consumer does not want to be forced to come to your store to buy their product. They want to buy online. They want to buy through quick commerce, a big growth area here in India, which really started off in India. So you've got to meet the customer where they shop. And I think that, you know, for me, taking the Body Shop into the future is about ensuring, one, the product is great, it's relevant and up-to-date in terms of meeting the requirements of Gen Zs and Gen Alphas who are unforgiving if the product quality or the product promise is not kept. So that's number one. Second, to still remain a brand that is differentiated by purpose and has a emotional connection to the consumer. Otherwise, everything becomes about price and promotion and advertising. Legacy and trusted brands with purpose are not just built through advertising. They're actually built through conviction in those values and living those values.
Okay. I also want to talk to you a little bit about the market that India offers to a brand like the Body Shop. Yeah. Now, in its new phase that it begins in 2026, 50 years it's completing. How do you see India as a market? What kind of plans do you have?
India is one of our top 10 markets, and it's a strategic priority for us. Immediately after taking over the brand, I came to India, and in January, so about 12 months ago, I came here, and I talked about doubling the size of the business. What does that mean? That means going from 200 stores that we've currently got to 400 stores, to increasing our digital sales and being on platforms like Amazon, Nike, and others, to embrace quick commerce, to move from tier 2, we're already in tier 1, tier 2 cities, we need to position ourselves for tier 3, tier 4, which means having the right price points, entry-level pricing. We have to be relevant to the Indian consumer, and we have to also ensure that our products and ingredients have resonance with what the consumers of India want. And it's a big enough market for us to actually develop products for that Indian consumer.
Do you source locally as well? How much are you dependent on local sourcing and the local resources?
Yeah. Generally, the global policy is we source centrally, and India is our first exception, where last year we made the decision to allow a certain proportion of the brand to be produced locally. We call it the India Edit. And I must say that I've been very pleased with the high quality of product that is being produced. In fact, when you look at the product, you cannot distinguish it from a product made in Europe. So, kudos to India for achieving that. And the Honorable Minister yesterday spoke about how the focus is on ensuring that quality is not compromised by Indian manufacturing. And I think that's a very wise move and will place India very well to build billion-dollar brands. I know one of the earlier panels, the challenge was, why have we not built an Indian brand that's a billion-dollar brand? I think that will come, but fundamental to that is having really great quality and ensuring that we are creating brands, not just being behind brands, we're creating brands.
Okay, I believe you have about 200 odd stores here in India?
Correct, 200 stores here.
So any targets that you can share with us, plans for tier 2, tier 3 markets?
We're about a 50 million brand here in dollar terms, retail. We're looking to get that over 100 million. So we have ambitious plans and want to double the business. The market has got the capacity to take it. We have got the ambition to grow to that level and also to add value in the purpose-driven approach that we've got for the Indian market.
All right, and with that, our time's also up. Thank you very much, Mike. Appreciate
Pleasure.
you joining us.
Thank you.
Thanks, Tina. Thanks, Mr. Jatania, for that very interesting session on how to truly build legacy brands. In fact, ladies and gentlemen, our next session is going to sort of drift away from what we were discussing. It's going to be on risk, resilience, and the new global order. Because the new global order is no longer defined by linear integration. It is shaped by strategic competition, energy transition, climate commitments, and technological bifurcations. In fact, risk today is multidimensional. It's financial, geopolitical, regulatory, and systemic. Some of these aspects we have already spoken about over these past 2 days. But resilience, therefore, becomes an organizing principle for governments and corporations alike, diversification or resilience. It requires institutions to anticipate shocks rather than merely responding to them. So from European economic policy calibration to emerging market fiscal realignment, global stability is being reconsidered in real time. And the conversation extends beyond markets to legitimacy, institutional endurance, and structural competitiveness. In fact, to conclude the day, one of the sessions is essentially going to be examining the risk that's involved, the resilience that's needed in a rapidly evolving global order. In fact, this is going to be a panel discussion, so may I please request the guests to kindly come up on stage. Coming up on stage is Dr. Fabian Zuleg. He's the Chief Executive and Chief Economist at European Policy Center. Mr. Zuleg, could you please come up on stage? A huge round of applause, ladies and gentlemen, for the guests. Dr. Ajay Chibber is an economist and former Assistant Secretary General of the United Nations and former Assistant Administrator at the UNDP. Mr. Chibber, a huge round of applause again, ladies and gentlemen. The right, Honorable Sir Vince Cable, he's the former Secretary of State for Business Innovation and Skills and President of the Board of Trade at the United Kingdom, and Professor Crispin Marathi, the founder and chief executive officer, Pareto Economics, inventor of the Global Power Index, is also part of the panel. In fact, going to be moderating this very, very interesting panel is Dr. Pier Stefano Saylor, partner consulting, EMA head of government and public sector, and global lead partner, EU institutions at KPMG. A huge round of applause before we begin this session. Lots of interesting insights expected into trade, risk, and resilience, and how to build businesses that are lasting. It's over to you, Mr. Stefano.
Okay, can you hear me? Good afternoon, everybody, and thank you for having us. It's indeed a pleasure to be amongst an august audience and this eminent panel of global thought leaders. We are witnessing a structural shift from the post-Cold War liberal order, and the new era, as we call it, is defined by geopolitical fragmentation, where the dominance of a single, unipolar Western power seems to be transitioning to a more complex geometry of power, with regional pivots like the Indo-Pacific charting their own strategic priorities. So themes like protectionism, national security, sovereignty, or as someone called it last year, siloism, which is, I think, quite nice, are becoming increasingly popular. However, these are also points of greater risk of prioritizing resilience over efficiency and productivity. So, times like these demand that we have an open and effective dialogue to chart out an optimum way forward. And an open communication between governments, academia, businesses, citizens at large is the need of the hour. That said, I would like to ask our leaders present on the panel today what their perspectives and insights are, and to provide us with an effective way forward. So let me open up the dialogue with the question, what does it mean to be in a multipolar world today, and how do you see the emergence of a new world order? Let's start with you first, Dr. Zuleg.
Thank you very much for having me. And thank you very much for this question, which I think is a very important one, because we are seeing a world which is changing, but I would take the two questions separately. The question of multipolarity and the question of a new world order. Because multipolarity is a reality. We are seeing it all the time around us. But that doesn't necessarily mean that we arrive at a new world order. It is not an ordering principle. It is a description of a reality. And clearly the world is changing. But a new world order implies some form of organization. It implies some form of rules. And there we're actually seeing that, yes, the rules which we had needed to be replaced. Because they didn't reflect today's realities. They reflected the realities at the time they were created. Also because we have to say that unfortunately many of the rules haven't worked very well. They have not produced certainly the security which we wanted. But we might end up in a world without rules, in a world without guardrails, without any form of organization. And such a world is very dangerous. It's dangerous for everybody. It threatens security. It threatens prosperity. It threatens democracy. And I think that's very important, also speaking here. So I think we have to work together, and unfortunately, we now have to work without the US, at least under President Trump, to think about what kind of rules we might want to have for this world. They will be different. They will certainly reflect more of the powers which are there. But unfortunately, I think they will also not be as strong as we have seen in the past. Because if the biggest powers don't play by those rules, it's very hard to uphold them. And that's why it's really important that countries come together. Markani was talking about middle powers. Now, I'm not quite sure where I put the EU, where I put India, but certainly countries which have a shared interest in upholding a common order need to come together and define what these rules look like.
Mm-hmm. Thank you very much. Dr. Chibba, what are your views on that question?
Well, thank you, and thank you very much to the GBS for inviting me here. So I think there's been a lot of Trump bashing of the breakdown of the old order, and it's probably valid. But, you know, people ask, why would a country like the United States, which created the old world order since the Second World War, which has benefited so much from this world order, why would it take a wrecking ball to this world order? And my answer is, you know, it seems quite illogical for the United States to wreck a world order in which it is on the top, and still on the top at this time, although there is greater multipolarity. But the way I look at it is, if you read history, all empires, and we were living in an American empire, whether we like the word or not, Pax Americana since the Second World War. It built all the institutions, the United Nations, the World Bank, the IMF, the WTO, originally GATT. So why would a world power like that, which was ruling the roost, so to speak, break that world order? But if you go into history, you look at the decline of the Roman Empire, of the Mughal Empire, or the Ottoman Empire, they all started rotting from within, and that's how they collapsed. They did not collapse by an adversary taking over. So that's what's happening in the US. You've heard it in several panels here, how divisive that society has become, and how the elite is no longer able to govern effectively in the United States. So you see a breakdown of the world order because you see a breakdown in the leading power of that world order. I want to add one thing on China, because I think China has got a pass in all of this. In fact, people said Chinese must be laughing all the way to the bank. And, you know, there are very little Chinese representation here, but I do want to say that China has had a pretty big, important role while they portray themselves as the defender of multilateralism. pretty important role in the breakdown of this world order, because it is Chinese who have played the institutions of this multipolar world very effectively to their advantage. If you recall, they controlled the WHO. When the COVID struck, they got a free pass. At the WTO, if you are ever in a business which has had to file a complaint against China in the appellate court of the WTO, you know that even if you win, you will lose, because the Chinese will find a way around you. In the IMF, they have had an underappreciated currency in China for a very long time. So even after the United States restricts imports from China last year, in 2025, China had a trade surplus of $1 trillion. So what I'm trying to say is that the breakdown of the world order is not just due to America, it is also because other players were not playing by the rules, or they were gaming the rules, so this world order had to collapse. Now, what will come in its place, we don't know. But I think, as Mark Carney said it in Davos, and I think what we heard also from the Prime Minister yesterday, countries like India must find more and more trade deals with countries that are not China. Because with the Chinese, it's heads I win, tails you will lose. So the trade deal with the EU becomes very important, with the UK, with Australia, with New Zealand, and now with America, even with a very fickle and a very unpredictable Trump. That deal still becomes important for India to help build resilience and maybe open up a dialogue with other countries to see what a new world order might emerge from this. Thank you.
Thank you very much. And for your statement, Sir Vince, what is your
Thank
thought?
you also for the invite. I think I'd start the answer with a few numbers. Back in 1990, the so-called North, the developed countries, Europe, America, and Japan, had 60% of the world economy. It's now down to 40%, mainly because of China and India. And out of those numbers, you explain, I think, in large part, the MAGA movement in America and the populist movements in Europe, that the West has been in economic decline, relative decline. And if you forgive my doing a bit of hustling, I just published a book called The Eclipsing of the West that tries to explain this phenomenon. And the question now is where we go. And I sketch out some scenarios, some stories of the future. And the first is that we get to possibly what I call a global West, where the Western countries try to bring in emerging markets, crucially India, Indonesia, Saudi, others, to confront China, military and economically. And that's possible, but Trump is so disruptive, I don't think that's a sustainable story. But the second story is that you get this multipolar environment with different powers all doing their own thing, and lots of bilateral agreements. You know, India's been very skillful in exploiting this new environment, but for the world as a whole, it is potentially very damaging because international public goods, as we call them, agreements on trade rules, protecting the climate, the law of the seas, Antarctica, all these things, nobody is taking responsibility. And you would, in danger of, in a multipolar world, getting a degradation of these goods. So this is the time when the arguments for restoring a reformed multilateral system are crucial.
Thank you very much, Sir Vince. And finally, Professor Murati.
Thank you.
Your thoughts.
For a topic which is so important to business, I think our analysis is extremely shallow on this topic. And the reason I say that is multipolarity has always existed. I mean, we can't just look at the top 2 or 3 countries and assume they dominate the world. People in all parts of the world do business, they travel, they live their lives. So looking at it through that lens, I think, is a lens of power that only the powerful see. So what we do have isn't multipolarity, but we have something called segmented polarity. Now, I want that to be the dominant phrase that we use when describing the world. The difference between multipolarity and segmented polarity is that different countries have different levels of influence in different areas, right? So Saudi Arabia isn't a tech giant like the US is, right? Albania doesn't have as much oil as Saudi Arabia. Putting them all into the bucket of multipolarity is a very low resolution way of looking at the world. And such a low resolution doesn't help you as businesses, as policymakers, or as investors, because it makes you feel like you're smart. The world's very multipolar. So what do we do about it? What does next quarter look like? Oh, it's multipolar. And the conversation just stops there. So we have to have a lexicon or a way of speaking about the world, Pierre, that's based on the realities and looks at your contribution equally to other parts of the world. So that was multipolar. The New World Order is another one. Very rare in the world do we see a switch from an old world order to a new world order. That happens gradually. So the current world order, yes, post-World War II, we all know the story. Bretton Woods, IMF, World Bank, which has led to the development or the decline, the corruption, the degradation, whatever you want to call it, of the world. Mostly for good, but there has been some pockets of bad. So can anyone define or explain if you don't know what we're moving into, how do we know we're moving into it? Naturally, technology is something which is driving a lot of change, but things happen gradually until we wake up one day and feel this isn't what I experienced before, So my main takeaway from this is looking at the world through a lens which appreciates every country in the world's development standards, because very rarely do countries like Botswana take the stage when talking about the New World Order. It's always about the top 2, 3, maybe 4 countries that take the stage. But there's 194 countries plus in the world, and every single person in these countries has their ambitions, has their businesses to run. And if you only focus on multipolarity or segmented polarity and a New World Order, it doesn't really impact these guys and girls. So we have to use a different language, and we have to appreciate these concepts in a way that businesses and investors can use, not only academics in their armchairs.
Thank you very much. So for all your opening remarks. So let's dig a little bit deeper, and maybe, Dr. Chiba, we start with you, based from your rich experience in this area. Do you think we are entering in a phase where the global south becomes the main driver of growth, or does vulnerability still outweigh opportunity?
So I think in general, this last decade, this decade of disruption, you've seen a varied performance from the so-called global south. So when we talk about global south, we're talking about everybody who's not an advanced country, and that's a very diverse group of countries. There's at least 20 countries which are what we call fragile states, right? I mean, Afghanistan, Somalia. And they are doing even worse. I mean, there's a lot more conflict going on there. Then there's a group of countries like some of India's neighbors, like Sri Lanka, Bangladesh, Nepal, which were at one time doing okay. I mean, Sri Lanka was certainly quite high up on the middle income ladder, and Bangladesh had this huge surge in textiles and was appearing to do quite well. But clearly, with such high levels of corruption, very poor governance, and huge debt buildup during this decade when they were hit with COVID, the massive debt buildup have left these kinds of countries very, very vulnerable for the future. And we saw what happened in our own neighborhood in India, where all these governments literally collapsed with the Gen Z revolts, etc. So there's a swath of countries like that. But then, just to be more hopeful, there is another group of countries like India, like large parts of Southeast Asia, which have done well. They have kept catching up to the West. You know, they are converging in the sense that income levels on average are converging towards Western. We're still very far away, but, you know, the movement hasn't been in the right directions. So whether these countries will be enough to become the engine of growth for the future remains to be seen. And the Prime Minister yesterday promised that he would try his best to make India one of the big engines of the world economy for the future. But if countries like India, like Vietnam, like Indonesia, like others in Latin America, Mexico perhaps, and others, get their act together and move forward and grow rapidly, then, of course, the next centers of growth will come from this part of the global south. And I would put my bet on India becoming a very important such center, and will also help our neighborhood, because when the Sri Lankans realize that sitting next to them is a major engine of the global economy, when Bangladesh realizes, when Nepal realizes, they will all converge towards more and better economic relations with India. So a few big engines like that in the global south, like India, could pull along a lot others and also help drive, at least provide an extra engine to the global economy.
Thank you very much for these insights. Now, traveling from the global south to Europe, and hence to you, Dr. Zulek, let us understand these trends from a European perspective. What does resilience actually mean for Europe today? Is it centered around defense? Is it energy? Is it technology? Economic competitiveness, or maybe all of them? I just heard this morning in the news from the President of the European Council, Antonio Costa. He said 2025 was all about defense, 2026 is all about competitiveness and debureaucratization. Oh, what a difficult world. So what are your views?
Firstly, I think it's really important to recognize how much Europe is changing at the moment. I've worked on European policy for a long time, and I have never seen so much change in such a short time. And that is because Europe's world has changed fundamentally over the last years. To put it in a different way, Europe's holiday from history is over. We had 80 years where we didn't think very much about concepts like resilience. We didn't have to. Now we have to think about it on a daily basis, and no policy area is separable anymore. We cannot talk about resilience in one area. Certainly the most important resilience, which is going to be on the forefront of European minds, whatever happens in the White House, is going to be the threat from Russia. We have to be sure that we are resilient to the threat which is there, which is not only the war of aggression against Ukraine. It is a hybrid war which is being fought against the whole of Europe. It is also the announced aim of Russia to take back some of the countries which used to be in the Soviet Union. So we are going to have to prepare for a situation where we are resilient against the Russian threat, and that means that there will be a big focus on defense and security for years to come. But at the same time, there is also, as you rightly said, a big focus on competitiveness, on energy, of course also linked to this. We need to have energy systems which are resilient. We saw that Russian gas was weaponized when the war started, so we had to make sure that we find different sources. And now on top of all of that, we have the Trump II administration, which is a tremendous challenge for Europe. It means that we do not have the certainty of that alliance, which we have had for 80 years in Western Europe, for a little less in the East. And without that certainty, it means we have to do much, much more in our own responsibility. We have to take responsibility for defense and security, but we also need to have a much more common approach to areas such as competitiveness, to areas such as energy. These are tremendous changes. They are very, very difficult. They are also politically controversial, but they are happening. And what we're seeing now, I would hazard the guess that we will not see the results of this immediately. But in many ways, Europe has woken up and is now recognizing that gentle decline is not an option in the world we're living in.
Thank you very much for these insights. Conscious of time, but we still have two nice questions. Professor Murati, to you. Your assessments in the Global Power Index are truly insightful, and according to your latest findings, which regions or countries are emerging as future power centers? And maybe just very briefly, maybe you can explain to the audience what the Global Power Index is.
So I'm a data guy and a technology person, so we need to measure what we say. Okay, we need to measure what we say. So the way in which we do it, we've created something called the Global Power Index, which ranks all the countries in the world on 10 different metrics so you can forecast into the future. And we have 30 years worth of back data to back up our claims. India currently sits 6th in the world in the Global Power Index, number 6. 30 odd years ago is 24th, and it's had the highest rise faster than any other country in the world, which shows it. To get from 6th to 5th or to 4th is going to be the biggest challenge India has faced. Why? Because the last 30 years of development, you've made obvious reforms. Obvious reforms, and some people may be thinking, why has it taken so long to make these reforms? You know, we heard Prime Minister Modi here, and he seems like a leader who has a vision for the future, and he's been very much responsible for the growth that we've seen, and I can see the pride in the room yesterday of how much the people come around this message, which is needed. So one thing that you could do straight away in helping improve this perception, at least of India, is, number one, stop using the word Global South. Okay? Because what Global South really means is the poor countries. And India is growing faster than that label can keep it captured. So we need to use different words to explain. Even emerging markets. I think these are investment words that we use to try to group people together. But if so many countries are grouped, that means there's not a good enough understanding, or there's not a lot of confidence in that region. So we just say, these are the other guys. Yeah? So to get out of the other guys group, you need to do what you're currently doing for the good and reform what you're not doing well. And we measure this, and we help governments, investors, and corporations make better plans to see this forward. So it's data-rich, data-heavy, and it can give you astonishing insights if used properly.
And which one is the emerging power? Can you say it?
So, sorry?
Which one would be an emerging power, according to your latest? You said you issued it just on Monday, right? The latest report.
Well, India is certainly an emerging power. Indonesia is another big one. But with these things, we're not seeing how they've developed, but we're seeing how they're going to go into the future. You know? So we can see the trend so far, but what they can do to actually impact their future is the X factor that you need to get right, especially now with competition being so fierce. So my Indian friends, make sure that this is top of your minds when it comes time to your businesses, because you decide how far India moves forward.
All right. Coming back to you, Sir Vince, and I think I have the joker question for you. Based on your experience, and you have held so many important government positions in your very long career, so having been through multiple economic crises and probably also non-economic crises, what lessons are governments still failing to learn from your point of view?
Well, my experience was trying to manage in the UK government the after effects of the great financial crisis. And I'm interested more generally in the question of how do you deal with what people call grey swans, not black swans, grey swans, known unknowns. Because we will get more financial crises, pandemics, oil price shocks. The question is how to deal with it. And I would stress 3 big lessons, right? One is fiscal discipline, debt management, And unfortunately, many countries are not prepared. The US has got fiscal indiscipline, which is why you already see a sliding dollar. Japan is not in great shape, and probably the most vulnerable are the UK and France. France has the Eurozone. And this matters because when you get a next shock, which may happen because of the pricking of the AI bubble, possibly, there will be a fall in government revenue and increased government spending. And those countries that don't have debt management won't cope with it. Secondly, banking discipline. You need liquidity, capital, separation of speculative banking from retail and business lending. Some governments have done it, but we already see the bankers saying, relax, 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 get rid of the regulation. Very dangerous, because if we get hit with a new financial shock, the banking system needs to be resilient. And third and finally, keeping the central bank independent, politically independent, because once you lose that, the markets will see the monetary system as simply a way of printing money. So the central bank has to remain politically independent. The US is worrying here. So some of the mainly developed economies, I'm afraid, are not in a good shape to face big new shocks. And maybe the countries that are best positioned now are some of the emerging markets, which have had terrible shocks in the past, but have learned to manage them.
Thank you very much. That was very clear and very precise. And I think the sign that we heard is something like the time is up, unfortunately. I guess it is. So just summarizing very quickly from the key takeaways, starting with you, Dr. Zulek, you said, we are in a multipolar world for long, but not that you don't see the new order yet. And resilience is a new concept to the EU, and it has to be resilient in all of its areas. That's what I've understood. And so thank you for these insights. Dr. Chibba, I learned from you that the superpowers will be rotten from inside, which is quite a, pessimistic view maybe for some of us in the room. And that China plays a big part in that, and that the global south is very diverse, so you don't put them all in one pot. There are still some very vulnerable parts of that, and some emerging and doing quite well, like India or Vietnam and others. Sir Vince, you brought up the concept of the global West, quite interesting, and the grey swans, didn't hear about them. And you talked about fiscal discipline, banking discipline, and in the independent central banks that you need to have to be resilient and ready for the next crisis. And from you, Professor Moratia, I understood the concept of segmented polarity, so not multipolarity, and that we will be gradually going to a new order. And emerging powers are, according to your research and your index, India, amongst others, and Indonesia. Thank you for having us. Thank you to the audience for having us, and to all the panelists for your great insights. Thank you.
Thank you very much, gentlemen. It's been an honor to have you with us. Thank you very much again for being a part of Global Business Summit 2026. All right, ladies and gentlemen, let's move on. And we've been waiting for this moment, and this moment has now arrived. When we say Make in India, that began as a manufacturing proposition, Build for India signals a move that is more mature economic narrative. One that really talks about as far as integrating design, engineering, storytelling, and also consumer identity coming at a scale. Now, as domestic demand deepens and brand confidence grows, India's enterprises increasingly define their own standards rather than borrowing global templates. Now, cultural narrative and commercial strategy are converging, shaping products that reflect aspiration, affordability, and also authenticity simultaneously. So this very conversation, ladies and gentlemen, now extends beyond production to positioning and how India builds brands that resonate at home and also compete globally. So a rousing reception and a big welcome to Mr. Abhishek Bachchan, actor in conversation with my colleague Sumita Karir, Deputy Editor, ET Now, will be joining us here on stage live on the Global Business Summit 2026. Ladies and gentlemen, please put your hands together in welcoming Mr. Abhishek Bachchan. So Mr. Bachchan will be entering the hall any minute now, but this topic itself is going to be very interesting. We're going to talk about from Make in India to Build in India. And this is a very topic that also transpires what the issue at hand is. Because Make in India has now become the bigger initiative, and how India now builds brands that actually resonate both at home and also compete globally. So this is the moment there, of course, as far as a different perspective that we will be now gaining from the actor himself. Mr. Abhishek Bachchan is now joining us live on stage on Global Business Summit 2026. A rousing reception for Mr. Abhishek Bachchan as he joins us on stage. Ladies and gentlemen, Mr. Abhishek Bachchan right on stage. Welcome, Mr. Bachchan.
Thank you.
Sumita, the floor is yours.
Thank you, Amita, and a very, very warm welcome to you, Abhishek. Please take your seat. Ladies and gentlemen, we are expecting a lot from this session, and it's a little shift away from all that we have discussed during the day today and, of course, yesterday about geopolitical disruptions, geoeconomic disruptions, and how resilient businesses need to be built. So I was telling Abhishek, I'm a policy journalist. I cover technology, trade policy. The whole responsibility of making this session interesting lies on him.
No pressure.
Right?
Yeah. We're here to disprove the famous belief that actors really aren't known about anything else apart from acting. We can discuss Brazilian trade deals
I'm good with that. I'm good with that.
Tariffs and stuff if you wish.
Really?
Yeah, we can.
So let's start with that then.
Go for it.
What do you make of what's
I don't
happening?
take responsibility for my answers, but we're good at just reading off a script,
So how are you really reading?
I read the Eco Times every morning, so whatever I regurgitate is reported by them, so.
All right, great. That's a great endorsement coming our way.
Just to put it out there before, I cannot be held liable for anything I say. Please speak to Economic Times directly.
Right. But your look is great. It's very different from what we've seen in the past. What is it about?
My look?
I'm sure the whole audience must be also thinking about that.
I'm just flattered that you noticed that I've changed my look, but thank you. Yes, I'm currently shooting of my new film, which is called King. So, yeah, this is what it is.
Do you want to talk more about that?
No.
Wonderful.
There are contracts in place, NDAs, you get that.
We're really looking forward to that.
Until a deal is not signed, sealed, and delivered and implemented, you can't really talk about it, so... It's
right.
Similar in films.
Pretty much like how trade deals also happen,
That's exactly
right?
what I said, yeah.
We've digged the ministry for more information on what's happening in the deal, what are the negotiations, right? So that's exactly the answer that they give us.
It's very similar.
Yeah?
In fact, it's probably more tougher in the film industry. Yeah.
Well, I agree, but let's start then.
We don't have policy journalists like yourself who are, good at their job and investigating and finding out what's going on.
But, well, I'm not able to elicit anything.
See, I'm just good at hiding
You're very
stuff.
good with your job
Yeah.
then, right? All right, Abhishek, a very warm welcome to you
Thank you.
once again. We're talking here about geopolitical disruptions and, of course, policy shifts that we're seeing all across the globe. But you're also speaking of how Indian brands can now go global with the onset of entrepreneurship, with the kind of government support that we've gotten. You have also dabbled in entrepreneurship. You're investing in new age companies as well. You're investing in sports franchisees, and of course, films is already there. How do you manage all of that? How do you balance all of that?
Wow, you just made me realize how tough it is, actually. Well, where there's a will, there's a way. It's something that I love doing, and you find time. You need, the wonderful people here, you need, 3 to 4 hours to sleep. It gives you a good 20-odd hours to finish your films and, follow your other interests. And then you have a great team that can, allocate your time. I think if you want to do something, then you just find a way to get it done.
Right.
And thankfully, I'm from Mumbai, and the state of our roads and traffic is well documented, so you get a lot of work done in your commute. You get a good 2-3 hours, which you can finish a lot of work in, yeah.
Right. And what about Delhi? Everything's well? Because some of the people who've flown from Mumbai have been coughing.
No, I'm fine. Have you ever
So are we
worked?
at par?
Have you ever come to a film studio?
I haven't.
Yeah.
Would you like to take me to one?
Delhi weather is like Kashmir compared to film studios. Yeah.
Okay.
No, I'm fine.
Okay.
Yeah, thank you.
So Abhishek, when we talk about entrepreneurship, you've invested in a whole bunch of new age companies, quick commerce companies as well. There's a company called Nagin also, I believe. I cover startups.
Well done, yeah.
I cover startups and entrepreneurship, but
She does her research, okay, so thank you.
So what about Nagin interested you?
What about Nagin interested me? Nagin is a hot sauce, which is an Indian hot sauce, which came across my table by chance. I tasted it, I loved it. I used it a lot, and then I read the label. I contacted the people behind it. I said, guys, I love your product. Can I get involved? That's exactly how it happened. And they were very kind. They were looking at their first round of funding, and I came on board as a strategic partner. And I just really loved the product. And
So
it's been a wonderful journey. And it's a matter of great pride for me because it's doing exceedingly well, touch wood. And it helps when, Mr. Amitabh Bachchan posts a photograph of his breakfast with a bottle of Nagin sauce on the side. So.
All right. And I was actually talking to somebody, and that person was actually telling me that you also have a liking for extremely spicy products, and
Yes.
that also.
Yes. I like spicy food, so yeah, that's how it came about. A lot of my investing, I think I figured out that a lot of the products that interest me predominantly have something to do with the fact of whether I use them or not.
Okay.
And that's generally been the starting point for me.
Okay.
I think that's the kind of person I am. Even if I have to endorse something, I'm not very comfortable being. I understand as a film actor that it comes part and parcel with your job that you're a brand endorser. You go out there, you sell products. You leverage your celebrity to whatever degree. For me, I find it very uncomfortable and unnatural and almost deceitful if I don't actually use the product. So for me, my first criteria, if there was a proposal that came for me to be a brand ambassador, was, will I use the product if I don't already? 25 years, I still wear an Omega watch. When I used to work with Ford, which I loved working with, I used to drive a Ford car. I still have an idea mobile number. I still use a Motorola phone. I use Amex as my credit card. These are all products that I've had wonderful collaborations with. So for me, it has to be that. I feel it'll be dishonest of me to try and sell a product if I don't use it myself.
That's an incredible philosophy, ladies and gentlemen. A huge, huge, loud round of applause for Abhishek for that. And it's very responsible as well that you're walking the talk, and that is something that...
I think that's very important, and I think that's something we need to maybe lay a bit more emphasis on. I think there's a lot of white noise out there today, because it's just so much information. We live in, the age of excess information. There's so much white noise. Things aren't really being curated in that sense. So why would somebody want to, if you're advertising a product, which I presume a lot of you do, what is setting you apart? What is differentiating you from your other people? It's what's your story. So as somebody who today is a seller, for example, what am I doing different that makes him believe that this is the product I should buy? What currency do I have that is going to help the consumer choose my product as opposed to something else? And I genuinely believe that authenticity of storytelling and authenticity of intent is something that goes a long way. If I genuinely believe that, okay, I use this product for this reason, and I have a certain equity with you, so to speak, that you might believe me, or I stand for certain qualities, then I think you have to be very authentic towards that. So in any business or anything, you can't just say, oh, here's my car, it has 5 gears, it has power windows, it goes front, it goes back, it goes at this. I mean, all cars do that. What is it that's appealing to me as a consumer to want to purchase it? What is the story behind it that appeals to me? So I think in that, it makes it, we should pay more attention to it. We just can't generalize everything all the time. It's getting a bit tiresome.
Absolutely. Authenticity goes a long way in sort of building brands that have a lasting legacy, and that is something that you're focusing on, Abhishek. But let me come back to the point about entrepreneurship. You're also investing in quick commerce companies, I believe. And correct me if I'm wrong, Swiggy and Zepto both.
Yes.
Right? So what drew you to quick commerce, and are you a user of quick commerce? You use
I
quick
ran out
commerce
of Nagin sauce. I needed it. It was available, so I needed quick commerce to deliver it for dinner, and that's how it came about.
All right, then.
Very honestly, that's God's own truth. Right. I love this one. Anybody from Mumbai over here? Show of hands.
Lots of them.
Okay. Maharashtra. Tasted misal pav. The world's best misal pav you get in Thane. It's called Mamledar misal. I eat it every day for breakfast, and it's on Swiggy.
Mr. Pav, yes.
You're right? So I called up Swiggy. I said, guys, you'll deliver to me every morning.
How
Can I
often?
invest
Every
in you?
day. Every day.
So yeah.
At least once.
Yeah. So that's how it happens.
So that's how you make companies richer and yourself richer as well.
Well,
right?
not
because
well.
You are
I spend so
invested.
much money on those companies, using their services, that I feel maybe they should be giving me back some. So then I try and
Right.
invest in them and try and make some money off them.
Right,
Yeah.
right. So take us through your other investments that you are currently undertaking, and what is your investment philosophy? Whenever it is that you look at a company, you mention about it has to sort of match your philosophy as well, your personal philosophy. It has to resonate with what you're doing, and you have to use it. But what other than that really sort of, makes it happen for you? Especially when investing in companies.
After several years of doing this, I think it started off as fun. All right, I was enjoying myself. The reason I started, my family office and starting investing is because very early in my career, I realized that having studied a little bit of business, that maybe the film industry isn't the most dependable source of income. We are completely dependent on external factors. Your life can change every Friday, for the better or for the worse. It's not... I wasn't comfortable having to do films because I needed to run the house, because then that kind of affects your creative choices. Very early in my career, I decided that I needed a parallel source of income through which I could lead my life and do films for the sake of creativity and art, and make films that I wanted to make and tell stories that I wanted to tell. So that's how I started. And when I first started, it was like, okay, what can I find that appeals to me? And it was a lot of fun, and I was enjoying myself. And okay, I like Nagin sauce. I use Swiggy to order my food. All that kind of stuff was very nice. But once you do that, you start, obviously you learn from your experiences. Currently, for me, the most important is if I do get the opportunity to sit across the table from some of these brilliant people, it's the person that I want to understand. What are they made of? How far are they willing to go? What are their beliefs? What are their capabilities? So I think currently my emphasis is more on the people behind the brand than just the brand. Yes, initially it has to be, the product has to interest me, but then the people that run it and are going to run it on a day-to-day basis and make it hopefully into a success. And then can I contribute in any which way?
Right. So Nagin Source, quick commerce are two aspects, two sectors where you're investing. Which other sectors are of interest to you? I'll also speak a bit about, defense being one sector which is attracting a lot of VC interest. There was a whole lot of, capex push in the recent budget as well. Deep tech segment. There was also a lot of focus on data centers and AI. Are any of these sectors of interest to you? And if you had to move away from the segments?
No.
Okay, no. So which
AI scares me.
Scares you?
Yeah, it should scare every actor. I mean, there's your competition right there. So I think in the creative field, AI is going to revolutionize a lot of stuff. But also, if not used responsibly and correctly, I think it can be very detrimental to people like me, which are actors. My personal opinion is, I think behind the scenes, it can be very beneficial. Animation, special effects, that kind of stuff. It's going to reduce a lot of working hours that we spend, hence your budgets, come down, which is great. From a creative perspective, I'm still on the fence about how AI can, I've seen certain products which are completely AI generated and they're wonderful, but I just feel somewhere there's no soul. And I think there's an imperfection to humanity, which is what we enjoy watching in film as well. And
so it's not really about actors' jobs going away because of AI?
No, it's a possibility. It's not
By
clear.
the way, they still have AI anchors, right? So
yes. So maybe you should be worried more than me.
we are totally.
Yeah.
Yeah.
But I think there's going to be a lot of disruption in medical and legal, especially with AI. But as far as films and creative arts are concerned, I'm on the fence about whether it's going to be beneficial or not. So that, I mean, I don't have a complete grasp of the entire AI landscape, so I'm not comfortable in that yet. I love to learn about it. I'm reading up a lot about it. But all these sectors, I feel, are not stuff that have a day-to-day connect with me. So currently, I'm not interested in them. As most Indians, real estate is something that, yeah, my father always is a big believer in real estate. And I think there's that very old thought that zameen hai to sab theek hai, So that partially is there. I used to invest a bit in gold, thank God. And then my wife's like, what about silver? But yeah.
But what about capital markets?
Yes. I prefer to let my bankers handle that because I think that's something which is just, it's a parallel universe to where I live, and it's so consuming and it's very interesting. But if you're not dedicated to it, like literally 18 hours a day, I think you're going to have a tough time trying to be successful in it. I love to make movies on them, but I leave that to my bankers. I mean, I enjoy it to a certain extent. But I think as it is being a film actor, you're already playing with enough risk. So I allocate a very small part of my budget to that.
All right, so capital markets, check mark, gold check mark, property, of course, you said, and of course now startups as well. But Abhishek, talking about Make in India and making for the world, well, that's the Prime Minister's mission. India has been in mission mode, especially when it comes to manufacturing. Different sectors are also sort of gearing up to build for the world. What about the movie industry, and how do you really see that trajectory going? For example, if you see the Korean film industry, right? I mean, the Korean shows, etc., they have really taken the internet by storm. what exactly do you think the Indian film industry at this point needs to do to sort of, reach that level? We are already being appreciated. Okay.
Nothing.
What does that mean?
We're the biggest
We're
film industry in the
yeah.
world. And I'm not saying this from arrogance, this is data. It's a very interesting question because we always talk about, like you just said, the Korean television and film industry, which do unbelievably amazing work. But let's look at the numbers. What is their viewership? What are those numbers? They'll pale in comparison to Indians going to movies. So we have the numbers already. So what kind of numbers are you trying to achieve to become that fad? I don't think we want to be a fad. We are the largest film industry in the world. We make close to 1,000 films a year, let alone countless streaming products. Our population is the largest in the world currently. Internet users, thereby showing that we have access to digital content, is, I would guess, possibly the highest in the world, if not the second highest. Our numbers are just so large that I think it's erroneous for us to say, oh, when are we going to become like, when are we going to create our Squid Game? We make Dhurandhar.
Yes.
Look at the numbers. You look at the amount of tickets sold. That's going to outshine any other show, any other movie. So it's a matter of numbers. I think the most important thing in art or in cinema is you have to be true to yourself. I remember growing up, when I was in college, there was a wonderful film called Crouching Tiger, Hidden Dragon that came out. It's a Chinese film, and it went crazy worldwide. And it just took Chinese cinema and, their wonderful storytelling to the West. What was wonderful about it is they never tried to cater to the Western market. They were very true to who they were. I think the minute we compromise our Indianness, I think we lose out, because they've already got their own cinema. If you're looking at capturing the West, be it Europe or America, which are very unique, they're very unique consuming patterns for their cinema as well. But say, if we're talking about Hollywood, you want to go there because that's the biggest numbers. They've already got movies that cater to their sensibility. Why did they like RRR? Because we were so unabashedly Indian about it. And I think that's what we have to do. In our cinema, you have to be yourself. You have to love the pomp and pageantry of Indian cinema, the melodrama of Indian cinema, the poetic justice of Indian cinema. And I think that's what we have to take to the world, and that's what's going to set you apart. Having said that, be very content that how do you grow your local market, because the numbers are there. You can't ignore India today. We're a force to be reckoned with in every sphere. If you see, I think it's wonderful. I just thought of this. I read this wonderful word, innovation. Have you heard that? I read it a couple of weeks ago. I was reading an essay somewhere, and innovation is innovation for India. The world is innovating for India because now they realize that, we need to cater to them as well. We're in an amazing market. We're an amazing country. You look at somebody as great as Mr. Tata, who wanted to make the world's cheapest car for 1 lakh, but he owns Jaguar and Range Rover as well. It's amazing. This is the country we live in. This is who we are. And you see McDonald's comes to India and we don't eat burgers. We eat a aloo tikki burger or something. They're innovating for the Indian palate, for the Indian consumer. So I don't think we should not try and lose who we are, especially in cinema, but even in business. I think the Indianness is what's appealing to the world today. And let's not forget, 1 out of every 6, 7 people on earth is an Indian. So, those aren't bad odds, right, as a market?
Absolutely. So the huge domestic dividend that we have, we need to capitalize on that and remain truly authentic. That's the big message for you, Abhishek. Abhishek, I'm going to open the floor for some questions, but before that, I just have one final question. And while the board is telling me the time's up, guys, I'm going to take a little bit of more time with Abhishek. It's not every day that we have him. What do you make of microdramas? We have movies like Dhurandhar, which is about 3.5 hours long, but at the same time, microdramas are also sweeping the internet.
It's the new frontier, but I think it's going to have to develop its own industry and ecosystem. I don't think we should try and cross paths. It has to be something that's built uniquely on its own merit from the ground up. It'll have to be a completely different vertical to cinema, to OTT platforms. I don't think it would be prudent for film actors to be trying to do micro dramas now, because you're standing for two separate things. On one hand, you're selling a product saying, come watch me for 3 hours and pay thousands of rupees for a ticket, but hey, I'm also available for 30 seconds. So I think that's bad marketing.
Right, and all of these are going to coexist is essentially what you're trying to also suggest. But Abhishek, it's now time for us to do a rapid fire, another kind.
Yeah, okay.
All right. So one movie role you turn into a real business venture. It's a rapid fire, you can't think so much.
One movie role I turned into a business venture. We're in Delhi, right? Sarkar.
Okay. If your life were a startup, what would be its tagline?
If your life can become a tagline, then it's not worth living. Yeah, you should have,
Interesting one. Boardroom meeting or film set, where is the drama bigger?
Film set, any day.
Yeah?
Yeah, yeah.
You want to spill some more beans?
Oh, they read, it's okay. I mean, boardroom drama, I mean, not much drama, yeah.
Okay, one luxury you still get excited to buy like you did as a kid?
Chocolate.
Okay.
If you're a film actor, chocolate is a luxury.
A Bollywood dialogue that perfectly describes your business life.
Oh, I had this dialogue in my film Guru. जब लोग तुम्हारी बुराई करने लगे, समझ लो तरक्की कर रहे हो.
Wonderful, ladies. A huge round of applause for Abhishek. And now I'm going to open the floor for a few questions. May I request some of you to kindly raise your hands, whoever wants to ask a question to Abhishek, and we'll try and pass on the mics. All right, that gentleman over there.
Hi, Abhishek. Good evening.
Good evening.
I am Joydeep from Delhi NCR.
Hi.
So I just wanted to ask you that, where do you get your inspiration from, apart from your dad? Whenever you feel stuck in your primary profession, that is acting. And how much do you feel inspired from Hollywood actors? I believe Robert De Niro had come down to Mumbai some years back, and I saw your picture with him. So
No, I've never met him, unfortunately.
Okay.
I would love to, but yeah. I'll have to make do with Amitabh Bachchan. My gosh, these problems that we have.
Yeah, so apart from him, who would
My
be
daughter.
Wow.
I get inspired by my father and my daughter. I think there's a simplicity to the younger generation. There's a certain clarity of thought. Although if you have, Mr. Amitabh Bachchan sleeping in the room above you, you don't really need much more inspiration. He kind of fills all those voids. But the other person I look to is my daughter. I envy the new generation. I think they're very, very sorted. And there's a lot we can learn from them.
Thank you.
Right, ma'am. Yes.
You can have my one.
What advice would you give? That's fine. I think people can hear me. What advice would you give to the younger generation?
Oh, you can't give them advice. They'll
Thank
give you
you.
advice.
That's
Yeah.
true.
Just listen to them. I mean, they're your future, right? So listen to them. But it's very interesting as a parent of a teenager today. There's so much you want to impart and tell them, and I think the more time you spend with them, you realize they're very sorted. They have a very different trajectory to what I've had, or possibly other people who are elder to me have had. And I think you have to allow them that. I think we tend to, as human beings, always say that, no, our way is right and their way isn't. But they live in a completely different world to what we used to live in and we grew up in. They've grown up with mobile phones and social media and cameras, which are a norm, which was an anomaly for us. So I think they've had to grow up in a very different society, and they've adapted and evolved to it. So you don't need to tell them anything. Yeah, they'll be fine.
All right. Yes, you had a question. This is one final question, and then we have to close the session. Please take my mic. Yes, go ahead.
Hello, sir. Good evening.
Hi.
So I wanted to understand, how do you evaluate risk when you are entering into a new business opportunity? It could be investment, or when you are going for a collaboration, especially if some startup or assembly level of an organization approaches you? Thank you.
I try to keep it as simple as possible. And what I've learned in my 15, 20 years odd of investing in businesses is keep it as simple as possible. I think the more people you talk to, the more confused you're going to get. And a rule of thumb which I try and adhere to as often as possible, I haven't managed every time, but it's quite high up in my priority list, is if you can't afford it yourself, don't get into it. And I think that's the greatest assessment for risk for me. Can I afford it? Do I have those kind of funds that I can invest? If I don't, then the risk goes up exponentially. So if it's not part of my bank balance at that point in time, I probably will try and stay away from it.
All right. Abhishek, there is one final question,
Yes,
and I
please.
assure you of that.
I'm very happy to stay here. The next guest might not like it, but I'm very happy to carry on.
Hi, Abhishek.
Hi.
My question is a little bit different on that. Usually all the actors, all those people over there, they come and become a producer or director on those kind of a setup. You started a new trend over there. The things are changing so fast. You become a kind of a owner of one organization which is playing over the kabaddi and all. Now we are talking about the business things and all. This is a new trend setting. We all saw the films are earlier like few crores, a few things, Silver Jubilee and all. Now the times are changed. How do you feel so these things are in a future generation over there, take it over there?
Wow, that's a great question. I've never looked upon it like that. I'm sure there have been many of my predecessors who are wonderful business people as well, and they've all done wonderful work. For me, it's just what interested me. I'm very passionate about sport. Thank you for asking about my sports ventures. I've always played sport. I've always had this dream to want to contribute to Indian sport in some manner. My sporting journey started with Kabaddi and the Pro Kabaddi League, in which I owned the Jaipur Pink Panthers. Then came football. I grew up in a British boarding school, so football was part of life. And I co-own Chennai NFC, which plays out of Chennai in the Indian Super League. We then invested in a new kind of cricket league called ISPL, which is the Indian Street Premier League, which is gully cricket with tennis balls. This is our third season. And later this year in August, we launched the ETPL, which is the European T20 Premier League, which I am one of the founders of. So enough of running a team that's too much stress. So now we've bringing T20 cricket to Europe, and it's owned by 4 Indians. And I think that's just wonderful. So make in India and take it back to them, yeah. So I really enjoy it. It's something that I loved doing. I love making films. I'm looking forward to flying back to Mumbai tomorrow morning, heading straight onto set. I love it. That's my happy place. But I also enjoy sports. I enjoy my investments. I'm very impatient. And I tend to get bored. We were discussing this backstage. I tend to get bored very fast. So it's just, these are things, and I feel I have the opportunity. God has given me this opportunity to do it. So I think it will be wrong of me not to avail of it. But I see a lot of the younger actors as well who are spreading their risk, so to speak. They're not depending entirely on being an actor. They're very happy producing films, developing films, doing other businesses. And I think there's a renewed confidence in young India today, where we don't feel like we should just stay in one lane. And I love that. I think that's so exciting. So I think you'll see a lot more of that going forward.
All right.
Thank you, buddy.
Thank
Give
you.
my regards to your dad.
I will. Thank you. Anji. Thank you. गुरु के बारे में सर वो तो 2007 में बना दी थी हम लोग ने अभी उसका अभी गुरु is not the kind of film that
Would you like to make a movie on your entrepreneurial journey?
no I'd rather somebody else make it yeah जी thank you
Absolutely, sir.
नहीं मैं ऐसे नहीं देखता हूं मैं उसे देखता हूं गुरु पिक्चर वाज द ट्रायम्फ ऑफ द ह्यूमन स्पिरिट उसमें गुरुकांत देसाई का एक डायलॉग है, वो बोलते हैं मुझे ना शब्द सुनाई नहीं देता है. That for me, that is what the movie stood for. You know, the unrelenting spirit of an entrepreneur.
Absolutely, Abhishek, and that's what really stood out. And thank you very much, sir. We gave you your chance to ask that question.
Thank you.
Ladies and gentlemen, a huge round of applause for Abhishek Bachchan, who lives by the philosophy of one life, live it fully. Thank you very much, Abhishek. Thank you so much. All right, ladies and gentlemen, may I please request you to kindly settle in your seats. That was a fascinating conversation that I had with Mr. Bachchan. Lots of very interesting insights. But once again, requesting all of you to kindly please be seated as we're about to begin our next session. In fact, the next session is going to be on AI in the boardroom and what CEOs must decide now. Because artificial intelligence is no longer a research laboratory discussion, it's a boardroom imperative, and leadership teams must determine how AI shapes productivity, cyber security frameworks, compliance architecture, talent strategy, and long-term competitive positioning. The opportunity, ladies and gentlemen, is transformative, as you must have also heard several CEOs in the past 2 days talk about, but so are the risks: algorithmic bias, governance gaps, regulatory scrutiny, and reputational exposure. So our next session is going to delve a bit deeper into all of these regulatory risks that are currently in place. In fact, boards now cannot really afford to delay these decisions, but must define accountability. In fact, to discuss this and more on this very special panel, can I please request Ms. Amrita Joshi, Managing Director, AI Solutions at Google, to kindly come up on stage. On this panel is also Ms. Pratibha Mohapatra, Managing Director of Adobe India, Mr. Ranku Jain, MD, Media Tech India, and they are going to be in discussion with the session chair, Mr. Arvind Gupta. He's the former Chief Executive Officer of MyGov India. Mr. Gupta, may I please request you to kindly walk up on stage? Mr. Ranku Gupta, MD, Media Tech. Mr. Gupta, if you could kindly walk up on stage. Mr. Ranku Gupta, Ms. Pratibha Mohapatra, and Ms. Amrita Joshi, the session is all set. All right then, Mr. Gupta, the stage is all yours. Request you to kindly convene the session.
Thank you and good evening. Thank you, organizers, for giving us this opportunity. I know it's going to be a little tough task to match what was the previous session, but from the world of Made in India, Bollywood, we have the world of AI. And when it comes to AI, I have three very leading companies represented here by three very leading leaders who are going to talk about the AI and its impact on the boardroom. So if I can have little attention, that will be good. We have, how many of you know what's going to happen in India next week? AI Summit. So think of this as a very exclusive preview, what we are going to see, and and probably at a much lesser cost of a hotel room, because next week the hotel room is going to be 10x the price of what it is today. So we have three great speakers. We have my very good friend, Managing Director of Adobe India, Pratibha Mohapatra. I have Dr. Amrita Joshi, MD of Google Platform Engineering Team. And I have Mr. Anku Jain, who's also MD of Media Tech. Now, what we have here is not a technical discussion per se. This is a business summit, and it's very important to keep this discussion of the impact of AI in your businesses, in your corporate life, in your boardroom. So without much ado, Pratibha, first question to you, or I can start with you, Amrita, on that side. I just returned from a country which has not a minister for AI, but actually AI as a minister in the cabinet room. And while there could be a little bit of a media hype around it, the real thing is that AI is entering cabinets, AI is entering boardroom discussions. As a board member, I see it being discussed. I don't know how much seriousness it is, but my question to you is, what are the imperatives a board should look at when it decides about AI, adoption of AI, over the next 12 months? And 12 months is a long time in the AI race, so please open it up for us.
Absolutely. So first of all, thank you for having me here. Like Arvind said, this is a little preview of what's coming next week. And it's true. I mean, there is a lot of hype around AI. Everybody is doing all sorts of things with AI. The real question is, what should be a business priority? How should a board really think about it? I would say there would be three major pivots that the board needs to think about. The first one is you need to move from this phase of doing small pilots and experiments to some actual long-term deployment or actual strategy. And for that, it's very important to have not only capital investment, capital allocation at a board level, but also a certain strategy of what are the areas where you're going to plan for growth, business growth, and not just productivity and efficiency. So I would say capital investment in strategic areas for your business would be the first one that you want to look at. The pilot phase is done. You need to move forward into some actual impact. The second one I would say is talent transformation. And this talent transformation is not just for building your next generation AI tools, but even in your day-to-day jobs, the way those jobs are done, they're going to move from the human-led to AI orchestrated, some kind of a human-in-the-loop mechanism. So how are you looking at your talent transformation at every level, at all levels? And then the third thing I would say is just the value governance or value-based governance. There is a lot of compliance conversation. There's a lot of this conversation around what is the EU saying, what does the Indian government saying about responsible AI, and all that is great. But I personally feel that an organization needs to have their own AI values set up very clearly and foundationally. Ideally, we at Google, we set ourselves to a much higher bar than what is required from a compliance point of view. So as an organization, do you just want to be a compliance-oriented AI player, or do you want to actually put it value-based? And I would highly recommend going with a value-based approach. So those would be the three things: a strategic pivot towards capital, talent transformation, and of course the value-based governance.
Thank you very much, Dr. Joshi. We had a script planned. I'm going to go off script. Of course, Bollywood, so I've learned to do that a little bit. Anku, this question is to you. You run MediaTek India, which is a supplier to almost all phones over here, all hardware users use you. We know the Moore's law, and again, not technical. What used to cost us $60 4 years ago is costing us now less than $1. So given what Dr. Joshi just said, that do it now, I'm a boardroom member. My board meeting happens once in 3 months. 6 months, the cost will be half. Why should I do it now? Or should I wait it out and see who is really coming out as a winner and then go on those infrastructure, lock myself in maybe, but whatever else? What's your view on that?
I think everyone would agree that the pace of change for AI is very, very fast. So, 6 months is very long. Even 1 month wait would be, I would think it is going to, be very incooperative. To have the competitive advantage, one has to get in as soon as possible. And I would agree with her, that the capital expenditure has to be coming from the top. And in this case, the clear ROI is not visible. But I think the most important thing is that people have to get their hands dirty. The employees, I think the mindset of the CEO or the boardroom has to be that provide the platforms, provide the technical tools without worrying too much about what is the ROI from there. And because one has to just get in, all in. And if one doesn't do that, then they'll be left behind. So, everyone is talking about how do we increase productivity using AI, and that is actually happening. Although it is not 100% accurate, but I think one has to learn, and the muscle memory has to develop for the employees and for the company. It takes time to do those experiments. So I think one has to do all into this and do the capex and don't wait for 6 months. Don't wait for even a month, I would say.
Thank you, Mr. Jain. Pratibha, to you, we've seen Adobe as a company champion creativity with your tool sets, from Bollywood to large corporates to an individual creator, an influencer, media companies, ET, everybody uses your toolkits. In the AI world, tools will become a commodity. What role does creativity, human understanding of human interaction play when boardrooms decide how do they think about their brands in this new AI world and their whole positioning as a brand?
Yeah, so again, thank you for having us here. So this is entire debate on human ingenuity and creativity and the role of AI in that. Recently we sort of recasted Adobe's mission as empowering everyone to create, full stop. Because at the end of the day, everyone is creating something. Somebody's creating an idea, somebody's creating an image, somebody's creating a video, somebody's creating a product. So yes, AI is here, but end of the day, humans create, tools don't. Because the original idea of anything will continue to be human beings. So it's very important not to get, too agitated about the power of AI. But yes, I think AI is doing to white-collar jobs what automation did to blue-collar jobs. So the white-collar jobs of a legal professional, a creator, I think the create part of it is getting taken over by tools. But, for example, for a lawyer, right? Maybe the law, everything can be read very easily. But finally, if something is going wrong, the checker, I think the maker is being taken away by AI, but the checker is still going to be there. And I was telling someone, aeroplanes, most of the commercial aircrafts run on autopilot. Actually, pilot is just sitting there doing nothing. But did the profession go away? No. You still need that creative person for that original ignition of the idea. Give it to the tool to generate the stuff. And again, to keep on moving to the higher end of the value chain. But yes, in the midst of all of this, for companies to protect their brands, there is a lot of fake, inauthentic things which could come and hit you. Things can be very easily copied, things can be easily hallucinated. So the entire philosophy of what we call content authentication is super, super important. And in fact, there is a big industry body called Content Authentication Initiative, where every piece of creative content that is being created has a watermark, just like a food has the ISI mark, or a product has an ISI mark. So there's a watermark in every content, and if you go and look into it, it will tell you who created it, a human created, who changed it, some AI tool changed it, and finally, who is owning it right now. So these are the kind of guardrails which will come into being. And we as Adobe, as a creative company, still believe every human being has something to create. We will give the tools, but we will also give the means to ensure that there is full transparency and there is no misuse of the content. So that's how I would.
No, and I think for those of you looking at or hearing what Pratibha just said, three very important things she has said. Humans create, tools don't. And she's given you the formula that while if you are a maker, you are under threat, but if you are a checker, you are not. And if you are somebody who understands the nuances of doing surgery, the robotic arm or the AI will assist you, but not take away your job. So I think that's a very well put statement. Let me just build upon that. And again, this is a big debate going on. About a year ago, we had the DeepSeek moment where, China suddenly got discovered on the AI race. They were always there. And, the American companies got threatened and the world changed. And it will keep changing, right? It will keep changing. My question to you, maybe as Google or as just an AI practitioner, Amrita, is that does it make sense to now really do what is called best of breed for a corporate company, use whatever is the best available for them, or think a stack-wise approach that I want to go with a Google stack or a Microsoft stack or an OpenAI stack or whatever else, Anthropic, which just cost $500 billion of market cap loss to many companies. So what's your take on that?
No, I think this is an excellent question. If you look at AI models, there's a new model coming every week. There are specialized models coming, there are generalized models, there's progress happening every week. So how do you make a decision about where you want to put your bets? I would say that instead of just betting on individual models, it makes sense to bet towards a platform. A platform that actually allows you the flexibility. So if you look at the AI stack, there are various layers. There is the hardware layer where there's GPU, and then Google has a proprietary hardware called TPUs, tensor processing units. After that, there are foundational models, and there's a whole range of foundational models, right from proprietary models as well as open source models. I mean, Google has something called as Google Gemma, Meta has something called Llama. So a lot of options there. After that, there is the adapter layer in the architecture. Even there, you have a lot of choices. So one of the strategy, and this is something I work very closely with customers in terms of advising how to think about your architecture. So one of the things is go with an option that keeps possibilities open. One of the options is actually Google's Vertex AI, where you can use Google Cloud's Vertex AI stack, but you can still use a different open source model away from Google if you want. You can still use NVIDIA's hardware if you want with the same platform. So a platform approach that actually allows you with that flexibility to make choices, different choices for different lines of businesses. It's not even just a time thing. Maybe for your internal efficiency, you need a different kind of setup. And then for your sales goal, you need a different setup. So you need a platform that gives you that flexibility and that choice. More like Android versus iOS. Absolutely.
So you are taking the Android approach versus the iOS approach. Brilliant, brilliant. Can I come to you, Anku? you know, you see companies across the world, India, China, Taiwan, US. How do you rate the adoption today comparatively in, you know, if you have to give marks to adoption in Asia, including India, versus Europe versus US? What is your view on that?
I think,
enterprise level, not consumer level. Consumer, India is really using AI a lot, right?
I think the big enterprises adoption does take time. I think this is a very strange situation that we have. That we have so many models coming up. Every week we have something new, and actually enterprises are slow adopting. So it's kind of an issue for the enterprises. How do we make sure we are ahead of the game? But I think what is really important for the enterprises is that as this tsunami hits us, all this innovations happen in the AI world. How can we keep track with that? How can we innovate faster than that? So that is the biggest challenge that we have. And I would say, if I look at India, Taiwan, our headquarters is in Taiwan. We are very, very focused on, as you said, the platform is available for all the people in the company to experiment on and to see how do we increase efficiency on that. So the awareness is quite high, and I think it's clearly, it is something which I said earlier, that we have to ensure that we get our hands dirty to ensure that we have the competitive advantage. But I think the adoption in enterprises is quite similar. I wouldn't say that it is different from geography point of view. But bigger companies definitely have, they really want to focus on this. How do we make it adopt more and more? Yeah.
I have a question for the audience. Just a quick poll. How many of you don't use Google Gemini? Don't use. Means use. How many of you use OpenAI? Only OpenAI. How many of you use Perplexity because it is free? The question was because it is free. So whatever is coming free or bundled for 1 year, it's better right now.
Actually, you can see from the audience that a lot of people haven't used it. So that's why, one really have to, we talk about so much about AI, but we don't realize sometimes in the company that, within a company that people are not.
Adoption in India is very, very high.
Yeah.
How many of you use Claude? Anybody knows Claude here? And how many of you use DeepSeek? Few DeepSeek users. Brilliant. Pratibha, I'm going to ask you something probably to close this session. This is, we've talked about adoption. She's given some ideas about what boards should look at. It's a tricky in the sense, boards are generally people who have grown up from the marketing role. In the Western world, and where I have studied, and also a lot of us have worked, there is the CTO is now the CEO, or the CEO is the CTO, vice versa, or the product officer is the CEO, the CPO. Is this something that we can think is going to happen in India, where the CTO at least enters the boardroom, or the CIO enters the boardroom? I really have not seen that move happening. So what's your view on that?
You actually talk of mostly maybe the Bay Area, where most of the companies are tech companies, and in tech companies it happened that way. While in India, we have a lot of other industries. Our tech companies have mostly been tech services companies and not tech product companies. And of course, we have great sectors of banking and what have you. But interestingly, I think every company now has a chief AI officer, and that chief AI officer is the CEO in India.
Brilliant.
4 out of 5 CEOs, and I actually am responsible for the India market. Every customer that we meet today, the CEO is a person who is doing the role of chief AI officer, because that is something which he or she has to have a clear strategy for. And by the way, some companies are creators of AI. Like if I talk to a tech company, they're actually creating AI, either in the infra layer or in the data layer, model layer, or app layer. Some companies, when I talk to a IT services company, they're in this side. And some companies I talk to, they're users of AI, right? A bank, an airline, they're users of AI. But whether it is the CEO of this tech services company or the CEO of the airlines or the bank, in both places, it is the CEO who's sitting up and saying, guys, IT services, I'm the CEO of company X. How do we change our business model because of AI? What new things do we need to do because of AI? How do we stay differentiated because of AI? And the CEO here of this airline industry says, how do we get a new productivity enhancement because of AI? How do I get a new channel of business because of AI? How do I, not that chatbot, but that agent who will be a new channel of sale for me? And how do I improve experience of my end customers using AI? So productivity, revenue, and experience. So both this CEO as well as the creator of the AI CEO, everybody is thinking AI. And today, at least in India, the chief AI officer in 4 out of 5 companies is the CEO. And that's going to remain for the next 6 months this year till this puzzle or till this mystery is not solved. Of course, in 12 months' time, a lot would have changed. And these creator companies, maybe some of them would have stopped existing, some of them would have merged somewhere, and these companies would have really, the leaders and the laggards would have emerged. I think this 12 months is quite a heady mix in the Indian context.
That's brilliant. And I know our time is up. We have Sundar Pichai from Google next week. We have Shantanu from Adobe next week. And we have Mr. Anku Jain himself from MediaTek next week speaking at the Global AI Impact Summit happening in Delhi. So with that, thank you, the Times Group, for giving us this opportunity to talk about AI and the AI and Boardroom. What is really reassuring is that, that we have the last word from Pratibha, where she says the CEO has become the chief AI officer. And if that continues, I think those organizations, the 1 out of 5 are in trouble, the 4 out of 5 are probably safe. Thank you very much. I think we can give a bigger round of applause to our panelists.
Absolutely, a huge round of applause, ladies and gentlemen, before we begin the next session. And thank you very much, Mr. Gupta, for moderating that session. Lots of very interesting insights on AI and, of course, leadership and how the two are going to sort of converge in future. All right, then, ladies and gentlemen, with that, we come to the final session of the day. This is about the European Union India Economic Compact. In fact, trade agreements today are strategic instruments. They shape supply chains, regulatory frameworks, investment flows, and industrial standards. In fact, the India-US trade dialogue has already underscored how complex modern negotiations can be, balancing reciprocity, digital rules, sensitive sectors, and strategic alignment. Yet, the European Union India Economic Compact trade agreement that carries a different scale of consequence. It is often described as the mother of all deals, a phrase that you must have also heard multiple times during the past couple of weeks, not because of tariffs alone, but because of the opportunity that this trade deal presents. And of course, it defines sustainability compliance, environmental benchmarks, and of course, the collaboration that's going to be there between both the geographies, Europe and India. Of course, the deal is coming in at a time of great geopolitical churn. This agreement is for around 2 billion people, nearly 1/4 of the global GDP, and which is why they rightly say it's the mother of all deals. In fact, let me welcome on stage to discuss and how global trading arrangements are going to move on from this point onward. May I please request Dr. Honorable Jyoti Jeetan, Minister of Financial Services and Economic Planning, Republic of Mauritius, to kindly come up on stage. And Dr. Piotr Antoni Switalski, the Ambassador of Poland to India. And I will be moderating this very session. So thank you very much for being with us here, Dr. Jeetan and Dr. Piotr. Since this is the final session of the day, we have to make the most of it, and would request for your feedback on, in case that you want to add anything, something that we've not really covered through the course of the day. So let me begin by asking you, ma'am, This is an era of great geopolitical and geoeconomic churn, and of course, countries are not really depending on multilateral institutions, but they're depending on bilateral deals, on one-on-one engagements with countries that are like-minded, that are not competitive. At least that's how India is looking at some of these deals. What do you really make of, the global trading order, and where is it headed, and Mauritius's approach to that?
Very interesting question. Good afternoon, good evening, everyone, and thank you for staying for the last session. What do we make of these deals? I mean, of course, I'm not going to repeat what almost every speaker has said about the changing world scenario, the end of the fading away of the rule-based system, and the bilateral evolution happening in the world. And I think what is important to retain is the changing dynamics of the global south. And I think it is important, perhaps we don't talk enough of Africa, and where I come from, Mauritius, small island. In the old days, we were the star and the key of the Indian Ocean because of the spice route. But we are an interesting country in the sense that we are historically and culturally very linked to India. Almost 70% of our population originally come from India, but we are an African country. We are part of the African Union. We are part of COMESA, we are part of SADC. And why I'm saying this, some of you might know, 2 years ago, I think India welcomed the G20 summit. And one of the amazing things that happened during that session was that the African Union, that India pushed for African Union to have a permanent seat on G20. And that's the global south. When we talk of global south, we have to remember that Africa plays a big part in the global south, and Africa is a huge market. That's 1.4 billion people. That's a young population. That's a population that is bound to grow to 3 billion in the next, by the end of the century. And perhaps more importantly, someone said that yesterday, that's, 15 out of the 25 fastest growing economies last year came from Africa. So we need to pay attention to that.
Absolutely. So it's a great integration opportunity and possibility that you're talking about, ma'am. Let me come to you, sir. Let's talk about the EU-India trade deal. It's been called as the mother of all deals. In fact, Ursula von der Leyen has called India as a great stabilizer amidst all the geopolitical disruptions that we're seeing. So while we may talk about how tariffs on both the sides have been brought down by over 90%, in fact, zero duty access in so many other sectors as well, but what message does it really send out to the rest of the world? And has it been a great stabilizer, at least for Europe?
Thank you. Thank you for the invitation. On the FTA agreement between the European Union and India, it is not the most ambitious and the most comprehensive of free trade agreements concluded by the European Union recently. Yet, we call it groundbreaking, we call it watershed agreement, we call it game changer. Why? Very simple reason. In these turbulent times, we attach to it big importance. We believe that it can be the beginning of something good, a strategic partnership between India and the European Union, strategic partnership which would transform into a kind of Indo-European compact. Now, my 3 or 4, let's say 4 messages about this agreement to the local audience, to you, to our Indian friends, and our European friends who are still in this room. Message number 1, this agreement should be put on a fast track in terms of ratification and implementation. Waiting 1 or 1.5 years for the entry into force is definitely too much. But of course, some people say that EU fast track is an oxymoron. It takes time to do things in Brussels. But I believe, and that's also the view of Poland, we should do everything in our power to make the entry into force as speedy as possible. Message number 2, this agreement, in order to bring results, should be translated into bilateral relations between India and individual countries, because trade and investment comes through bilateral channels. And the first message was addressed to our EU officials, EU member states, the second one to India. European partners need strong signals from both sides that they are welcome here. I can develop on it more. The third message is that other aspects of our agenda should use this momentum to be upgraded, to be elevated. What comes in mind as a priority? Connectivity, IMEC. The Polish position, IMEC should be upgraded from the institutional and other aspects and extended to the north. And the fourth aspect, the one that you asked at the beginning, this partnership between India and the European Union should send strong signal to the outside world, to the rest of the world. Together, we are 25% of the world population. And when we talk about the crisis of institutions, UN, other institutions, we could use this agreement to work out something, a vision, a common vision, how to improve things in economy, in politics, and in other aspects of life. So these are my 4 messages using the FTA agreement as the starting point.
Right, and we do hope that, this is implemented as soon as possible, but before that it has to be ratified by the Parliament, the European Parliament, and that is something that we'll be waiting and of course watching out for. We do hope that it doesn't really take as much time, given the fact that negotiations between India and the EU have gone on for nearly over 2 decades. Ma'am, let me come to you on that point, since we're talking about tariffs, since we're talking about trade resilience by forging bilateral partnerships, and that's something that countries across the world are doing. The EU, in that sense as well, has been forging its own relationships. But when you talk about the US, when you bring US into the picture, it's been slapping tariffs on countries left, right, and center. And even though some countries may have deals with the United States, but is that some sort of a surety that any other kind of disruption is not going to come in from President Donald Trump? Because that is not something that we saw in case of Greenland.
Sorry, say that again.
Right. We did not really see that happen in case of Greenland, right? I mean, he's been trying to annex, and whosoever opposes his moves will be strapped with tariffs. So even if you strike deals with the US, can that be considered a surety that there won't be any disruption, at least from the side of the United States?
I think I would probably avoid commenting on Greenland or anything like that. What I can say, certainly, as a government minister, I would avoid that. What I can say certainly is that we should not look at bilaterals as being merely bilaterals. And let me give you a very concrete examples. Mauritius had trade agreements with the EU. We have very close relationship with the EU. And at some point, we have established textile industry, very, very powerful, strong textile industry. But who started that? It's the guys from Hong Kong. So to tell you that, even when you have bilateral, there are ways and means of bringing along other countries. And this is where I am coming back to the African and the Mauritian story, is that even when you have India and EU, or India and US trade agreements. In July this year, we are having the biggest US-Africa summit in Mauritius. We are bringing, 3,000 US investors who are going to be in Africa, coming to Mauritius. So there are ways and means of attracting investors who don't necessarily come from these two blocks, who
Right.
are from other blocks, and who can, so there's a way of incorporating them.
Right. Let me ask you a follow-up question on that. And how can Mauritius really help connect Indian businesses more effectively with African markets under the evolving trade frameworks?
See, one of the, Mauritius is part of African Union, as I said, and we are part of the African Free Continental Trade Agreement. That's 54 countries that have signed that, for free trade for goods and services. And using Mauritius as a platform, as a hub to enter, so let's say Indian companies wanting to invest in Africa or wanting to use that as a hub can easily set up base. And why you want to do that in Mauritius? Because of, having a trade agreement is one thing, access is one thing, but what is more important is trust. Can you have trust in setting up base in those countries? And Mauritius provides that trust in terms of long-term strategic, partnership, in terms of free democratic system, in terms of stability, in terms of political stability, and free, repatriation of capital, etc. And that's why we have, over the last 3 decades, been, for example, one of the largest FDI drivers to India.
Right, ma'am. So let me ask you a question about, sort of the kind of convergences that this trade agreement is going to create for Europe. What's your perspective on that, on the market opportunity, the market size, the market access that you're getting? And what do you hope to achieve 5 years down the line if this FTA gets implemented?
First of all, I wanted to say that the image of India in Europe, in particular in Poland, is very positive. India is seen as a land of opportunity. India is seen as a friendly and a priority partner. On my desk, I have letters from Polish companies ready to invest in India billions of euros. And we are not a big economy. We don't have big companies. But they see India as a very fertile ground for economic activities. And we invite Indian companies, particularly in Poland, because Poland is a good starting point, like Mauritius for Africa, Poland for the rest of Europe. And many Indian companies, big companies, are established in Poland in order to then use the springboard to work with Germany, France, and so on and so forth. But about the advantages of free trade and such agreements. 20 years ago, Poland, a mid-sized country, entered the European Union. European Union is a territory without borders, with totally free trade, free movement of goods, people, and everything. The first impact was whole branches of our industry went bankrupt. They were not competitive. Our unemployment rate was close to 20%. 20 years later, we are now the 20th largest economy of the world. We are $1 trillion economy. We call present time golden age of Poland. Without the European Union, without these opportunities, without these open borders, it wouldn't happen. Of course, I don't want to advocate that Poland can be a model for other countries, because, of course, we cannot be doctrinal. We cannot be scholastic about the advantages of free trade. We have to take into account different social and economic parameters. But nevertheless, why Poland is happy about this agreement with India? Because we see a lot of opportunities, and I like, in the context of other agreements, Mercosur in particular, if you know what I mean, this agreement poses no danger from the point of view of our business and also our politicians. That's why we encourage both sides, Brussels and Delhi, full speed, go ahead.
Absolutely, and that is something that we are also looking forward to. But Ambassador, let me ask you a follow-up question. In this era of fragmentation, what practical cooperation models should nations pursue? And 2 years down the line, given the kind of disruptions that we're seeing in trade, in supply chains, how will the world look?
Look, I'm not an economist, but my personal perception of the things is that we should not be pessimistic about the future of the world. I consider the current turbulences transitional. I believe that the world should be based on cooperation rather than rivalry. It is true that there are forces in the world who stick to the traditional concept of power. And here, in this room, one of the previous panels, it was all about power, obsession of power, that the only instrument to prosperity, security, and well-being is power. I don't believe in it. I understand that it's history behind it, our traditional mindsets, but I believe the world of the future is the world based on cooperation. I reject the concept that even in economy, like you say, supply chains and everything, no, it's a zero-sum game. The problem, as you know, that there are some very strong political actors who use economy to gain some political advantage. They weaponize economy, they weaponize trade, and so on and so forth. But I hope very much that if we take the EU-India deal as a good example, we can say there is an alternative. Let's work rather through this path, despite all the difficulties that we face now. So I'm an optimist, and I think that the summit should end up on an optimistic note, guys. By the way, before we conclude, if you want, I can sell you a spoiler. And I know the plot of the movie that Mr. Bachchan is doing now, The King.
All right, guys.
You know why?
We are talking backstage, sir, about that. All right. Thank you very much, Ambassador Piotr and Dr. Jyoti, for taking the time out and speaking to us here at the ET Now Global Business Summit. It's been an absolute honor to host you, to speak with you about the kind of changes that the world is going through, the kind of trends that we could be anticipating. Thank you very much.
So let me tell you
Yes.
what links Mr. Bachchan with me.
Tell.
King, the shooting of the movie started
That's
in
important.
Wrocław, Poland. Why? I suspect because the grandfather of your guest is a revered person in Poland. Not the father, but the grandfather. He was a famous poet.
Yes.
He has a statue in Wrocław, where they were shooting the movie, erected to his memory. Can you imagine how friendly Indians
Yes,
are received
absolutely,
in
and that
Poland?
really-
Shocking, huh?
Absolutely, that really talks about, how deep our ties are and, how far back they actually go, that you're talking of his grandfather.
Yes. So I know the plot of the movie because my dream was to play as an extra in one of the...
So are you getting to do that?
Okay. Sorry. I think that we should be serious.
Yeah, absolutely. But what a fun note to
Okay.
end this conversation, or Ambassador Piotr. Dr. Jyoti, thank you very much once again for being with us here at the Global Business Summit.
Thank you.
Ladies and gentlemen, with that we come to the close of the 10th edition of the ET Now Presents Global Business Summit. It's an absolute honor to host all of you, all the attendees who took the time out to be with us here and who were present here in all of these sessions. We hope you liked what we put out together. And from me and the entire team, thank you very much for being with us here. We value your incredible support, your constant support that you've been giving to us all of these past 10 years. From me and the entire team. In fact, Amita is also here. Amita, how was your session?
Oh, it was brilliant, and it's a must-watch. So if you do get the time, please do watch Rishabh Rikhiram Sharma. Well, it was amazing, and it was something that gave a perfect ending to the Global Business Summit. Ladies and gentlemen, it's been a pleasure having you all. Thank you very much. Until next time, we will be seeing you again. Thank you again very much for being a part of this prestigious summit. The Global Business Summit 2026 comes to an end. Good night, signing off.
Just a final word. We request you all to kindly share your feedback on the summit on our social media platforms. And thank you all. Until next time, goodbye and thank you very much for being with us.